Worth watching. The Financial Reporting Council is starting a probe into the audit of Entain by KPMG, so we'll watch that one, Guy.
Absolutely. Some single stocks maybe to focus on. Indexes, I think, are going to be reasonably quiet. We start Davos, we start the Trump administration today, and we've got a US holiday to all factor into our thinking. So I think maybe some cautious trade, but this maybe, as I suggest, the calm before the storm. It's going to get bumpy out there. How quickly that happens, well, we'll wait and watch exactly what gets announced early. The FTSE 100, absolutely flat as a pancake. Nothing to see here at an index level. So that story going nowhere. The Stock 600 going nowhere in a hurry. I'm struggling to find something to talk about here. I suspect it will come, but just not yet. So we're anticipating that we're going to see relatively low volumes today. The United States market is out. Asian markets, in some ways, you could argue, were responding to the news that we got Friday into the weekend. Nothing really new for Monday morning for Europe to latch onto. A little bit of outperformance coming through from the CAC Caron, but not much there to talk about. Anna, save me. Give me some news at a sector level, at a stock level.
I'm not sure I have much to save you with, Guy, unfortunately. But markets do look pretty divided when it comes to sectors. So just over half of them are going higher. So technology is the best performing sector. Banks also not doing too badly. Industrial goods and services on the rise. But none of that looks incredibly compelling. I mean, technology is up by 0.4%, so that's the best we can do in terms of the sector look. But that's interesting because that's actually being led by Prosus, which is, of course, a big holder of Tencent, and so that's a China theme. So we've seen the Asian market actually much more resilient, much more positive than we're seeing here in Europe. And so we do see some areas where that reads across, and that Prosus line is one of those. On the telecoms side of things, that's an area of weakness. Telefonica is down by 3.8%. You were talking about some of the action being taken there by the Spanish government, so that's worth watching as well. So there are some news lines that do seem to be playing out this morning. On the upside, to do with the positive view being taken, the glass half full view being taken by Asia markets, perhaps, and on the downside on telecoms.
Entain, I just want to double check that this is today's trade and make sure I've got this right and make sure we're looking at what is happening here. Maersk is down. So Entain's quite choppy. It's down by around 1.6% at the moment on the back of the audit news we've had coming through this morning. Maersk is a little bit softer as well. It's interesting to see some of the miners coming through a little bit softer too. There's some interesting commentary around what could happen in terms of the iron ore market and how oversupplied that could potentially end up being. I think there's a couple of XDs in the market as well that probably are worth ignoring. National Grid, Prosus, and BNP Paribas. An eclectic mix. Banks seem to be doing a little bit better this morning.
Let us get into our next conversation then, as we wait for the Trump administration to get underway, the executive orders to hit, the trade policy to be further set out. Peter Oppenheimer joins us, Chief Global Equity Strategist at Goldman Sachs, with us bright and early this morning, this Monday. Peter, thank you for joining us this inauguration day, this market holiday in the United States as well, crucially. So it seems that the Asian equity session, the Asian equity investor waking up glass half full this morning, saying Trump and Xi had a good call, great. Maybe we don't get hit initially with lots of negative trade news flow as a result of that. I mean, is that going to be clutching at straws? What can we be certain of on this inauguration day, do we think?
Well, thank you for having me. I think not a lot. We're waiting for news, and I think that investors are going to read in every little bit of nuance in terms of the choreography of conversations and how they go with other leaders and so on, and really wait until we get more concrete news on policy, on trade policy in particular, because that will have a very big impact, particularly on markets outside of the US. But I think context here is really important. The general setup is positive for equities. We've got continuing global growth, strong growth still in the US, that's been true for a long time, and rates are gradually coming down. That combination does tend to be pretty supportive.
Okay. Yeah, so far we've had a pretty positive take from the slopes of Davos this morning on what Trump means for the US economy. So that's, tick. That view of him being positive for US growth and positive for US stocks maybe remains intact this morning. But we've also had a cautionary tale being told to us from Nomura about the risks that rates could go 10-year yields to 6%, not their base case, but it's possible. How much of a risk does that pose to stocks in the US, do you think?
That is an important risk. And again, context here is important. The backdrop from a macro perspective is very good. But we have to take into account the fact that we've had a tremendously strong rise in equity markets now, really starting back in the fourth quarter of 2023, when investors really first started to latch on to the prospect of lower inflation and interest rates. And if you look at 2023 and 2024 together, both years in the US market were up roughly 25%. Among the best 2-year periods we've seen in the last 100 years. Alongside that, valuations have gone up. So a lot of good news is being priced in. That leaves equities more vulnerable to rising bond yields.
Is that what your clients think? You just had a big event in Asia. You've got one taking place in Europe this week. What are you hearing? What's the feedback?
Most people, I think, are generally positive because they can see that at least the US economy is continuing to grow, and others may be relatively stagnant, but not likely to move into recession. That's been our view for a long time. I think that's broadly now the consensus. There is a question mark over how quickly interest rates will come down, whether government deficits will force long-term rates higher. But broadly speaking, most of the people that we surveyed at our conference remain positive of equities, expecting returns of roughly 10%, and generally still very much focus on the same themes, with the US outperforming and tech being the main driver.
So is there any point diversifying?
I think there's a strong reason to diversify precisely for that reason. We, in our view, believe that because equities have gone up so much, they're pretty fully valued. That means we're likely to see less valuation expansion as a driver for index returns this year. And therefore, we're likely to see a better payoff for being more diversified.
What is the diversifier at this point? What is the best diversifier that you can see? Because diversification has meant underperformance.
It has.
Is that going to continue?
Well, I think there's two ways of looking at this. In an asset allocation context, we actually think being overweight of equities and bonds are a good way of diversifying some of the risks that we're seeing, and that's a position that we're taking. We're underweight of credit, for example. Within equities, we think that you can diversify by broadening out exposure in the US, away from the focus on the Magnificent Seven, although they're still likely to achieve good returns. We think the risks are going up, so we're looking at things like the equally weighted S&P or the mid-cap index there. We're looking at quality growth compounders outside of the tech sector. Some have derated a lot and are looking cheap and a good diversifier. And I think there are some opportunities geographically as well. You mentioned earlier that things like European banks are doing well, together with US tech. That combination, which we saw happening last year, is pretty unusual in the context of the last decade, but it's a reflection of some of the ways in which diversification are actually beginning to pay off. And we think we're going to get a bigger return from alpha relative to beta this year.
And Peter, when it comes to diversification geographically, looking at Europe, are the granolas in focus for you? And are you assuming that they are protected from tariff threats to some degree?
Yeah, I think that we like geographical diversification. I should say that Europe is the region where we have the lowest profit growth forecasts, but we think pockets of it are very cheap. You mentioned the granolas. They've been the dominant companies that we've been focusing on in the last sort of 3 or 4 years, generally have become increasingly significant as a driver of returns in Europe. They account for about 25% of the market cap. But interestingly, a number of them had difficult quarters last year and derated a lot. And that had a negative effect on the index. It's a bit of a warning sign in the sense of what could happen in the US. But some of these are now beginning to see better returns, and we've seen better results in luxury, for example. That's pushed up the value of these good quality companies again. We think there's really exciting opportunities there.
Okay, so you might hope that that continues with the granolas and that they are maybe resilient, or at least not in the crosshairs when it comes to tariffs. What about growth out of China? Because some of them, talking of luxury, for example, have relied on that positivity out of China, and that domestic Chinese growth story just has been sluggish to materialise.
It has, and you know, again, these kinds of stocks that are very sensitive to China growth are very volatile around any news of changes in policy in China. We think there will be an easing there. That should be supportive tactically. But I think structurally, exposure to China is still going to be a headwind for European companies. And interestingly, if we look at our baskets of companies in Europe that have the highest exposure to China compared to the ones that have the highest exposure to the US, there has, of course, been a huge divergence. Those US-exposed companies have done much better. We would expect that to continue. And bear in mind that many of them also have production bases and costs in the US and therefore are less vulnerable to tariffs.
Davos kicks off this week. Traditionally a hotbed of deal-making and M&A exploration, you could argue. Is there an M&A play this year? Does Trump bring more M&A? Is that something that I think need to think about as an equity market theme?
I think absolutely. Look, M&A is a function of a number of factors. Of course, principally among those is animal spirits and the optimism around things like deregulation, but also interest rates and the cost of capital easing after 2 or 3 years of significant increases, as well as in some cases a bit more of a tolerant view of consolidation that we're seeing in places around Europe, for example, I think will push up M&A quite a lot. We're also seeing much more build up in IPOs, I think, and also activity from private equity who are sitting on assets that they may want to sell. So I think there's going to be a big increase in financial asset activity in general, so which would be good for banks.
Big pickup in capital market activity. Is that something that happens in the United States purely? Is that something that translates across the Atlantic? Some would argue that the FTSE 100 and FTSE 250 are littered with potential stocks that could be taken out. Is there an international aspect to this, or is this a primarily US issue as we see deregulation, though I would argue maybe the Starmer administration is talking about it here as well?
Yes, exactly. And these things actually tend to move in cycles globally. It may be driven by US and US animal spirits coming back more quickly, but I think it will dissipate and across the regions, and others will participate. And there is a global element to this. The dollar is extremely strong, has continued to rise, and that makes European assets, UK assets, some of which are very cheap, more interesting for US dollar-based acquirers. So I think that will be part of the process as well.
Peter, thinking about so we might see M&A. That's the thing we can focus on. Thinking about the granolas, as we were a moment ago, there's quite a few drugs names in there from the healthcare sector and drug companies specifically. Are you concerned about pricing over in the United States with the makeup of the new US administration coming in? We've already seen, I think it was Friday, we saw some jitters around some of the big names in Europe in that sector because of fears about pricing.
Yeah, well, I think those pressures can work both ways. Generally speaking, healthcare does tend to be a relatively weak sector into a US election cycle because it's a very politically sensitive industry. I think we'll get more clarity along the lines of many of the other issues that we've been talking about today, and that should be helpful. But I think that there's, the healthcare sector is cheap. Generally, these companies have got strong balance sheets, stable cash flows. And also, I think one of the interesting angles about healthcare is it's likely to be one of the biggest beneficiaries of AI, improving drug discovery, reducing the cost of innovation. And, of course, AI has been a central focus of markets in the last year or so, but mainly on the companies doing the capex investment. I think we will start to see more focus on some of the companies that can be beneficiaries, and I think healthcare is one of them.
Peter, great to see you. Thanks very much for stopping by to see us. Peter Oppenheimer, Chief Global Equity Strategist at Goldman Sachs. Thank you. Peter's got his granolas. We've got our Core 6. Let's show you what is happening with the Core 6 this morning. Centre of gravity here in Europe looks like this. As you can see, some green on the screen. Some decent gains being certainly posted. The luxury sector continues to come back. Ferrari, I would argue, should be in the red, but actually is in the grey right now. ASML is higher. Schneider's a little bit higher as well. Even Nestle posting some gains this morning. It'll be interesting to see how the car sector trades this year. Ferrari's a bit different, and I joke about it being in red. But what else we got coming up?
So that's the picture across the core six then, Guy. European equity markets flat to positive, increasingly a little more positive as we go through the session, particularly coming out of Paris. Coming up on the programme, we take a look at the crypto market after Bitcoin hit a record, and meme coins from Donald and Melania Trump have been launched. That over the weekend on the cusp of the inauguration, of course. Are they something that benefits Bitcoin, distracts from Bitcoin? Lots to talk about there. That's coming up next. This is Bloomberg.
Welcome to the world of decentralized finance.
You can see the massive gains for the OG crypto coin.
The breakout we have all perhaps long awaited finally realized. We'll see if it sticks.
Bloomberg's covering all things crypto, the people.
There's no question this industry is composed of some bad actors and some good actors.
The transactions.
Volumes have surpassed $24 billion per day.
And the technology.
Stop talking about the technology, start demonstrating the utility.
Bloomberg Crypto, Tuesdays.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Rio de Janeiro, Brazil, and this is Bloomberg.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern every weekday morning at 6 a.m. Eastern, only on Bloomberg.
January 20th. Live from the Alpine Mountains of Switzerland, it's the World Economic Forum annual meeting in Davos. Bloomberg Television brings you unmatched coverage and conversations with world leaders, business executives, and billionaires as they navigate the AI age, energy transition, and geopolitical tensions. Tune in for daily coverage starting January 20th, only on Bloomberg. Context changes everything. Bloomberg brings you breaking news 24 hours a day, powered by 2,900 journalists and analysts in more than 150 offices across the globe. Bloomberg Television. Context changes everything.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, Mondays on Bloomberg.
"17 minutes into the session, let's take a look at where we are with equities here in Europe. A little bit more green on the screen, you could maybe argue. As you can see, we are at least up, but I suspect with the US out, we are going to spend most of the day sitting on our hands, waiting for the inauguration, waiting for news to come through of exactly what Trump is going to deliver on day one. Day two. Let's talk about some of the individual stocks that are certainly on the move here in Europe. Telefonica is one out of Spain before leaving for Davos. The Prime Minister, Pedro Sanchez, certainly has made some moves that have been causing considerable controversy. One of those certainly surrounds what is happening with Telefonica. Over the weekend, we saw Jose Maria Alvarez-Palet, the executive chair, CEO, being ousted from this business. This felt certainly the read-ups that I've been reading suggest that maybe there was some politics attached to this, and it's interesting to see the market reaction. We'll wait and see whether or not there's a change of strategy. What does this mean in terms of the way that this business is going to progress from here? Certainly the spotlight on Telefonica this morning, and the stock in that spotlight down by 2.2%, Anna.
Let's talk about the banking sector. And actually, we're seeing the banking sector making pretty modest gains today. So Commerzbank is in good company, but it is making gains more strongly than the wider sector. So the sector up by 0.4% or so. Commerzbank up by 1.7%. And this on the back of an FT report that talks about the strategy revamp featuring job cuts. Could there be job cuts at Commerzbank? Could we see thousands of them? And could there also be moves to take some of the jobs out of Germany and put them in cheaper locations? February 13th is the date we get a strategy update coming through from Commerzbank. So we'll certainly look for an update ahead of that then, Guy, at that to see whether this is going to be sufficient, if this is going to be the type of news flow we get to fend off that approach from UniCredit.
Let's talk about what is happening in the shipping sector this morning. We see interesting moves being made around Maersk. The stock was down a little bit more. It's only down now by 0.2%. A downgrade coming through from Jefferies. The price target there, though, still 11,500. As you can see, we are trading sub that, so it's interesting to see just in terms of the numbers what we're looking at there. There is also the wider picture of what is happening in Gaza and whether or not this translates into an elongated period in which we're going to see the Houthis not attacking shipping in the Red Sea. When do we start to see maybe shipping returning to that key route? That should, in theory, lower shipping rates, which in theory should be bad for AP Møller-Mærsk and its peers.
Yes, we had seen it, the share price on the rise as a result of those higher shipping rates as they took the long route round Africa. Let's talk about what's going on with Entain. This is a gaming company in the old school sense of the word, so a gambling and sports betting business, owned brands like Coral, Ladbrokes, Party Poker, Sporting Bet. And this business is in the crosshairs when it comes to regulation. The FRC in the UK, the regulator around audits, they are taking a look, starting a probe into the audit of Entain. That was conducted by KPMG, so we'll see if that one has an impact. Down by 0.9% right now for that share price. Off earlier lows, was down a little bit more than this earlier on.
European stocks just beginning to soften up a little bit, so we're off our early highs, but there's not a lot of volume, and there's not very many big moves out there for us to pay attention to. What there are some Trump stories. Trump having a huge impact in a number of different areas, and certainly one of those relates to TikTok. The incoming president has promised to sign an executive order delaying the enforcement of a ban on TikTok in the United States. The president-elect was speaking at a rally in Washington, D.C. ahead of his inauguration.
If you don't approve, they're out of business, they're worth nothing. If you do approve, they're worth like $1 trillion. They're worth some crazy number. So I said, I'll approve, but let the United States of America own 50% of TikTok.
How does it work? What authority does he have? What legal backing do these moves potentially pose to some of the operators in the United States that support TikTok? There's so many questions around this story. Let's try and get some answers. Tammy Basin, technology analyst at Bloomberg Intelligence, joins us now. So where are we? We went dark. We've come back. But the app is not supported. So where do we go? Where do we go next?
It's a great question, and it's a quickly evolving story, as we've seen with President-elect Donald Trump's statements yesterday. He plans to sign an executive order potentially today that would basically tell his Justice Department not to enforce this law, which is still in effect and which still does pose serious liability for the companies who TikTok works with. So Apple, Google, Oracle as a hosting platform. So right now we're in the status where it's still illegal, but TikTok has made the decision to come back on. But like, as you mentioned, it is not supported in the U.S. right now.
So Trump has promised an executive order then that will save TikTok in the United States. How is that going to work? Because I understand in order to do that, he has to prove that a deal is fairly imminent. Is that the crucial factor?
That would be. So I think the executive order is what he's choosing to do instead of that alternative scenario. And the alternative scenario is in the bill itself, it says you can have a 90-day extension, but there has to be a legal document that is signed saying that you have moved far along in a divestment. I don't believe that we're anywhere near that status, so I think what he's choosing to do instead, potentially, is signing an executive order, which would be trying to buy that time and also telling his Justice Department not to enforce the law. However, it would still be in effect.
So I'm a lawyer, I'm in-house counsel at Apple, Google, Oracle. What am I thinking?
That's sort of the $850 billion question, because the amount of liability that could attach if you're violating this law is enormous. So you have to have, I think, a lot of confidence that Trump's Justice Department, and maybe 5 years down the line, the Justice Department at that stage is not going to enforce this law, because there's a 5-year statute of limitations. So I think you have to be fairly uneasy right there.
Just very quickly, the critical thing about the App Store stuff is that it's not supported. So it's not available, but the critical thing as well is that it means you don't get updates and you don't get security fixes and all those things that are so critical to the kind of the operation of this app are sort of come through the App Store.
That's absolutely true. So we might be in a stat right now where it just sort of slowly deteriorates unless there's more support for that app.
Tamlin, thank you very much. Bloomberg Intelligence technology analyst Tamlin Basin with the latest on that tech story, part of the geopolitics narrative as well, though. Let's focus in on Bitcoin. We've seen plenty of volatility there. Bitcoin hits a record ahead of the US presidential inauguration after both Donald and Melania Trump, they debuted their meme coins over the weekend. That was described then as a bit of a distraction from Bitcoin, but Bitcoin this morning seems to have benefited somehow from this news flow. Let's unpack all this. We're joined by Valerie Teitel, who's been poring over the details. Val, a big move in Bitcoin then, in contrast to all the notes I wrote pre-show, which were telling me that this was going to put Bitcoin under pressure. What's going on?
The narrative that perhaps this launch of these political meme coins will sap flows from Bitcoin is showing us that is really not the case this morning. If anything, it's just accelerated the momentum and the excitement around cryptocurrency under another Trump administration. But that Trump coin this weekend caught many's attention. It hit a $15 billion market cap over the weekend, which puts it at the top 20 coins out there. And Binance and Coinbase both said they intend to list the coin on their platform. And that big worry that perhaps it would rattle the broader Bitcoin price really not becoming to fruition this morning. We hit a new record high just an hour ago, 109K, a fresh record on the eve of Donald Trump's inauguration.
So the two key words for the next few days are executive and orders, or order. What is it going to mean for the crypto world?
It could mean a lot. We could see some substantial executive orders. There was many that were talked about before, whether it would designate crypto a national priority, somehow create a Bitcoin stockpile. You know, the U.S. government does sit on Bitcoin that has been seized with justice moves, or possibly create a crypto advisory council. So we could see some momentum in cryptocurrency only be added to today if we do see a raft of executive orders of focus on the crypto industry. Again, just when do we get a glimpse of these executive orders? I think many over the weekend thought we'd get some leaks over some of them. We have not really seen very much. And in his rally yesterday, he said he was going to be detailing them in his inauguration speech. Now, detailing 100 executive orders might take him a while.
I was about to say, he could be there for a while. He's talked about 100, so
he has previous on some fairly long speeches.
He spoke for an hour over the weekend.
Yeah, and that was just the warm-up act.
This was the kind of the pre-party. Valerie, great stuff. Thank you very much indeed. As we've already indicated, we're going to have some great coverage coming up from DC a little bit later on, and we'll be talking about the inauguration in a great deal of detail. It is indoors. It's a bit chilly, we understand, in DC. But what can we expect from Donald Trump's next few days? What are we going to be learning? What is the White House going to deliver? Is it all going to be domestic? What's the tariff story? I think a lot of people are going to be waiting on that. Anyway, we've got some great coverage coming up. That is a live picture coming to you from Washington, D.C. The inauguration is the big event of the day, and we will be discussing it next. This is Bloomberg.
The top names in business are on Bloomberg.
We are in the midst of the largest wealth transfer in history right at this very moment.
So $100 trillion of wealth is going to next-gen and millennial clients over the next decade. So that has some pretty significant implications. But in addition to that, women are controlling more and more global wealth. Today, they control a third of global wealth, but in the next 5 years, $30 trillion is going to pass in the hands of women, and they're going to control over 50% of the global wealth market out there today. Women care deeply about investing with purpose, investing to make an impact, doing good with their investment. So you're going to see some significant opportunities for us as we lean in and have been leaning in to capturing more of the female wallet globally.
Nobody covers business like Bloomberg. Context changes everything. Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg is covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and an ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, Tuesdays only on Bloomberg. Earnings season is here.
The earnings palooza right here.
They're going to come in hot and heavy.
Bloomberg is first to break the numbers.
Microsoft earnings now crossing the wire.
Lam Research in the semiconductor space. AMD, Alphabet, we've got a lot to digest today.
With the smartest insights.
If the economy's strong, shouldn't that be good for earnings?
Consensus estimates are around 12% growth for the quarter.
Stick with us, a lot more coverage of all those earnings.
Continuing coverage on Bloomberg.
What happened was you were up.
This is the opening trade. Welcome back to the program, everybody. 30 minutes into today's session, not moving anywhere in a hurry, it seems, on European stocks. This feels like a pre-Davos, importantly pre-Trump kind of a session this morning here for Europe. And the US President-elect Donald Trump has celebrated his impending return to the White House with a rally in Washington. So this is even ahead of the inauguration, staging a rally in Washington. He told supporters over the weekend he plans to sign dozens of executive orders in the hours after taking office.
I'm thrilled to be back with so many friends, supporters, and true American patriots on the eve of taking back our country. That's what we're going to do, take back our country.
Joining us now, Bloomberg's Jill Desis, who has analysis of what we can expect. So there are a couple of sectors that are really sort of playing high in our minds. One is crypto, the other is energy. We're, of course, focused on tariffs. Jill, Trump has pledged a flurry then of executive orders. So what are we expecting on day one?
That's right, Anna. So the first thing, I really want to key in on the energy sector that you just mentioned there. People familiar have actually told us that one of the things that Trump plans on doing is actually declaring using some emergency powers to sort of get some of his initiatives related to the energy sector through. Now, exactly what that means and ultimately what Trump can do is still incredibly vague right now. But, this is obviously sort of hearkening back to some of his campaign promises about trying to boost domestic energy production. When it comes to what Trump, as president, through an executive order or some sort of emergency declaration, can actually enable there, it's somewhat limited. There's maybe some things that he can do with crude transport, maybe some things when it comes to the energy grid, but a lot of that does come down to sort of like what private enterprise actually wants to handle. Aside from that, what we've really kind of, gotten the suggestion from Trump himself is really that tariffs and border control are maybe going to come into the equation here. But I think at this point, Anna, it still is somewhat unclear, and I think what we can all just kind of brace for is this idea of a flurry of executive orders that, we kind of want to see and interpret how much of that is just immediate action versus how much of that is kind of, elsewhere kind of remains to be seen.
Jill, do we have any sense of the kind of choreography here? Is it going to be domestic first, then international? Is that the way we should be thinking about it? Or do we get sort of all 100 on day one and we spend the next few days trying to pick through the details?
I mean, honestly, as I recall from covering the first Trump administration, a lot of the time you would just wake up in the morning and then you would see a tweet, and then it would be about, whatever was on Trump's mind that day. And so it can kind of feel a bit chaotic there. This time around, it does seem like, the Trump administration incoming does have a plan as to what they want to focus on, as to whether that's domestic or international. A lot of it kind of seems a bit focused on a lot, right? I mean, obviously, from the tariff perspective, you do have this idea that Trump does want to go a lot harder on introducing new levies, whether that be honestly to adversaries or in some cases, as we've seen with Canada and Mexico, sometimes allies. But in addition to that, obviously, some of those issues with regard to domestic, security, border control, that kind of thing, are also front of mind. So again, I think we're just going to have to kind of wait and see what happens. And it really is, again, he's really promising that from day one, inauguration day, he really does want to implement a lot of these types of policies.
Jill, thanks for the update. Thanks for the preview. Jill Desis joining us ahead of the inauguration a little bit later on. Apparently, we're going to get all of these executive orders detailed. So, in theory, we should have some details to work with for the rest of the week. What will those details mean to Rebecca Harding, independent trade economist and senior fellow at the British Foreign Policy Group? Well, let's find out. She joins us around the table. We're all on tenterhooks. We're waiting to find out exactly what we are going to learn, what the Trump administration wants to do, what he wants to do. But everybody's kind of prepared. So what does this week look like? Is it we get the tariffs, then we get the response, then we get kind of a countervailing sort of response from the US as well? How does this work? How does this week work?
So I think what we're going to see is a bunch of statements about intent, particularly in terms of foreign policy, particularly in terms of tariff policy. There will be a lot that he says that's interesting but not detailed. Right. It feels a little bit like Back to the Future in terms of the slightly chaotic air that's around everything. So we will see things that aren't particularly baked in and aren't particularly certain. So we're going to be dealing with a week of uncertainty. That said, it will be a very clear direction of travel. So we'll know exactly what he wants to do, I think, on tariff intent. So he will lay down the foundations for how he wants to use tariffs coercively in the future. So
if you're sitting in Beijing, if you're sitting in Brussels, what do you do? Do you wait? Do you respond instantly? What's the playbook?
If you're sitting in Beijing, you've been preparing for this for the last 4 years. Let's be clear on that. So you've been preparing for the entire time that Biden was in administration. You've been preparing for what might happen if Trump gets re-elected. So the Chinese will already have a plan. And don't forget, President Xi is in a much stronger place domestically in terms of his own political situation than he was at the beginning of the last Trump administration. They know each other quite well, these guys, so he will be prepared. The European Union, Ursula von der Leyen and Christine Lagarde have already said that they think that they're going to play along for a little while and see what happens. The biggest thing is whether or not tariffs are going to be used coercively to get more spending on things like defence across the European Union, because that is, and NATO obviously as well, because that's a really important thing.
Yes, so from a European perspective then, from what you're saying, it sounds a little as if they will appease Trump, go along with what Trump is saying and say, sure, yeah, we'll do the things you're asking us to do, at least some of them, to try and prevent you putting on tariffs. Is that going to be the broad approach?
So I think what the likely scenario is that Trump will lay down a set of tariffs over, and it may not be this week, it may be over a period of time. Most of his advisors are saying they want it to be over a period of time, gradual approach. But what they will be doing is saying, we will buy American products. I mean, if we're going to have to increase our level of defence spending, for example, to 5% in order to avoid tariffs, we are going to have to buy American defence products. So there are a lot of things that the Europeans can do to say, yes, we'll buy more cars, we'll buy more agriculture, we'll buy more defence equipment, more electronics, more semiconductors. Those things are happening already. So I think they will appease to some extent, but there is also a very strong sense in Europe that Europe needs to become self-sufficient.
Yes, and that's interesting because some of the line items you're detailing there, they are bought by governments. So defence products are procured largely by governments. But some of the other things you listed are not procured by governments. They're bought by other companies. So how will this be sort of dictated to European business that you must now go to the United States and purchase these things instead of buying them from the home market?
So they will go to wherever it's competitive to buy.
Yeah.
And we've already seen a lot of measures. Now, what's interesting here is that the Biden administration was actually quite aggressive on trade as well. Aggressive in a different way. So you had industrial policy as the main thing. He didn't undo any of the tariffs that President Trump implemented in his first term. So actually, Europe is quite used to this pivot on things like industrial strategy, the Inflation Reduction Act and so on, to working more with American businesses. Now, the interesting thing here is that Europe is beginning to think about its own internal supply chains as well. So European companies, particularly in defence and security, electronics, critical minerals, are beginning to think more about how to resource those from within Europe as well, because of the cost considerations.
Are more Chinese goods going to end up in Europe as a result of Trump tariffs?
Very interesting question. I think the relationship between China and Europe is going to take a while to settle down post-Trump. It's become very fraught anyway. European businesses and governments are very aware of the fact that there is a perceived threat from China in terms of lower cost, in terms of domestic security, influence, and so on. So Europe is treading cautiously. And of course, there's electronic vehicles where Europe is trying very hard to promote its own interests. So I think the jury's out. But I think inevitably China will be looking to grow its partnerships with Europe as much as possible.
Is that going to be difficult given the fact that it feels like the Trump administration is going to want countries to pick sides?
I think the picking sides element of all of this is the most interesting thing from a political and an economic point of view. And what we're beginning to see, if you look at the global payment system, if you look at cross-border payments, we're beginning to see a Chinese system through there that's an alternative to SWIFT. You've got the SWIFT system, you've got more renminbi-based trade going on. It's interesting. You are beginning to see this sort of bifurcation, if you like, of the international economy, and that was very evident at the BRICS summit last year as well. So what we've got is a situation where there is a risk that the world separates out. America's not going to discourage that. It will want the Europeans to pick sides. Europeans have to think about how they become more resilient themselves, and resilience is the important word there, I think.
Yeah, Rebecca, what kind of, when we look at the data, we can hear the political rhetoric, some of that gets turned into policy, and then some of that shows up in the data later on. How long will it take us to see evidence of Trump's second administration in the data? How quickly do you think we're going to see changes in trade flows manifest themselves?
We're already seeing changes in trade flows. So if you look at the end of last year, we always see a spike ahead of the Chinese New Year in terms of international trade, particularly exports. China has already been moving its trade around, and it's already been increasing the amount of South-South trade. So there was a forecast that came out the other day that said $1.2 trillion extra dollars in South-South trade is going to start happening. China's already been reconfiguring its supply chains to that effect. So we're already seeing a shift. Now, the interesting thing is, will it overall affect the levels of global trade? And what's been interesting over the last 4 or 5 years is that volumes of trade have actually stayed remarkably similar. Values have changed, but the volumes of trade have actually stayed remarkably similar. So we're almost at peak trade, if you like. We're not going up by that much. It's 1-2% a year. It's been relatively low. So some of that is to do with the Chinese economy and the problems that it's got. Some of it is to do with the Russia-Ukraine crisis. Trade's been shifting around. The world of trade has actually been very difficult over the last 5 to 7 years. Really has. So what we're seeing now almost is an endpoint.
Yes, it's quite interesting, wasn't it, that we didn't see a wholesale about-face from President Biden when he came in on many of the policies that President Trump brought in his first term. Thank you very much, Rebecca. Thanks for joining us. Good to speak to you. Rebecca Harding, independent trade economist and senior fellow at the British Foreign Policy Group. We will have special coverage, whatever is coming our way on the trade front. Will it be in these executive orders? Will it feature in the inauguration speech itself? We will bring you special coverage of that inauguration of the US President-elect Donald Trump. That's from 4 p.m. UK time, 11 a.m. if you are in Washington. Coming up on the programme, we head to Davos to hear from the Austrian oil and gas company OMV. We're expecting to hear quite a bit about the energy sector in those executive orders and possibly during the inauguration. The CEO of OMV, Alfred Stern, joins the team on the slopes in Davos. This is Bloomberg.
I prided myself, probably wrongly, having worked in many countries, been brought up as a child in the Middle East and in the Far East, having a mother who was not British, she was Hungarian, she was a survivor from Auschwitz, and I was the son of a Holocaust survivor, and being involved with lots of people, I thought to myself, I know a lot about diversity. And I know about inclusion and not being included. But actually, when I came out, I realized that my level of understanding was not very high. And actually, I could see both the support and the rejection of being different, and what you had to do to live a life where you were different. And I'm immensely pleased that I was outed when I was 60, just under 60. Because had I not been outed, I probably would have said I could stay in the closet and still believe that I knew everything, which I didn't. And that was a very important moment for me.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield every Friday at 12 p.m. Eastern, right here on Bloomberg. Context changes everything.
Welcome back to the opening trade. We're focused on US politics. We're also focused on the Swiss town of Davos for this year's World Economic Forum, of course, today. Bloomberg's Jumana Besetcha is there in Davos for us, and she's joined by another guest. Jumana.
Thanks, Anna. Yeah, sitting with me right now is Alfred Stern, the CEO of OMV. Great to have you with us. Look, I'm just going to start asking you about the outlook for European gas prices, because they have been on the up recently due to supply disruptions, due to cold weather. How do you see the outlook for gas prices in the coming months?
Yeah, great to be here with you. Looking at the gas prices, as always, they are, of course, dependent on multiple things. What is the weather going to be like, but also what the economy will be looking like throughout the year. What we did see, and that is clear already today, is we saw increasing prices because of the cold weather, and we saw depletion of the gas storages across Europe.
Yeah.
And that will have an effect because these storages will have to be refilled again, and that we will see. Hopefully the economy will be a bit stronger and we see increasing demand as well.
Yeah, I see inventories are sitting at around 75%, the fastest depletion since 2021. How quickly can the inventories be built up again over the course of the summer? And should we be worried about next winter?
Yeah, I think this is a normal process, and this winter is colder than the 2 winters before, and that is the reason for the faster depletion that we see. The gas industry is used to be able to refill those storages during the summer, and this is actually how this supply chain works.
So not really worried about next winter then?
That's correct,
yeah.
Right? I think there's enough capacities. It will depend a bit on the demand side, but there is enough supplies.
Yeah. Well, today's a big day in the U.S., the inauguration of Trump returning back to office. But obviously, energy is a big focus for this incoming administration. They've talked about drill, baby, drill. They've got big ambitions on both oil and the gas front. What sort of ramifications are you expecting for U.S.'s gas ambitions to have on European gas?
Yeah, I think energy is the lifeblood of our economy and of the life that we are leading. And the prices of energy depend on supply and demand. So increasing supplies is useful in order to drive growth, in order to drive economy forward. So creating an environment, regulatory and fiscal conditions that allow investment in all kinds of energy is very important to drive the economy forward.
Is Europe allowing for that to happen?
I think this is something where we see the gas prices, but the energy prices in particular in Europe being higher compared to the US, for example. And the reason for it is very strict regulatory conditions and not enough incentives to invest here. So increasing supplies is what needs to happen.
Yeah, and sure, many European countries are going to be keeping a close eye on what the US's policies are in the coming future. I want to turn back also to just recent developments. You've stopped receiving natural gas from Russia via Gazprom for the first time in more than 50 years and currently involved in a litigation process with them. Just give us some color on, one, how successful you expect this process to be, and number two, how long you think it's going to take.
Yeah, so actually we are opening a new chapter in OMV. Since more than 60 years, it's the first time that we do not have supplies from Gazprom since beginning of last December. But we have a better gas supply situation now than we ever had before because we have diversified our supply sources. We have looked at own production, we have looked at long-term LNG contracts, other pipeline contracts. And with this, we have a stronger supply situation than ever before, which is allowing us to supply all our customers. Now, the arbitration that we had with Gazprom is actually finalized for our German Gazprom contract. And we were actually awarded damages of over 230 million. We were able, through this award, to actually set that off against our open gas bill. And that means we were able to actually keep that money. And as a result of this, Gazprom stopped supplying us in Austria, and we've terminated the contract.
Yeah. What if there's a ceasefire between Russia and Ukraine this year? Would you have to rethink that decision?
Yeah, so this was really a commercial and a legal decision because Gazprom multiple times violated the contract, and that's why we needed to take those steps. But in Europe, there's no sanctions on Russian gas, there's no law against Russian gas, and we will see what happens. But what we did see over the last 3 years, that Gazprom has become an unreliable supplier, and that is one of the issues. So if we want security of supply, we need to diversify our gas sources and also increase production in Europe wherever we can.
Let's turn to OMV. There's ongoing discussions about the petrochemicals merger of Borealis and Borouge with ADNOC. How are those discussions going? It's been a while since we got an update.
Yeah, that's right. So what we have announced is that we are in negotiations with ADNOC for a potential merger of Borealis and Borouge, because that would create a global polyolefins player of bigger dimensions. And with this, this would be an acceleration of our strategy. We are in ongoing and open-ended negotiations with them. And while we are doing that, we are executing on the strategy that is also a strategy that we can execute as is.
Are you confident that some of the issues being discussed are going to be ironed out in the near future?
That's always difficult to predict in ongoing negotiations, but of course that's what we are working towards and hoping for.
Yeah. Okay, sir, that's a good place to leave it. Thank you so much for speaking to us. On the sidelines of Davos, that was Alfred Stern, CEO of OMV.
Jemana, thank you very much. Bloomberg's Jemana Besetcha joining us there from the World Economic Forum in Davos.
Let's turn back to what is happening in the Middle East. The long-awaited, long-delayed Gaza ceasefire has now begun. This, of course, after 15 months of war. The first phase of the 6-week truce deal aims to release 33 Israeli hostages and hundreds of Palestinians. Let's get the latest on how this is going to work out over the next few days. Ollie Crook joins us now near the Kerem Shalom border crossing.
Yeah, so listen, Guy, I mean, this is the first, we're almost now at 24 hours of ceasefire, and everything seems to have held. There were a lot of bumps along the way since it was announced on Wednesday evening. A lot of reticence, a lot of optimism, but also really, really very guarded optimism. You got the release of the first 3 hostages yesterday into Israel, 3 female hostages, 90 Palestinian prisoners also released back to that region. And really now today what we're focusing on is we've been watching aid trucks cross into the border at the southern point here of Gaza, right near the Egyptian border. Many of these aid trucks, some of them are coming from Israel, some of them are actually coming from the Egyptian border, crossing into Israel and getting into Gaza. And to give you a little bit of size and scope here, when I spoke to the border crossing, the manager of the border crossing, he says that there's going to be 800 trucks that will be crossing today into Gaza. That goes from basically the average of what we've been getting for the month of January, according to aid organizations I spoke to, of about 50 trucks a day. So that is a massive increase. About 600 of them will be at the border crossing at Kerem Shalom. And really, this is the number that they would like to have be the sort of standard going forward. Before the war, you were getting about 500 trucks a day. That is what they'd like to have the daily average for an area that is really in dire need of, yes, humanitarian aid, but also those commercial supplies like gas.
Yeah, so we'll watch to see whether those aid trucks do get through then, Ollie, and lots of anticipation that we see more volume going through. Phase 1 of this ceasefire then is underway. How likely is it, though, that we get to the next phase? There are a number of phase events that need to take place.
Yes, so Anna, theoretically, according to the architects of this plan, according to the Qataris, the Egyptians, the Americans, they really would like this to be the first of 3 parts that will ultimately end in the full end of the war between Hamas and Israel. Whether or not that will happen is a very sort of complicated process that will be governed by a few things. So we're not fully done with phase 1 yet. The hostage release basically will happen every 4 days or so. There will be 3 or 4 hostages released. In exchange, there will be Palestinian prisoners also released. That'll be about 2,000 Palestinian prisoners and about 33 of the hostages of the Israelis being held, not all of whom are alive. But really the big step comes to that phase 2, because that phase 2 is the withdrawal of Israeli troops from Gaza. This is something that, as you can imagine, the Israelis will be very, very reticent to do unless they have all of the guarantees in place that the security situation in Gaza is under control. The question is, who is going to take responsibility for that? Will it be a third-party moderator? No one has stepped forward, and so it's very hard to see what is going to happen then. If after the 6 weeks they still haven't found an agreement, theoretically you can continue that ceasefire, but this is going to be really the sticky question. And for Benjamin Netanyahu, this is a very sort of difficult balancing act from the far-right coalition that he's been with. One of the ministers stepped aside on Sunday saying that basically this is a bad deal and left the government, leaving Netanyahu with only 2-seat majority. So this is a lot of tension going into this. And of course, a lot of this will be governed by the next president of the United States, who will be inaugurated in just a few hours.
Oliver Crook in Israel, thank you very much indeed.
Let's focus in on some of the other events we're going to be watching for this week then, Guy. Of course, let's say it again, that US stocks and bonds, those markets are closed today. It's a public holiday over in the US. We do have the Trump inauguration, lots of coverage. We have the World Economic Forum in Davos. Will that cut through? Will the Trump inauguration themes and all of the many executive orders coming through from that, will they be the main event of the week? Then later on in the week, though, Guy, we get a BOJ rate decision, expecting a rate hike there, and lots of global PMIs. So there are the sort of more traditional data points and monetary policy focuses for markets.
We're going to get some labour market data out of the UK as well tomorrow, which I think is going to be really critical. A softening in the UK labour market may encourage the Bank of England maybe to be a little bit more aggressive when it comes to the rate cut story. Are we going to get that cut in February? I think is a critical question. As you say, the PMI data on Friday is going to be interesting. There's some interesting corporate stories as well. Burberry's going to be one of those, updating on its future. What is the strategy going forward from here?
Yeah, Netflix and Texas Instruments also stood out to me as ones that could be of interest.
Okay, that's it for the opening trade. Don't miss our coverage. It starts from Davos today. In the next hour, Francine Lacroix has an exclusive interview with BlackRock's Vice Chair, Philip Hildebrand. We're also going to be hearing from Nicola Mendelsohn. All of that coming up. This is Bloomberg.
studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 11 a.m. on the East Coast, 8 a.m. in the West. Only on Bloomberg Television. Context changes everything.
Earnings season is here.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Always on the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
Welcome to the world of decentralized finance.
You can see the massive gains for the OG crypto coin.
The breakout we have all perhaps long awaited finally realized. We'll see if it sticks.
Bloomberg's covering all things crypto, the people.
There's no question this industry is composed of some bad actors and some good actors.
The transactions.
Volumes have surpassed $24 billion per day.
And the technology.
Stop talking about the technology. Start demonstrating the utility.
Bloomberg Crypto, Tuesdays.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. January 20th. Live from the Alpine Mountains of Switzerland, it's the World Economic Forum annual meeting in Davos. Bloomberg Television brings you unmatched coverage and conversations with world leaders, business executives, and billionaires as they navigate the AI age, energy transition, and geopolitical tensions. Tune in for daily coverage starting January 20th, only on Bloomberg. Context changes everything. And market movers, live from Davos, Switzerland, for the World Economic Forum. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua, live in Davos for the World Economic Forum annual meeting. It's just a little busy today, also with inauguration. Now, in just a moment, we'll be speaking to Philip Hildebrand, the BlackRock Vice Chair. Later this hour, we also hear from Meta's Head of Global Business Group, Nicola Mendelsohn, on the company ending third-party fact-checking on its social media platforms in the U.S. Now, this week, we have a packed week. Exclusive interviews with some of the world's biggest power brokers, including the IMF Managing Director, Kristalina Georgieva, Sarah Fryer, CFO of OpenAI, the Argentinian President, Javier Milei, NATO Secretary General Mark Rutte, Larry Fink, the Chair, and of course, CEO of BlackRock, and Ruth Porat, President and Chief Investment Officer of Alphabet and Google. Now, first thing is first, of course, ahead of inauguration in the U.S., there's quite a lot going on, not only with Bitcoin, but also stocks soaring globally on expectations that maybe, just maybe, we see a more friendly U.S. with China. So European stock edging higher, U.S. equity futures edging higher. Again, it's Martin Luther King Day, so a lot of things will be closed today. The dollar weakening a bit ahead of Donald Trump's inauguration, but really it's Bitcoin soaring to a record. That's probably one of the main stories, $108,000. Now, business leaders and politicians gathering here in Davos, where they'll be discussing their agenda for the year. Now, this, of course, as President-elect Donald Trump prepares to be sworn into office today. Well, he spoke to his supporters at a rally in Washington on Sunday.
Together, we're going to cut your taxes, end inflation, slash your prices, getting them back down, raise your wages, and bring thousands of factories back to the USA, right where they belong, and that'll be done through tariffs and smart policy. We will build American, we will buy American, and we will hire American.
Philip Hildebrand, Vice Chair of BlackRock, joins us. Philip, as always, thank you so much for getting us started. Davos week, a busy week, especially with inauguration. We were hearing from President Trump saying, look, I'm going to cut your taxes, I'm going to cut inflation, and I'm going to make your life much better. Is that at the expense of all other economies?
We'll see. I think there's a lot of uncertainty, but good morning, Francine, and welcome to Davos this beautiful day. There's so much uncertainty at the moment in the world economy that It will depend on what the new administration actually implements in terms of first executive orders, the policy framework. But I think overall what we can say today is that the economy generally is being shaped by transformational forces rather than cyclical dynamics. We have aging societies, we have technology a big piece, we have geopolitics, of course, the fragmented geopolitical landscape. So all these things unbalanced will create stickier inflation, more uncertainty, probably more volatility and bigger policy trade-offs given the high debt levels that we have all over the world. So this will be a delicate environment in which to conduct policy, and policy will matter a great deal.
But Philip, what's the biggest danger over the next 12 months? That the Fed gets something wrong, that the ECB does, that Europe falls behind, or that world leaders are so distracted by what Trump does that they lose their focus on their own economies?
I'd say at the global level, to me, the biggest concern is while inflation has clearly come down, much of it driven by the post-pandemic adjustments, I don't think this inflation story is completely over. So I think, and depending on the policies that will be implemented, I think the biggest risk would be that we wake up and realize inflation is not just sticky, but continues to be stubbornly sticky, in which case, we won't get any of the rate cuts that have been priced in earlier and now have been sort of largely priced out. I think that's the sort of story at the global level. Trade, of course, has a lot to do with this. Protectionism has a lot to do with this. At the European level, I think the biggest risk is just really falling behind on the key issues. I think Europe is losing the digital war, we're losing the energy war, and there is a significant, severe, I would say, competitiveness issue that needs to be addressed in Europe.
But Philip, why is actually inflation sticky? Is it, and we've seen it in services, how much of it is it that it's just that last mile to get inflation down is very difficult, and how much of it is it the specter of tariffs, and how many Fed cuts do you expect?
Not many, if any, frankly. And the reason for that is because we have these structural mega forces, transformational forces that tend to weigh on the supply side of the economy. And that makes it much harder to get inflation down. So yeah, I believe we've moved from a world that basically had a kind of permanent easing bias during much of the previous decades to a world much more likely that will have almost a permanent tightening bias in policy, given the sticky inflation that will be a feature of these forces that I talked about. Some of it we can address. We could fix the fragmented geopolitics. That's something that policymakers can fix, the new president in particular. It's hard to fix demographics. And so these forces will be in place for quite a while, and I think that leads to, on average, stickier inflation and higher rates for longer.
You worry about Europe. Why do you worry about Europe?
We are falling behind. When I say we, I mean Europe is falling behind dramatically on competitiveness. And Mario Draghi laid it all out in a sense, in a brutal way. It should have been a wake-up call. Not clear what's happening with that. If you just look at the different sectors, you can see we're clearly losing the energy war. We're losing clearly the digital war. And then I think critically, the capital market story in Europe is just not unfolding. Part of the extraordinary dynamic of the U.S. economy, part of the reason why the U.S. is the place to be as an investor, is the depth and this fantastic breadth of the capital markets in the U.S., which Europe is just not able to replicate, even though we pay lip service to it. So I think this is a very significant challenge.
But you also have Germany and France with their own kind of domestic problems. Do you have hopes for the German election? Is Mr. Mersch the right person to actually lead Germany and therefore take a bigger role for Europe as well?
There's no question that the sort of paralysis, in a sense, politically, which we're seeing in many places, the incumbents are having a very difficult time across the world. In Europe, it's particularly problematic at the moment because the classical historic driver, the Franco-German relationship, is not really driving at the moment. And I think it's hard to get this momentum to address what Mario Draghi laid out in his report unless you have strong leadership from the big countries, and that has been absent. Which I think is a real problem. And, in my view, the new administration should be even more of a wake-up call for Europe to step up on these issues.
Who's the right person to lead Germany in this transition?
Well, we'll see. That's for the German people to decide. But clearly the policy makeup of the previous administration needs to change. And so change will be a positive, and then we'll see whether that change could be translated into European leadership in order to address these issues, particularly around capital markets, digital, and energy.
Why is Europe so slow on it? I know we're here in Davos. A lot of it will be, of course, some of the participants looking at the inauguration in the U.S. There'll be a lot of talk on geopolitics, but it's AI really the main theme. Do you worry that Europe is over-regulating or that it's falling behind when it comes to innovation?
I think the innovation per se, I continue to be convinced is there. We have great universities, we have great talented young people, we have great innovation, but we don't have the capital markets, and we don't have a deep sort of capital markets union, including banking competitiveness. If you look at the way U.S. banks have dominated since the financial crisis, have increased vastly in size, whereas Europe has not done that. Part of that story is regulation, there's no doubt, and it's going to get worse if the U.S. implements, if the new administration actually implements a kind of deregulation agenda in finance, which has been advertised, at least from what we know so far. That's going to make the gap even greater. So this has to be a wake-up call for the regulators in Europe to decide, do we want to be competitive in finance or not? Do we want to have a competitive, deep capital markets or not?
Right. We've seen, bond yields have been all over the place, frankly, in the last 3 weeks. I mean, it started in the U.S. and it really infected parts of the U.K. market. Do you see this as a possible recurring theme for 2025, including like some kind of credit crunch or something worrying in U.S. markets?
Well, the overall theme here is sticky inflation, higher rates for longer on average, combined, and this is the key, with very high debt levels. And this, of course, is new in a sense, right? This is quite a unique combination, that we have these high debt levels that give you very little room to maneuver, because as soon as rates move up unexpectedly, you immediately run into financing challenges on the deficit side because debt levels are so high. And we saw this at work, of course, classically last week in the UK. I think this will be a feature of this dynamic that I talked about earlier, where you have higher rates on average, volatility in financial markets because of these transformational forces, and you have these very high debt levels as a backdrop that creates a lot of vulnerability.
I mean, what does that mean? That it spells, I mean, could it spell disaster if there's fear in the markets? Or again, are there catalysts that you're watching out for?
It doesn't have to spell disaster if governments focus on growth. The way out of this is growth. There's no question. And if you look at what's happening in the UK, what is needed is a clear narrative and a clear strategy around how you create growth. And you can't just do it by public spending. And this gets us back to the capital markets. You need private capital to make the investments that are necessary to generate a strategy that can create growth, that can then get you out of this trap. So I think it doesn't have to spell disaster, but what it probably will mean is that you have important trade-offs on the policy side, uncertainty and volatility in financial markets, but it will also create opportunities. Rates have gone up. We have $10 trillion in money market funds waiting to be deployed. Some of that will move into the fixed income space, infrastructure, private markets, credit. So I think these things, create opportunities as well.
Philip, thank you so much. Philip Hildebrand, the vice chair of BlackRock, stays with us. We'll talk a little bit more about the banks and, of course, also Swiss inflation. Plenty more to come from Davos. This is Bloomberg.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
geopolitical news whenever and wherever it happens. I'm David Gura in Rio de Janeiro, Brazil, and this is Bloomberg.
January 20th, Donald Trump will be sworn in as the 47th President of the United States. Bloomberg will have special coverage of the historic inauguration, live from Washington, D.C. It all starts at 11 a.m. Eastern. Context changes everything. Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg is covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and the ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, Tuesdays only on Bloomberg. This week, live from the Alpine Mountains of Switzerland, it's the World Economic Forum annual meeting in Davos. Bloomberg Television brings you unmatched coverage and conversations with world leaders, business executives, and billionaires as they navigate the AI age, energy transition, and geopolitical tensions. Tune in for daily coverage all week, only on Bloomberg. Context changes everything.
Welcome back, everyone. Davos, day one, or is it day zero? Because we really start off this evening and then onto a Friday. This evening is also inauguration in the U.S., so lots to talk about, and markets watching everything around them. Still with us in Davos, Philip Hildebrand, Vice Chair of BlackRock. Philip, as always, thank you so much for sticking around. We had a good, robust conversation about what was needed for Europe to be a little bit more competitive and maybe, face also what's happening in the U.S. Where are European banks in all of this? Trump has promised deregulation, possible more M&A, the animal spirits being revived.
Well, Europe needs banks. There's no question. Europe needs capital markets. The banks, we have one or two very successful banks in Europe. They're very small compared to the U.S., so the U.S. banks can dominate if they choose to, or certainly if Europe deteriorates further in terms of the regulatory environment and the competitive landscape. So I think for Europe to have a growth agenda that is comparable to the U.S., to have a sustainable growth agenda, you need an effective, deep banking and capital markets structure, and we're lacking that at the moment, particularly around capital markets, and regulation is too constraining. There's no question in my mind that Europe needs a wake-up call on regulation. That doesn't mean you deregulate and set yourself up for the next financial crisis, but you have to take into account competitiveness.
But why is it so slow? Frankly, why have we not seen a working capital markets union yet?
Well, part of it is in the nature of the very complicated makeup that the European Union is. It is not a country, and it is not a full federation. It's somewhere in between. And so decision-making is problematic, it's slow, that's not going to change, so we have to work with that. But if the political will is there, and the recipes are clear. Mario Draghi laid it out very compellingly. There's no more story to tell as to what needs to be done. That story has been told. It's really about getting it done at this stage.
Do we need more M&A in Europe, especially amongst the banks? And does that only come with the capital markets union, or is there a way of forcing it through?
I think that's part of the story, cross-border acquisitions and mergers, definitely, because if you want scale, that's the only way to get scale. You can only grow a bank so big within a country, because otherwise it dominates the country in such a way that you run into competitiveness problems. So you need the scale at the European level, and that's part of it. It's really two stories, but they're connected. It's the banking side in terms of consolidation across borders, and then it's the depth of the capital markets. To this day in Europe, only about 35% of savers' assets are in equities or capital markets. The rest of it is basically in cash or in bonds. In the U.S., that number is almost double. And that tells you the depth of the capital market story that is a key ingredient behind a reasonable growth agenda, particularly at a time where we're going to need to invest so much in AI and infrastructure, all these things, and that money needs to come out of the private capital markets.
Yeah, but I keep on hearing actually a lot of chief executives saying it's also unfair that private money is not being tested as much as, for example, some of the banks. so that regulators, I mean, the shadow banking space, which we're so worried about, where nothing's happened essentially, is still a source of something that we should be looking at?
Well, I think you want to do the opposite. You want to make sure that you have deep capital markets. So the last thing you want is to replicate the very tight regulatory agenda that we've seen on the banking side and kind of transpose that onto capital markets. That's going to make things even worse for Europe, particularly, and again, you know, we'll see what happens in the next few weeks in Washington, but this becomes particularly pronounced if indeed the U.S. goes on a deregulatory track in finance.
Philip, so you were also, of course, a Swiss National Bank president. So talk to me about how you see the way forward for SNB. Would they ever go back to negative rates again, given some of the dynamics with inflation and interest rates here?
Well, we have a new governor now who's very talented and has gone through all the crises, from being a very young man to now being the governor. So he has all the tools, he has the experience. And I'm convinced that they will continue to deploy all the instruments that they have in their arsenal in order to basically continue to fulfill the mandate. The SNB has been one of the most successful central banks in fulfilling its mandate, and at times has deployed very unconventional instruments in order to do that, and I have no doubt they will continue to do that, you know, subject to the inflationary environment that we're going to see around the world. The currency obviously is a big factor in all of this, and so we'll see to what extent they balance potential currency instruments versus interest rate instruments.
Philip, thank you so much for joining me. As always, of course, the start of our Davos coverage here in 2025, Philip Hildebrand, the Vice Chair of BlackRock. Now, all week in Davos, we'll be speaking to central bank policymakers, including the South African Reserve Bank Governor, the Banque de France Governor, the Bundesbank President, the President of the Dutch Central Bank, the SNB Chairman, and the Bank of Spain Governor. So we'll have you covered when it comes to central bankers and inflation talk. Coming up, the Gaza ceasefire takes hold as the first hostages are reunited with their families and 90 Palestinian prisoners are released. We'll have the latest live from near a key crossing between Israel and Gaza. This is Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, Mondays on Bloomberg. Earnings season is here.
The earnings palooza right here.
They're going to come in hot and heavy.
Bloomberg is first to break the numbers.
Microsoft earnings now crossing the wire.
Lam research in the semiconductor space. AMD, Alphabet, we've got a lot to digest today.
With the smartest insights.
If the economy's strong, shouldn't that be good for earnings?
Consensus estimates are around 12% growth for the quarter.
Stick with us, a lot more coverage of all those earnings.
Continuing coverage on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 11 a.m. on the East Coast, 8 a.m. in the West. Only on Bloomberg Television. Context changes everything. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern every weekday morning at 6 a.m. Eastern, only on Bloomberg.
So the long-awaited, long-delayed Gaza ceasefire has begun after 15 months of war. A 6-week truce is underway, with Hamas releasing 3 Israeli hostages in exchange for 90 Palestinians freed from Israeli prisons. Let's go now to Bloomberg's Oliver Crook, who has the latest from us from near the Kerem Shalom border crossing. So, Ollie, how do we get here, and take us exactly what's happened so far?
Yeah, Francine, we've just crossed over the 24-hour mark that the ceasefire has held since it was brought into effect yesterday, some 3 hours later than originally was anticipated. And in those sort of early hours of the day on Sunday, it wasn't clear whether or not the ceasefire would go forward. There was, in fact, fighting in Gaza. There were several people killed, but it did come into effect, and it has held so far for the last 24 hours. As you mentioned, Francine, the release of the first 3 female hostages, 90 prisoners from the Israeli side being released back to the Palestinian side. And now, Francine, the key sort of development for many people within Gaza is happening at the Kerem Shalom border, where I've just been spending the morning. I spoke to the border manager there, who sort of who governs and manages the border crossing. This is where huge volumes of aid will begin to cross in from the Israeli side, some of it coming first through Egypt into Israel and then going into Gaza. He says that he expects about 800 trucks to flow into Gaza from all the various different border crossings. About 600 of those trucks will be coming from that border crossing specifically. And Francine, to put that into context, for the last month or so, in the month of January, the average number of trucks that have been crossing into Gaza has been about 50. They're hoping to get 800 today and get that number, that average, up to about 500 or 600 for an area that has been obviously massively devastated in terms of its infrastructure and of its supplies, not just humanitarian aid, but also sort of commercial aid. We saw a number of gas trucks, for example, going in to try to replenish the sources of energy for Gaza.
Okay, Ollie, thanks so much. Oliver Crook there from near the Kerem Shalom border crossing. Now, coming up, Donald Trump vows to sign a flurry of executive orders on day 1 of his presidency. So we look at his plans next. Of course, we're here in Davos. A lot of the focus will be on the Trump plans, what they mean for individual chief executives on the ground in Davos. And then the other thing being discussed here is AI. How far will it go? How can you prepare for it? Is Europe over or under-regulating? So we'll have a full look ahead, of course, to some of the social media platforms. We also speak to Nicola Mendelsohn of Meta. This is Bloomberg.
European countries need to think, do you want to compete as a small country or do you want to compete as Europe? I don't think they have a choice, because the US and China have already started the race, and Europe needs to follow. There isn't a European company in the top 20 largest firms in the world. That is a problem.
But what does it mean for individual countries within Europe?
You can have more control and less growth, or you can have less control and more growth. If countries trust each other more and they build more European champions rather than each country having its own national champion, growth is going to be better, productivity growth is going to be better, the welfare is going to be better. But there is going to be less control at the national level. So right now, each European country wants to have its own telecom company, its own couple of large banks,
Its own bank,
its own large energy companies. And the question is, are you willing to surrender some of this control to European firms, which are going to be more productive, but you are going to have less control at the national level?
Welcome to the world of decentralized finance.
You can see the massive gains for the OG crypto coin.
The breakout we have all perhaps long awaited finally realized. We'll see if it sticks.
Bloomberg's covering all things crypto, the people,
There's no question this industry is composed of some bad actors and some good actors.
the transactions,
volumes have surpassed $24 billion per day.
and the technology.
Stop talking about the technology, start demonstrating the utility.
Bloomberg Crypto, Tuesdays.
Bloomberg brings you breaking news 24 hours a day, powered by 2,900 journalists and analysts in more than 150 offices across the globe. Bloomberg Television. Context changes everything.
Get your fixed income fix. Watch Bloomberg Real Yield every Friday at 12 p.m. Eastern, right here on Bloomberg. Context changes everything.
Well, good morning, everyone, and welcome to our special coverage live from Davos for the World Economic Forum annual meeting. I'm Francine Lacqua. Now, we know President-elect Donald Trump is poised to invoke emergency powers to boost domestic energy production and reverse Joe Biden's climate change actions. The move is set to be among an array of executive orders that Trump will sign on day one of his presidency. Now, he spoke on the eve of his second inauguration with a rally in Washington.
I'm thrilled to be back with so many friends, supporters, and true American patriots on the eve of taking back our country. That's what we're going to do, take back our country.
Well, joining us now is Chad Thomas, Bloomberg's Europe executive editor, who also oversees all of our Davos coverage. So that's not a small job, Chad. You get us all coordinated and follow like
trying to warm it up for you, too, but I'm not doing so well so far.
Yeah, we could have done better on the weather. There's a lot going on because a lot of the focus here will be chief executives trying to figure out what Trump is saying to understand what their businesses will have to deal with.
Well, those executives might be here in Davos, and we know a lot of them are here, but they will be watching very closely today what happens in Washington. We know there's going to be a flurry of executive orders. They've tried to keep some of it under wraps. There's the energy one that's already leaked out, but that is what everyone will be watching. They're also going to be watching what in the world's going to happen with TikTok. He has indicated that he's going to give them this 90-day reprieve, but we have to wait and see. He sometimes changes his mind. And ultimately then also what happens after that 90 days. I mean, he's mentioned the idea of there being some sort of a joint venture that would still include China, but a lot of the critics within his own party, Republicans, they do not want China to have any ownership in TikTok. So everyone's going to be watching here very closely what's happening today in D.C. and in the days after. And of course, the president-elect, soon to be president again, is going to be addressing Davos on Thursday. That's a virtual address, but you can bet that people will be packed in to see that one as well.
Yeah, and I feel like the word of the year for us is flux, right? Or at least when you speak to chief executives, they're trying to understand what happens next. Do they more worry about inflation and tariffs, or do they try and focus on geopolitics? Because we have quite a lot of big leaders also showing up in the geopolitics world.
Yeah, and, you know, it's a difficult time to be a chief executive, right? I mean, that's why they get paid the big bucks, but ultimately you have to deal with inflation. You have to be prepared for those tariffs, and you have, as you say, geopolitics. We have Ukrainian President Volodymyr Zelensky coming here. He was here last year. He really was a focus last year in Davos. Expect that to be the case again. He is someone who really is good at seizing the room and making sure that Ukraine remains a big topic. Of course, a lot has changed in the last year as well when you look at the leadership in the U.S. and the willingness to help on Ukraine. So he certainly is going to be here, you know, pushing for people to make commitments to continuing to support Ukraine.
Tomorrow's interesting because you have, Chancellor Scholz showing up, but also the person that could replace him come February 23rd.
Yeah, and that's something I personally will be watching very closely. I, of course, have lived in Berlin for a very long time. Friedrich Merz is here tomorrow, and he will be addressing the Davos crowd. Of course, he's a former banker himself, so he's been to Davos before. He knows this crowd. And Chancellor Scholz is here to make his pitch as well. We'll also be watching the day after that, the Vice Chancellor, Robert Habeck. He's the leader of the Greens. He's also coming, so it's kind of like the German election campaign is coming to Davos. The election is only just over a month away, so they are making those last pitches. They also have to be kind of a bit careful. On the one hand, they want to court this crowd, but it doesn't necessarily play so well at home domestically, so there's a balancing act that they all have to play when they come here.
Yeah, that's what, it's so interesting, actually, Davos, because you want to be able to pitch your country or your business to investors, but if you're too close to Davos, then you're seen maybe as an elite. When you look at, world leaders, we don't have a very big China contingent.
Yeah, that's really interesting. I mean, there was a pretty large China contingent last year, and for whatever reason, they haven't really sent any top leaders this year. Maybe they're also watching more closely what's happening in Washington today and decided this isn't the time for us to come and deliver a big message in Davos. We'll have to wait and see what happens next year. Will there be a bigger China contingent, and will potentially President Trump come next year? He, of course, has been here. We both were here when he was here a few years back as president, and that really sucked a lot of the attention out of Davos.
Yeah, I'm looking forward to Mr. Milei of Argentina. I mean, this is going to be a big interview for us.
Yeah, that is going to be really exciting. That's on Wednesday afternoon. Really be looking to hear what he has to say.
Yeah, the unorthodox, unconventional economic policies that so far have worked. So watch out for that.
Yeah.
Thank you, Chad. As always, Chad has to get back to work. He has a big operation to run here in Davos. Bloomberg's Europe executive editor, Chad Thomas. Now, the Chinese-owned social media app TikTok has restored service in the U.S. after briefly going dark to comply with the Supreme Court ruling. The reprieve came after President-elect Trump promised an executive order giving ByteDance 3 more months to find an American buyer for the platform. Well, for more on this, Tamlin Basin from Bloomberg Intelligence joins us. Hi, Tamlin. So what's the current status of the saga?
Yeah, well, Francine, it's quite confusing. There's a lot of moving parts. So the current status is that TikTok is back online now as of, I think, yesterday afternoon in the U.S. That's after going dark based on a decision that TikTok made to sort of pull its services out of the U.S. and sort of draw attention to the impacts of this ban that passed Congress, was signed into law by President Biden, and took effect on Sunday. So right now it is back online, but it is not being supported by some of those third parties, so being Apple, Google App Stores. So that's where we are right now.
Trump has promised an executive order today to save TikTok. Would that actually work?
Yeah, so it sort of remains to be seen. We'll have to see what the parameters of that executive order, if that comes out today or maybe tomorrow, and see what he's trying to do. But essentially, we know that he wants to buy TikTok more time to sort of divest, or as he raised yesterday, divest at least 50%. However, the law that passed really does require a total divestment. And then under that law, you can only get that 90-day extension if there is a signed legal document that really says the moving towards that divestment. So I think we're going to have to really examine the text of that executive order to see if it's really going to carry weight.
So what are the companies that host TikTok like Google, Apple, and Oracle making all of this?
Yeah, and sort of as I mentioned, you still cannot download new downloads of the app on Google or Apple. And I'm not entirely sure about Oracle, but I think those companies are right to be quite cautious about really doing anything until they know that they're not going to be held accountable for violating this law. The potential liability is massive. It's $5,000 per violation per user. There are 170 million U.S. users of TikTok, so it could be very, very large liabilities for these companies. So I think they're going to be very cautious before they sort of do more work with TikTok until there's clarity on whether they're going to be prosecuted under the law.
Thank you so much for joining us, Tamlin Basin there from Bloomberg Intelligence on everything TikTok. Now, coming up, we talk tech, Trump, and content moderation with Nicola Mendelsohn, Meta's Global Business Group head. She joins me next here in Davos. This is Bloomberg.
January 20th. Live from the Alpine Mountains of Switzerland, it's the World Economic Forum annual meeting in Davos. Bloomberg Television brings you unmatched coverage and conversations with world leaders, business executives, and billionaires as they navigate the AI age, energy transition, and geopolitical tensions. Tune in for daily coverage starting January 20th, only on Bloomberg. Context changes everything. Earnings season is here.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
What happened was you were out.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
Today, Donald Trump will be sworn in as the 47th President of the United States. Bloomberg will have special coverage of the historic inauguration, live from Washington, D.C. It all starts at 11 a.m. Eastern.
Well, Meta Chief Executive Mark Zuckerberg is among several prominent tech leaders expected to attend Donald Trump's inauguration today. Now, Meta has been in the spotlight after ending third-party fact-checking on its social media platforms in the U.S. Instead, users can comment on the accuracy of posts with a community note system, which it says will promote free expression. Well, we're now joined by Nicola Mendelsohn, Meta's Global Business Group head. Nicola, as always, thank you so much for joining us. I mean, look, Meta has definitely been in the news through some of the comments of Mark Zuckerberg, through this third-party checking, which we'll get to in a second. Overall, the big theme here is AI. Are we underestimating or overestimating the speed of change for AI?
Well, I think, first of all, it's fantastic to be here. And yeah, this is the Davos AI conference, it feels like. And from a Meta perspective, 25 is going to be a big year for us as we continue to build out some of the most exciting, innovative technologies, including AI at the heart of everything we're doing, developing the future of social media, the next computing platform with our AI glasses, and of course the performance of our advertising as well. And we're seeing extraordinary results across all of those different areas. When I think about how AI is powering our advertising tools now, on average, we're seeing up to a 25% increase on return on ad spend as a result of what the AI is now able to do for advertiser performance. So there's a lot of innovation here.
And that will continue to increase. Do you see the US just going ahead in terms of deregulation for AI, Europe increasing regulation, and so some of the products you won't be able to roll out in Europe?
Yeah, that's certainly the case that we're seeing. And just being on the ground and being able to talk with European business leaders, I'm sensing even a greater sense of frustration this year versus last year. I mean, we saw the Draghi report at the end of last year, talking about the real difference now between the US and the European economy in terms of where things are. Europe hasn't created a single $100 billion business in the period, whereas the US now has $6 trillion businesses. You know, and Meta is one of those. And the frustration they're telling me is the overcomplication of regulation, over 100 different rules, 270 different regulators. And what this is meaning now is it's really playing a huge toll, a real cost, both on businesses but also people as well. So yes, I think that's a challenge here.
But Nicola, does it mean, for example, on the fact-checking, the fact that you now have gone to third party in Europe, you still need to fact-check. So could you have fact-checks on politicians for European, viewers, and not in the U.S.?
So one of the things that we shared, as you said at the beginning, is that we are moving away from the way that we were utilizing third-party independent fact-checkers and moving now to much more of a community notes program. We're starting that in the US, and then we'll see how that goes as we move it out over the years. So nothing changing in the rest of the world at the moment. We're still working with those fact checkers around the world, But in the US, that's the direction of travel to start with.
I mean, there's a lot of people that are worried, of course, about fake news, disinformation. Are you taking steps to either see how it goes and then be able to roll it back, or are you keeping an open mind about, what the end game is?
No, we want to be very clear. There's still no place on the platform for things that would cause real-world harm, terrorism, drug trafficking, child exploitation. We don't want any of that on the platform. What Mark's committed to, and always has been from the very earliest days of Facebook, is the ability to create platforms for free expression. And so he actually did a speech back in 2019 in Georgetown where he set out that direction to encourage more discourse, to encourage more debate, and that's where we're going.
So I know you've also been a long-time advocate of diversity and inclusion. How does that match up with some of the, DEI things that you stopped doing?
Well, I think you can see and you can observe that we're certainly in a changing political and societal changes in the US right now. So we have stopped our DEI programs. But what hasn't stopped is our commitment to bringing the very best talent from very different types of communities around the world in order that we can serve our 3.2 billion people in the best way possible.
How will you monetize Threads? Is that one of the things that you're focusing on for 2025?
So we're very excited about Threads. Threads now has, look at you smiling, 300 million users. We've got 100 million users coming onto the platform every single day now. So we're excited to see the trajectory, but nothing to share with you quite yet.
Okay, what does mean quite yes? And maybe
well,
in a couple
nothing
of months?
to share with you, but you know how these things work, that we want to get out to a place that we've done with all of our platforms where we put it out for people first, and then we come and think about monetization after.
I mean, a lot of my, social media space is on what's happening with TikTok and the fact that they went dark and now they're back on, that President Trump is trying to save them. How much of a difference or how much of your efforts are you spending trying to understand what it means, for example, if it gets sold to Elon Musk?
So, I mean, this is a very fast-moving, space. And as a company, we've always welcomed competition. I think that's a good thing. I think it's a healthy thing for the environment, for the eco space. I've got our teams focusing on making sure the advertisers know the amazing products that we have. But you saw probably also that Adam Mazzari, our head of Instagram, he launched Edit just a few days ago. And that's exciting because that allows creators to have many more tools to be able to create the content that they want to get out to their communities. So we're excited to see that launch.
What are advertisers saying right now? Are they feeling good about 2025? Were they spending? Were they spending less?
So the advertisers that I'm talking to, when they're talking to me, they want to focus on growth. I think there's probably a bit more optimism in the US on the outlook in terms of how things are versus what's going on in Europe, and that reflects what I shared earlier. But they're saying that, we're really helping them to deliver the growth. And that's not a surprise in terms of what we see. We're giving them more tools, generative AI tools that we're giving to them now. And that's seeing some great results. So we've now got 1 million advertisers that are using our Gen AI tools. And they're creating, on average, about 15 million pieces of content every single month now. So more to come on that. But I also think about things like Reels. Advertisers are really leaning into Reels. More than 50% of the time spent on the platform now is through Reels, and again, that's AI powering that recommendation system. So there's lots of excitement for advertisers with us.
Have any advertisers said they worry about the fact-checking changes coming up?
Actually, what advertisers are saying to us that they've been very reassured by the brand safety tools that we've put in place, a number of years ago. And we've reassured and given commitment that we're absolutely continuing to invest in this area so that advertisers are in control of where they do or don't want to put their advertising.
I mean, do they worry about brand reputation, or are there some conversations that are going behind closed doors that, that you're trying to find a way of reassuring them on some of the maybe specifics that they worry?
So we've spoken about what hasn't changed, the commitments that will still be transparent in what we publish in our community standards report, the fact that they have those brand safety tools to be able to utilize if they want to. And then ultimately, any advertiser should really judge you also by the growth and the performance that you're delivering and on the innovation. And so one of the things they're really leaning in at the moment is on business messaging, which is really a revolutionary way to be able to connect with consumers. And when you bring AI in on the top of that, which we're starting to do now, we're seeing tremendous responses for advertisers. And the whole area of AI assistance, I mean, Meta AI now has 600 million monthlies that are coming on, well on its way to being the most utilized assistant on the planet, which is really exciting. Then you think to 25, we're going to be investing more in voice and investing more to make them more personalized so they feel more like you can choose the tone and the way of being. And advertisers are really excited in this area as well, because that means they can enhance the customer service, they can enhance, the information backwards and forwards, even when their businesses are closed, can have that 24/7 going on. So a lot to be excited about.
So, Nicole, what does that look like? So is it a business account that speaks to me personally, or is it an influencer the sky's the limit really on how you can go forward with this?
Yeah, so the way that we're utilizing it at the moment is through businesses that are already using our click-to messaging applications. And that can be on WhatsApp, or it can be on Instagram Direct, or it can be on Messenger. And then you can literally have an assistant on the side. And they're getting more and more sophisticated. But we're seeing really strong results from the advertisers in terms of the customer service, the customer enhancement that they see. And yes, you're right, the sky is going to be the limit in terms of how those are going to evolve. And we think ultimately that people won't just have one assistant for themselves personally. And businesses will probably play around also with different ones depending on what you're looking for. So this is a really innovative way, and we're seeing around the world that rest of the world's really embracing this. In the US, we're seeing that WhatsApp now is over 100 million users, and so it's our fastest growing region here.
They're starting. I mean, I feel like they're starting, but in Europe we use WhatsApp for so much.
And for much longer as well.
Is that cultural?
And also, if you go to Asia, I mean, the utilization in Asia of how businesses and people are communicating, we're seeing over 600 million business conversations every single day between business and people. I mean, that's huge. And they're doing everything from buying life insurance, buying, metro tickets, to buying shopping and buying clothes.
And Nicola, Mark Zuckerberg also said that actually there's more masculine energy that is needed. Do you feel that at Meta?
No, I think, I've been at Meta, I'm going into my 12th year now. The Mark Zuckerberg that I work for, I've had an environment where I've grown. I've seen the women around me grow, and so I think it's a fantastic place for people that are looking to be in their career, that want to build the most innovative, the most exciting, cutting-edge things like Orion. I mean, we're demoing Orion here, which is our first holographic augmented reality glasses. It's like seeing the future. You'll have to come and try it.
Okay, that's amazing. We can be there and also be in many places at the same time, I feel like, thanks to the holograms. Thank you so much. Nicola Mendelsohn there, Meta's Global Business Group Head. Now, collaboration in the intelligence age is one of the key themes at the World Economic Forum this week. Bloomberg will be speaking to a host of global tech leaders in Davos, including the OpenAI CFO, Sarah Fryer, Alphabet and Google President and Chief Investment Officer Ruth Porat, Mistral AI Chief Executive and Co-founder Arthur Mensch. Coming up, we'll take a look at crypto markets. Yes, we will, after Bitcoin hit a record and meme coins from Donald and Melania Trump launch on the cusp of the inauguration. That's next, and this is Bloomberg.
Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg is covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and the ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, Tuesdays only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Rio de Janeiro, Brazil, and this is Bloomberg.
investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
Earnings season is here.
The earnings palooza right here.
They're going to come in hot and heavy.
Bloomberg is first to break the numbers.
Microsoft earnings now crossing the wire.
Lam Research in the semiconductor space. AMD, Alphabet, we've got a lot to digest today.
With the smartest insights.
If the economy's strong, shouldn't that be good for earnings?
Consensus estimates are around 12% growth for the quarter.
Stick with us, a lot more coverage of all those earnings.
Continuing coverage on Bloomberg. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, Mondays on Bloomberg.
Well, cryptocurrencies jumped in early morning trading, with Bitcoin reaching a fresh record as U.S. President-elect Donald Trump is set to take office later today. Now, for more, let's bring in Bloomberg's crypto reporter, Emily Nicole. Emily, I feel like after it touched 100,000, then it's now 107. What's the next threshold?
I mean, this is going to be a very interesting day for crypto markets because the US is on a holiday, and the US is usually one of the largest liquidity sources for crypto. It's the biggest crypto market in the world. And so without that to rely on, there is an element of, small things could cause big swings. That said, because Trump and his wife Melania launched their meme coins over the weekend, which caused a certain amount of speculative frenzy, that's kind of put traders on alert for what could come today. People are awake, they're paying attention. That's why we might have seen Bitcoin hit a new record this morning. And so we are kind of expecting some volatility going into the day, but also a lot of attention on Bitcoin as one of the key markets that is open today on the day of inauguration.
Emily, what's a working assumption of what the Trump administration actually does for crypto?
Yeah, it's still a little bit uncertain, isn't it? I mean, so we've been hearing from Trump over the last few months, ever since he was on the campaign trail, that crypto is something he's really passionate about. He said he wants to make a strategic reserve for Bitcoin. He promised to change over the power in the SEC to make that more crypto friendly. And some of those things have already come to pass. Some of them we're still waiting to see. What we understand is that one of the executive orders he signs today will be that he will make crypto a national priority for policy. What that means in practice, we have yet to see. But there's a hope in the industry, at least, especially with the launch of the meme coins over the weekend, that Trump is very firmly tying himself and even his family's wealth to the crypto industry. And therefore, it's in his incentive to make it a big part of his administration.
Emily, thank you so much. Emily Nicole there, Bloomberg's crypto reporter, of course. She has all of the insights, so I can't tell you how often I call Emily and her team. Now, another reminder that we'll have special coverage of U.S. President-elect Donald Trump's inauguration later today. That's from 4 p.m. UK time, 11 a.m. in Washington. And, of course, we'll have everything here in terms of market reaction. Coming up, 10 a.m. London time, Jumana Bersace, joined in Davos by Faisal Ibrahim, the Saudi economy and planning minister.
To succeed in Wall Street, what skills do you need? You need to be somebody that claws people in the back, people that you have to be tough, you have to be fighting people all the time. What are the skills that really take to succeed in Wall Street?
Great question. Of course, you have to work hard. So I can tell you what I found for me, and it's probably counterintuitive. I had to stick out. which is interesting because I made the decision earlier. Being really the only woman, I already stuck out, and I thought I might as well double down on that. I can't hide. So how did I do that? It was by being a contrarian. And I refused as a research analyst to ever publish research reports that said me too. That said, oh, IBM reported earnings. They came in 2 cents ahead. One of the pennies was currency, the other penny was lower G&A, blah, blah, blah. Forget it. Big calls on big stocks. My very first piece of research I published was very negative at a time nobody did it. I stood the heck out. And when I was right, that elevated me. And David, I've done that as a research analyst, but I did it in business as well. Here's a business strategy. If everything's fine, just keep your head down and execute. Every once in a while, you have a big insight, and you can build an entire business, in fact, an entire industry around it.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 11 a.m. on the East Coast, 8 a.m. in the West. Only on Bloomberg Television. Context changes everything.
Always on the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
Get your fixed income fix. Watch Bloomberg Real Yield every Friday at 12 p.m. Eastern, right here on Bloomberg. Context changes everything.
It is 10 a.m. in London, 5 a.m. in New York. US markets are closed for Martin Luther King and the holiday, of course. Welcome to Bloomberg Markets. I'm Tom McKenzie. Here are your top stories. It is Inauguration Day in the US. Incoming President Donald Trump gears up to be sworn in Washington. Bloomberg learns that he's also set to declare a national energy emergency to unleash domestic production. TikTok restores its US services after President-elect Trump vowed to delay enforcement of a ban and to grant another 90 days for the Chinese app to find a US backer. And a Gaza ceasefire has begun. Hamas releases 3 hostages in exchange for 90 Palestinians held in Israeli prisons. Let's get to the market reaction right now to the geopolitics, the lead up, of course, to the inauguration and what we've been hearing about China-US relations, with a view as well on crypto, given the gains that have come through for Bitcoin in the session so far. Bloomberg's Veli Teitel, always with a finger on the pulse of the markets for us, joins us for the details. Val, what stands out to you to the session today when it comes to the way that equity markets are shaping up for the week ahead?
Well, look, it's going to be a very interesting afternoon when we get the details of these executive orders from Donald Trump. He's been rumored, and he mentioned last night in one of his pre-inauguration celebrations that he is going to be signing up to 100 executive orders today. Just how many of those will be friendly to the crypto currency market? We've seen such a rise in Bitcoin this morning, breaching record highs just a few hours ago, 109,000. It's also going to be interesting for the trajectory for the U.S. dollar, because if he does focus those executive orders instead on domestic policies, we know that there are a huge amount of dollar longs in this market, all bulled up on the fact that we will get some tariff announcements. If he instead today focuses more on domestic policies instead of international trade, maybe we get some downside shift to the dollar on just that disappointment out of the gates that we're not getting anything hard and fast on tariffs. But it's going to be a very interesting session today. All eyes on what these executive orders that he will be signing after he is inaugurated.
And it is all really about Trump in terms of the market moves today. You have the conversation between Xi Jinping and Trump that led to a very positive session over in Asia. There's a question mark as to how long and to what extent that should be sustained. And then there is the question around that national energy emergency. And you're seeing pressure on renewables in Europe. And you have to wonder, why is not more of this priced in at this point? We know that this is not an administration that is going to be favourable towards renewable stocks. Nonetheless, you're seeing pressure in the session today. Let's talk about the China-US part of this, the gains that came through in the Asian session. What do you make of how much vulnerability, how much volatility we should expect when it comes to that relationship and the layering across to the equity space?
Well, I think that optimism was around the fact that, you know, Trump and Xi held this phone call. Trump hailed it as a success on Friday, and it perhaps means that the percent chance that we do get a blanket tariff on China maybe is diminished. Maybe Trump is really wanting to get some sort of deal done with China without having to slap these tariffs on. So we did see actually the yuan strengthening off the back of that, which means, you know, if there's less likelihood of harsh tariffs on China, maybe there's less likelihood of more China stimulus to come, and that leaves room for the yuan to strengthen. So a very interesting session in Asia. I think it just sets the tone that we might be a bit disappointed today when it comes to any further tariff announcements.
Okay, and on the yuan, of course, there have been some calls that they may get to 8 on the Chinese currency to kind of relieve pressure if tariffs are imposed to a high degree. And as you say, that seems to be a trade that is less in the spotlight right now. As you see, a little bit of strength coming through for the Chinese currency. Valerie Teitel on these markets. Thank you very much indeed. Let's get to Davos and back to Davos, of course, the World Economic Forum taking place. Political and business leaders from around the world are gathering in the Swiss Alps, of course, for the World Economic Forum. Bloomberg's Jemana Pasecci is there on the ground for us, and she is joined by a special guest. Jemana.
Yeah, Tom, thank you so much. That is right, a special guest and lots of conversations to be had here on the sidelines of Davos. Joining me right now is His Excellency Faisal Al-Ibrahim, the Minister of Economy and Planning in Saudi Arabia. Great to have you with us. We have a lot to get through, but I am going to start with the major geopolitical development in the Middle East region and the fact that a ceasefire has finally gone into effect between Israel and Hamas. Many people are hopeful that perhaps this could be the dawn of a new phase for the Middle East in the years to come. How do you see things?
Thank you, Jemana. It's great to be here again. Any step towards peace is a positive progress step. We in the Kingdom have always called for laying a clear and irreversible path towards more peace, more stability, and ultimately prosperity. And it's imperative, it's clear that the Middle East and stability in the Middle East will be imperative for global growth, and that's why we're here to discuss, and global prosperity.
Yeah. How is Saudi Arabia viewing the return of the Trump administration? And Trump has talked about energy declarations and perhaps broad-based tariffs. How do you view his return?
Well, the Kingdom and the U.S. have a long-standing, strong relationship that spanned 8 decades. It's been strong regardless of which administration was in office. We look forward to working with the second Trump administration, as we have with previous administration, on important work, including addressing some of the challenges the global economy is looking at, such as tepid growth.
There's been talk about whether Saudi Arabia is actually going to join the BRICS unit, and so far nothing has been done on that front. So why the delay?
So it's important to keep in mind the Kingdom is always focusing on fostering more global dialogue. We've been invited to the BRICS, similar to how we've been invited to many other multilateral platforms in the past. Historically, we assess many aspects of it before a decision is made. Yeah. And right now we're in the middle of that.
Looking ahead, the Saudi economy, obviously there's been a massive diversification push, and whenever I speak to you and your colleagues, we talk about the non-oil sector. Specifically, which of the sectors do you think are going to be driving Saudi growth in the years to come?
So Vision 2030, which is our program to basically long-term restructure our economy, is on track and moving with a lot of momentum. One of our focus areas is building more human capital potential and having human-centric, human-led growth. The other is diversifying the economy. If you look closely to our economy, you'll see that the non-oil economy is growing. More sources of growth are being added, where it's coming from tourism, culture, entertainment, sports, but also more long-lead sectors such as mining, industry, what we call Industry Plus, shipbuilding, auto manufacturing. All of these are proving the power of diversification. Our numbers in the last quarter and the quarter before wouldn't have been this strong if it wasn't for the political will and decision and the work put in to start sectors or reinvigorate old sectors.
Yeah, do you think the international community and international investment community actually see what's going on there and are encouraged? Because we still speak to many people who come to the Kingdom for fundraising as opposed to actually deploying and mobilizing capital into Saudi Arabia.
So the Kingdom is a global investment powerhouse, but we're seeing a shift. People are looking for smart capital coming from Saudi, given we have a strong sovereign wealth fund. But our sovereign wealth fund is also investing locally to start new sectors, and that's attracting a lot of investors. A lot of investors are putting in more effort, time, and energy into the Kingdom, and they're inspired by what they're seeing, especially the youth, young professionals in Saudi.
And yet, there's still some major mega projects, projects like NEOM, that are demanding a lot of investment from the Saudi side. But at the same time, you and I have spoken about this. There has been a reprioritization of spending to account for the funding needs of some of these mega projects. Can we continue to expect to see Saudi Arabia issue more and more and borrow more on debt markets in the years to come?
So two things, Joanna. First of all, the kingdom is committed to long-term planning. We shifted from short-term to medium-term fiscal frameworks to long-term planning for the first time in a long time. At the same time, there's agility in the decision-making. Since we started the vision, we had ambitions for certain sectors. These sectors overachieved their ambition. Tourism achieved their 100 million visitor number 7 years early, and now that number is increased to 150. At the same time, there's things that we didn't plan that we have succeeded in, such as hosting the world twice in 4 years, with Expo in 2030 and the World Cup in 2034. So a natural reprioritization towards better economic outcomes without jeopardizing our Vision 2030 robustness as a plan is important. And of course, with this comes a clear and communicated financing and funding plan that includes engaging properly and in a healthy manner with the global debt markets.
Do you worry about the balance sheet deterioration, though? The more debt that Saudi Arabia is taking on, both at a state and off balance sheets borrowing as well.
So our financial management and financial and fiscal planning is improving as we go. Today we have a clear plan moving forward and a clear debt program that's always revisited. The essence of Vision 2030 is planning with confidence, delivering with optimism, but more importantly, managing with prudence. And it's an ongoing process.
One other thing I just want to ask you about as well, the state have been pretty articulate about their desire to gradually reduce their stake in Aramco. What are the criteria you looking at in order for these sell-offs to go ahead? And how frequently can we expect these share sales to happen?
What I can tell you is the priority of the Kingdom under Vision 2030 is diversifying our economy, and that means the optimal utilization of all of our assets and capabilities. I don't know of any immediate plans to continue the IPO program, but that's something left to the shareholders that will communicate in due course if there's anything.
Yeah, Your Excellency, always good to chat to you. Thank you so much for making the time for us here on the sidelines of Davos. And Tom, of course, many other fascinating conversations to come, but great to get insight from His Excellency in Saudi Arabia.
Okay, Jemana Pasechi on the ground for us, of course, Middle Eastern Horizons anchor in conversation around the diversification demands and needs of that Saudi economy. And of course, plenty more interviews coming up through the week from Jemana and the team. Coming up, Daniela Costa of Goldman Sachs. We'll get a view on the spend around CapEx into 2025. How much of that is being driven by the industrial policies of Europe, focus on defense, focus on aerospace, and of course, data centers and AI. That conversation coming up. This is Bloomberg.
Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg is covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and an ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
Always on the heartbeat of the tech sector.
Spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
In case case you missed it, on Bloomberg Open Interest.
11 years ago, I bought a Bitcoin on this set.
It was $800.
Yeah, $800, but I spent
Which
the
is a
Bitcoin
lot, by the
on
way.
beer and groceries and gas and video games.
And
I wish I had
hogs.
kept it. I wish I would buy a Harley today if I had.
Yeah, but you
that
probably
Bitcoin.
wouldn't be a TV anchor, and you probably wouldn't still be on this
True.
set. And what a joy that
I'd
is.
be my feet in the sand and the beer in my hand.
Don't miss the next Open Interest.
Welcome back. US markets are closed for the Martin Luther King holiday. Meanwhile, Asian stocks gained following a call between US President-elect Donald Trump and President Xi Jinping. In Europe, stocks are actually a little lower right now, having started on the front foot. That's despite the optimism, of course, and a decent session over in Asia. Looking ahead, of course, to Trump's inauguration, policies around tariffs in focus, and, of course, the news today that he will be likely declaring an energy emergency to give his administration more powers to push through with greater and more pronounced drilling and production in the US. That will be the hope, at least, for the incoming president. Daniela Costa, meanwhile, head of European Capital Goods Equity Research at Goldman Sachs, joins us for a view on how the tariffs conversation could reshape industrials in Europe. I want to start with the here and now around this news that the Trump administration could announce an energy emergency. You're seeing renewable stocks in Europe selling off quite heavily on this news. You've got the likes of Siemens, Vestas, for example, Enel as well, currently down 4.5%. I just wonder why investors were taken by surprise. This is an administration that is not going to be favourable to renewables, but will double down on fossil fuels.
Yes, thank you for having me. Indeed, I guess people have been anxious for some time regarding what happens with the IRA and the utilities-related policies. And I think at the moment people are balancing out the potential risks about less renewable investment and where. Is it wind? Is it solar? And also, from another side, some of the European, especially industrial utility exposed names also have grid exposure. And the grid is not as clear in terms of what would happen just because of renewables. You still have to connect. You still have more demand because of data centers, artificial intelligence. So I think people have had a hard time in making a hard cut and are deciding this at the moment.
I mean, how vulnerable do you think ultimately the utility companies, the renewable players in Europe are to a potentially unpicking of that Inflation Reduction Act in the US, or is it overstated at this point?
I'll speak through the industrial ones that have exposure to this. So the power equipment makers, cable companies that do transformers, converters, and other things. If you believe that there is still underlying demand for power will increase because of some of the drivers that I spoke to, you will still need an infrastructure. The infrastructure in many places in the US is several decades old, way past what you would consider the useful life of the assets. So this is why there are still pockets, for example, has cables, where we do see significant investment, even if the power mix might be slightly different.
And what is the tariff threat to those companies?
Yes.
How vulnerable are they to additional tariffs? The energy demands are clearly there, as you say, for data centers. The build out, we've seen that from the tech companies. They're not pulling back on CapEx, certainly not for this year. So that energy component, that energy piece is certainly there. But the tariff threat as well is also building.
Sure. I mean, first towards renewables and equipment to connect grid. For example, things like cables don't transport very well, so you don't actually import a lot of that into the US. A lot of it has to be made local. We might see further investments on building out and strengthening local capacities, either from European or other companies. But in terms of equipment, not all the parts come from outside. Of course, a bit different in terms of solar panels and others, but on the industrial part of the supply chain, a lot is actually made domestically. More broadly, in terms of tariffs across the broader industrial world, if I may, you also have to consider that a lot of domestic manufacturers rely on second-tier, third-tier suppliers that might come from the outside, so it's not obvious that European companies are necessarily at a big disadvantage. Certainly, they have more costs in Europe because of where their headquarters are, but this might be, according to our analysis in the parts that we cover of European industrial companies, is maybe a mid-single-digit percentage of mismatch of sales rather than perhaps being as big as people think.
You cover aerospace and defence as well in Europe in terms of the industrials. How should investors be thinking about the additional fiscal spend, possibly to support the defence infrastructure base of Europe, particularly under pressure from incoming President Trump. How much of that is priced into those stocks at this point? How much of that could be a catalyst in the months ahead?
Sure. As a broader team, we definitely cover aerospace and defense. It's been sort of one of the best performers already in the past 2 years, given the situation in Europe and the clear, visible need to replenish stocks that have been sent to Eastern Europe. There's a strong commitment from many countries to meet the 2% of GDP spending as per the NATO requirements. That continues at the moment to be an even bigger focus. So we do expect that is a sector where we will continue to see a strong pickup in CapEx going forward.
Okay, the outlook for CapEx. Daniela Costa, Goldman Sachs, head of European capital goods equity research from the team there at Goldman Sachs, with the analysis and with the details coming through in terms of how we should be thinking about CapEx in the industrial space and the potential vulnerabilities around tariffs, but that need as well to build out the energy infrastructure of the US longer term. Thank you very much indeed. Still ahead, Anna Rosenberg of Amundi Asset Management on the geopolitics of the incoming Trump administration, how that new leadership team could reshape global geopolitics. Of course, in focus as well is the ceasefire between Hamas and Israel. We'll also get views in terms of how to think about the Ukraine-Russia conflict and Trump's role there as well. Anna Rosenberg coming up. This is Bloomberg.
Why should I want to invest in the pharmaceutical industry? Is it going to continue to grow as it did last year? And what about your own company? Do you think it's going to have good growth prospects over the next couple of years?
I think the reason to invest in the sector is the science. I mean, when you look again, if I go back into the history, for most of the last century, we were only giving people pills and small molecule drugs. Then we discovered that we had this whole world of biologics, and we could treat diseases with biologicals. More recently, we've discovered that we can reprogram your cells, we can edit the genome, we can use these RNA therapeutics to completely transform areas of medicine. Those technology areas are at their very nascent stage, and what we're going to find is they're going to open up whole new areas of growth from our business standpoint and a human health impact standpoint. We hope that as we work in our areas like cell therapy and RNA therapeutics, we will also be able to climb to a whole other level of market cap over time.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
Welcome back to Bloomberg Markets. I'm Tom Mackenzie. Happy Monday, everyone. A ceasefire between Israel and Hamas has begun. Hamas released 3 Israeli hostages yesterday in exchange for 90 Palestinians held in Israeli prisons. President Biden and President-elect Donald Trump both claiming responsibility for the ceasefire, with Trump set to take back the White House later today. He reportedly already has plans to keep the deal on track. Let's get more in terms of geopolitics, the analysis, and bring in Anna Rosenberg, head of geopolitics at Amundi Asset Management. Anna, I want to start there with the Israeli-Hamas ceasefire deal, as we said, is now underway. What is your level of confidence that this ceasefire can be sustained? We're in phase one. This is a three-phase deal. Can Trump keep this on track?
Well, I think it will be sustained in the next couple of months, absolutely, because primarily this is now on the Israeli side, and I think the Israelis have now embraced the deal, which I think was there was a lot of political opposition domestically in Israel to the deal, and now that has been crossed, there is not really any reason to block the deal from moving forward any longer. So I think we're going to see a lot of talks. Yeah.
Okay, a lot of talks. When it comes to talks and conversations, we know that there's been a call as well, and this has rippled through the markets today for the upside between President Xi Jinping and Donald Trump. He phrased it and framed it as a good call with the Chinese leader. How do we think about that? Is Trump going to be ultimately a moderating force against the hawks that he's lined up in his cabinet now?
Well, I think we have this desire by Trump to have good relations with leaders, with global leaders, with some leaders, and I think with Xi in particular. So we have a base case that we call a relationship that is on a decline overall, but it has rays of light along the way. And I think this is the kind of ray of light that we're seeing, right? Also, the invitation of Xi to his inauguration was a signpost that he wants to start things in a positive way first and foremost. But don't get this wrong. The direction of travel is clear. China is seen as a key strategic competitor for the US, and the relationship will continue to decline in the next 4 years, even though we have some good mood music between Trump and Xi.
So that direction is set already for the 4 years ahead, with rays of light. I wonder if Musk will be a ray of light, at least from China. Will he be a channel for China, ultimately, to Trump?
Possibly, yes, possibly. He has different interests, right? We have a lot of different dynamics, but there is a consensus in the US administration and all the advisors around Trump, which is that China is a strategic competitor and it needs to be contained, and this is how we need to look at it. So we're likely going to see tariffs over the next 4 years introduced to limit these dependency on China in strategic sectors.
Do you think there'll be gradual and moderate tariffs, as some of the reporting has suggested, or the 60% banner headline number that Trump has touted?
Frankly, the 60% headline banner doesn't make a whole lot of sense because you lock yourself in, right? There's not a lot of room for negotiations. So I would expect we're going to see gradual tariffs being implemented because, as I said, the goal is to strategically decouple, and you need to allow businesses time to adjust to that. And so it only makes sense to do this in a gradual way, right?
Before we let you go, is the Israel-Hamas ceasefire, is there anything within that template that can be applied to Russia and Ukraine for Trump?
Not necessarily. It's a completely different ballgame that we're talking about here. Russia-Ukraine is a much more complicated situation. For example, you don't have very good leverage against Russia, which in the case of Israel-Hamas, we had with the hostages.
Do you think they get a ceasefire ultimately in
I think
Ukraine?
It's going to be a lot more difficult than what is currently assumed. We may get a fudge much easier than a proper peace deal, which I think is very low likelihood, but it's going to take time.
Anna Rosenberg, thank you very much indeed from Amundi on geopolitics and the challenges ahead for the incoming Trump administration. Coming up, we're going to speak about the dominance of the dollar as Trump returns to office with Jeremy Stretch of CIBC. That is next on the FX markets and how to position. This is Bloomberg.
What about quantum computing? People talk about that. Is that something that I should be looking at investing in?
I've made a lot of mistakes, betting on these new technologies like AR, VR turns out to be not so big, 3D printing turns out to be not so big. My estimate is $100 trillion was invested in today's dollar in the PC, CPU-based infrastructure. All this is going to get ripped out to put $100 trillion or more in our GPU-based infrastructure. In that sort of quantum of numbers, I feel that the quantum computing is going to be very small.
You always are worried about, I presume, geopolitical events. So are there some geopolitical events you're worried about right now?
Yes. I don't know why, but for some reason, I love thinking about black swans. And at the office, everybody thinks I'm weird because I'm always thinking about what can go wrong. But underpinning the AI is the chips. And the chips, despite the CHIP Act, which I think was a good idea for the US, I still think like 80% or so of the capex of TSM is in Taiwan. And so at the leading edge, a lot of capacity is in one very small area. Forget that it's just in China, it's in a very small area. I think that's very risky.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Welcome back to Bloomberg Markets. I'm Tom McKenzie in London. Bitcoin surging today to a new record high ahead of Donald Trump's inauguration later today. The dollar weakening, a little bit of softness for the greenback. Trump's pick for Treasury Secretary Scott Bessent told a Senate committee at his confirmation hearing last week that maintaining the dollar as the world's reserve currency is critical to US economic health and the nation's future. So yes, a little bit of downside pressure on the dollar, benefiting some of the other currency pairs so far in the session. Jeremy Stretch joins us right now, head of G10 FX strategy at CIBC. Jeremy, the longer term view, at least in the last few months, since September, is dollar strength, of course, and pretty pronounced, up about 8% versus the euro since September, up about 9% versus the pound in a similar time frame. Is the dollar trades looking a little overstretched at this point? Is too much priced into the greenback?
I wouldn't say necessarily too much priced in, but you're absolutely right. We've seen a stunning rally in the dollar through the course of the last quarter of last year, and that really coincided with obviously US yields moving up very significantly as we repriced the sort of the broader narrative in terms of inflation and tariffs, and obviously that US exceptionalism has also become amplified as we've gone through to the end of the year. So we've seen that reflected in terms of positioning. So we've got obviously significant aggregated dollar longs overall, not quite as extreme perhaps as we were seeing in spring last year, but pretty close to it. So I think there's an opportunity, or there's a likelihood that we've seen a little bit of profit taking. But I think once again, as we start to see investors again thinking about the ramifications of trade tensions and trade tariffs, even if we're not perhaps expecting them to be in the executive order, the blizzard of executive orders today, but is an ongoing issue, then I think it is still the case that the dollar has resilience, but I wouldn't necessarily expect that to be resilience that lasts through the course of the year.
Okay, so the resilience is there. The long dollar positions, you're not seeing those being flushed out anytime soon. If you do have a view, maybe second half of the year, then you see a little bit of softness coming through, that starts to wane. What is the best way? What is the cleanest way of expressing that in terms of FX?
Well, I think in the short term, you obviously want to be you want to be short of those that are most exposed to tariffs and tariff risks. So obviously, dollar MEX, dollar CAD are our two sort of majors that are probably most susceptible to those sort of trade tensions and trade uncertainty in the nearer term. I think as we go through the second half of the year, if we do start to see a diminishment in terms of that US growth outperformance relative to elsewhere, then perhaps we can see some of those other majors performing a little bit better. So there's a lot of negativity priced into the euro as we speak. Now,
too much?
I think there probably is. I think we've seen another move lower, but I don't see an obvious and significant reason for our breakthrough parity. So if we do see another run down into a sort of a 102, maybe a little bit lower than that, I think that provides a little bit of an opportunity to start to load up on a slightly longer term trade on that predication that the US growth story will slow a little bit and the risks of the tariff uncertainties really playing out in the Eurozone are fully discounted, or at least largely discounted.
So what assumptions are you making about the ECB? Because markets are pricing in almost a full 100 basis points of cuts through the end of the year. Are markets getting ahead of themselves?
No, I don't think it is, but I think where we would actually differ from where the market is pricing in terms of the way the Fed is being priced. So I think that's where we think there is a little bit of mispricing in terms of the sort of the degree of action and
Fed goes further than markets expect, right?
We do. So we think that is the uncertainty. We think that's the mispricing that may well be relevant. So we're not necessarily concerned about an overt sort of inflationary spike, which is going to be amplified by the tariff story. Now, if we're talking about trade gradualism or tariff gradualism, that plays into that narrative to an extent, and I think there is that sort of discussion about the sort of transactional sort of nature, and we will see those trading partners looking at trying to alleviate some of those tariff risks. So I think there is still more scope to be proactive from the Fed than the market is pricing, and I think that's going to be the narrative that will play out. And of course, going back to that sort of very strong rally that we saw in Q4, as I say, that was predicated on US yields going up. If we start to see that sort of yield story starting to diminish and those spreads starting to narrow in, that reduces and removes some of that bid premium for the dollar as well.
What are you seeing in terms of positioning around the pound, given the challenges of UK assets in recent weeks?
Well, obviously, we've seen a significant paring back in the way the market's been positioned. Now, clearly, there's a lot of negativity now priced into sterling, and I think this week will be hugely instructive in the context of things like the flash services PMI, for example. Because if we see some resilience in that service PMI reading, and I think if you looked at some of the components in terms of discretionary spending within the retail sales data last week, that suggests that the backdrop wasn't quite as weak as
the headline numbers on retail were terrible.
The headline numbers were disappointing, okay. Absolutely. That was in terms of volumes, and there's always an issue about seasonal adjustments in terms of the ONS data. So I think I like to try and delve down a little bit more into the detail, avoiding the headlines, looking at some of that discretionary spending, which is actually still holding up reasonably well. And if you look at some of the data on the housing market, that's showing some signs of improvement. So if we can see this sort of gilt recovery extending just a little bit further, and we see a little more added back into the Bank of England curve in terms of rate cuts, then I think actually that's constructive for sterling rather than destructive.
That's interesting. So factoring more rate cuts, it was 65 basis points for the BOE now. But you think factoring more, our economists think you're going to get 100.
Exactly, and I think that too.
You don't think that degrades?
No, because I think that actually provides more of a growth trajectory and actually eases some of those fiscal challenges. Because, of course, if we think back as to why the gilt market was really getting roiled at the beginning of the year, that was because the Bank of England pricing had been pared back because there had been this fear about both inflation and all the growth narrative. If we start to put back in a little bit more in terms of the Bank of England story, we get more of a growth trajectory. We have less pressure on the fiscal side. We have less concern about another fiscal event around the OBR budget update on the 26th of March. So that actually provides a positive feedback loop. So I think just the simplistic argument of saying, well, it's all about where the Bank of England goes, I think needs to be sort of nuanced a little bit. And also you overlay that with the Fed story, and that does provide you with a little bit of opportunity from a cable perspective as well, once we work through this sort of current low in the cycle.
Very interesting. Before we let you go, anything looking particularly mispriced in the FX space at this point?
Well, as I say, I think there's a lot priced in terms of the sort of the rise of the dollar, and I think that still, as I say, leaves us mindful. I think also looking forward, I think it's going to be interesting to see how the BOJ plays out this week. Because
Friday decision.
I think it may well be the case that we end up with a dovish hike. So you end up with that classic case of, well, the BOJ have hiked, where do we go now? And actually we end up with dollar yen going higher rather than lower. So I think that's certainly worth keeping in mind in the context of the upcoming sessions.
Excellent. Jeremy Stretch, thank you, as always, for the analysis on this FX market. Of course, Jeremy Stretch of CIBC. Coming up, President-elect Donald Trump is poised to declare a national energy emergency, unlocking new powers to boost US production. We'll get more views and analysis in terms of what the implications of those emergency measures will be for production in the US and the global energy markets. That's coming up. This is Bloomberg.
David Weston. Join me for the next generation of Wall Street Week, telling stories of capitalism from business, markets, economics, tech, and climate. Each week, we'll go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
Above all else, it's a mission.
It's done nothing but grow immensely. To me, that's an extraordinary sign.
We can be the change that we want to see.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
Every single thing I've done, it's almost as if somebody has said it can't be done. I mean, I remember I was in a factory and I said, I want to go in the night shift. And they said, no, we don't put women in the night shift. I said, how will I be a successful production manager or personal manager of a factory if I never went into a night shift and knew how a third of my people worked? So in some ways it has fueled some of my determination. It's fueled some of my, okay, I'm going to show this is possible, a sense of, I'm going to go get on and do it. It also gives me courage because I feel sometimes I'm not just doing it for me, I'm doing it for everyone else who comes after me. And I always tell women who ask me for advice saying, put your hand up for the most difficult job. Put your hand up for things that are challenging. You know, go in there and lean into things that are difficult, that are challenging, because that's what gives you the greatest credibility, respect, reputation.
From our studios in New York and San Francisco, our expert hosts have the data and analysis from the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. Live every weekday, only on Bloomberg Television. Context changes everything.
Welcome back to Bloomberg Markets. I'm Tom McKenzie in London. The oil market is bracing for a period of uncertainty as it awaits the start of Donald Trump's second term in the White House. Prices steadying the session today after climbing to a 5-month high last week, with Brent currently hovering at around $80 a barrel at the start of the week. Checking the price right now, and you're seeing a print of 80.46 right now. Brent is actually down 0.4%. WTI at $77.72, down 0.2%. Joining me now for the latest on these oil markets is Bloomberg Senior Executive Editor for Energy and Commodities, Will Kennedy. Will, we'll start with executive action that we are hearing, reportedly, that Trump is going to enact around an energy emergency in the US. The US has been pumping more oil, I think, than ever in history under the Biden administration. Nonetheless, Trump wants to do more. What does that mean? What does it mean in real practical terms around additional barrels on the market that could come through as a result of this action?
I think you're right to say, Tom, that it's hard to see what the emergency might be. It's a time of American energy abundance, unparalleled perhaps in its history, and you can see that in natural gas prices, which are 4 times higher in Europe than they are in the US.
4 times higher?
Yeah. Wow. US is economy, one of its great advantages is cheap energy prices. But of course, what he's getting at is rolling back Biden's modest agenda to curtail oil and gas production and accelerate the energy transition. And effectively that means deregulating the oil and gas industry, allowing drilling in federal lands perhaps that were previously protected, rolling back the efforts to protect some US waters from offshore drilling. I think one important step he will take that people have been talking about a lot is ending the moratorium on new LNG export terminals. We expect that to be reversed very, very quickly, so that might be part of this. But I think most people think, as you rightly say, with oil and gas production near a record, anything you can do to encourage more oil production is pretty marginal.
Brent is up about 10% since the end of last year, since the end of December. What are the key drivers then to support? But is that a demand story or a supply story?
The most important driver are the sanctions that the Biden administration made in its dying days on the Russian oil industry. They were very material. They sanctioned another 130 odd tankers, and I think there's a real worry in the oil market that it will, at least in the shorter term, curtail Russian oil exports, forcing barrels to come from elsewhere. And we can see India and China, the biggest customers of Russian oil, making inquiries from suppliers in the Middle East because they're worried about it. The other thing is I think demand remains fairly healthy. The US economy is doing quite well. China demand, despite the well-publicized problems in China's economy, is relatively healthy in the opening weeks of the year, and it's been cold. And cold weather does drive oil demand in those parts of the world where people use fuel oil to fire their home heating.
Is OPEC Plus relatively comfortable with pricing at this level?
Yes, I think $80 is a better position, and people, of course, don't forget, were pretty gloomy about the oil outlook for the rest of this year. There was a lot of predictions there would be a surplus, and there may still be. Now, OPEC has continued to keep barrels off the market to keep prices relatively healthy and to keep the market in balance, and it looks like it's relatively successful. The Saudis would probably want oil closer to 180. I think that's hard to achieve, but for most of the group, anything above $80 is probably okay given the wider context.
And on China, you're suggesting that demand is possibly holding up better than many have suggested. How much of that demand is going through to the real economy in China versus being put into reserves? And how much of it is going to the refinery parts of the business as well out of China? What is the breakdown in terms of that China demand?
These are good questions. I mean, clearly demand in China has a lot of shorter and longer term issues around the economy and around the energy transition. And I think the point I was trying to make is that purchases look relatively healthy considering how gloomy people have been. The broader context is challenging. The switch to electric vehicles for cars and to gas for a lot of heavy vehicles and trucks is curtailing demand. But other areas are relatively healthy. People are still flying, and the chemicals industry, for example, is healthy. So it's a nuanced picture in China, I think.
Okay, well, thank you very much indeed for breaking down some of the key factors to be thinking about across these energy markets. We'll stay on that story and bring in some analysis right now as well from Amrita Sen, Director of Research at Energy Aspects. Amrita, let me start with a question that I put to Will then on this energy emergency, seemingly executive action that the incoming Trump administration is going to push through in the opening hours of that presidency. What do you think the material impact will be in the short to medium term? How significant is this for the global oil markets?
I think, look, the challenge is going to be the details, right? We know there's going to be some form of tariffs, including on Canada and Mexico. That has definitely given the market a bit of pause today. We don't necessarily think even if it's announced, it will be implemented because it's extremely bearish for U.S. refining. Midwest refiners are pretty much entirely dependent on Canadian heavies. Gulf Coast refiners, they don't really have another outlet as big a size as Mexico. And incoming President Trump, he does have a very, very smart and knowledgeable energy team. So I think that these will get watered down over time, but these are negotiating tactics. And Will mentioned as well in terms of overturning any kind of restrictions on federal land. I think that's more of a headline grabbing thing. At the end of the day, federal land accounts for less than 10% of U.S. production. And the reality is that U.S. production, particularly shale, isn't growing. And it's got nothing to do with what Trump can or cannot do with the geology. It's simply getting gassier. We are expecting about 400,000 barrels per day of oil growth, but it is starting to get just flatter and flatter. Even the likes of Chevron have come out and said next couple of years oil is going to be flat. If you ask me what the biggest difference is between this presidency that Trump's about to take versus the last one, I think U.S. production is going to be one of the biggest ones. Back then it was growing at 1.5 to 2 million barrels per day. Over the next 4 years, it's probably going to be flattish. All the growth is going to be in NGLs and gas.
That's really interesting. So you're going to get actually less growth in terms of oil production in Trump Mark II versus Trump Mark I. The growth is going to come through from gas. And Will talked about the possible changes to the rules, the legal structure around those export terminals for LNG. What is the significance for that then, particularly sitting here in Europe as a major customer?
That we are absolutely expecting the overturning of the pause the Biden administration had put. That will just simply allow more LNG exports if there is demand for it. We didn't necessarily expect any kind of project that was already in the works to be paused, but this is for newer projects. I am in Asia right now, and I will say the Asian market is definitely looking forward to that in terms of just being able to receive more LNG. Having said that, the tariffs are probably a bigger focus for the market right now for everything, all energy products. The market's also expecting tariffs on China and what that does to global growth, economic growth, oil and gas demand growth as well.
And we're about a week or so since those additional restrictions were put on on Russian oil. What is the impact that you've seen as a result of that in terms of barrels off the market as a result of those additional sanctions?
We haven't seen any barrels off the market yet. It is obviously very soon. And remember, there's a 45-day unwind period as well. We are expecting about 500,000 barrels per day to 1 million barrels per day of flows disruption to Asia. We are not saying that production will be shut by that much because Russia can just store the oil. It can put oil on water. So that we need to all be very, very clear about that. This is a trade flow disruption. And just my visits in China and India, I mean, you can just see refineries are scrambling to get alternative oils from kind of March onwards. We have seen the backwardation in crude curves. Dubai backwardation, the first versus the third contract is $5. It shows acute tightness in the market. So I think if anything, the price of oil, the flat price hasn't really reacted as much because people, some people believe Trump's going to overturn it. We, in fact, believe the Trump administration might actually tighten sanctions on Russia to bring them to the negotiating table. So I think once these things unfold, if anything, prices will probably go higher. But the disruptions are going to materialize, once you kind of have the unwind period, because again, 157 tankers sanctioned, insurance companies sanctioned, companies sanctioned. So it is going to be, it is the most material sanctions package since the war.
Amrita, how do you think about the mixed picture when it comes to China? We know that focus on electric vehicles. We know the build-out. We know the growth there. But on the flip side, the consumer is starting to look a little bit more confident. Some of those granular measures that were put in place around fiscal stimulus towards the end of last year seem to be coming through in the data, at least around the edges. How do you weigh all that up in terms of the support that China could provide for the oil markets this year?
So I was there for a week, and I will say sentiment is definitely better than what it was last year. Last year was probably the worst sentiment I've ever seen out of China. As you said, the fiscal stimulus is definitely helping. It's very slow, it's gradual. We have been calling for this. We have been calling for modest growth in Chinese oil demand this year, less than 300,000 barrels per day. That was the feeling we got as well. And remember one thing, even with the EV take-up, gasoline demand is still growing. Very small, but it is still growing. We are seeing more hybrid sales as well. So it's not all about the EVs. I think the weakness we saw last year was as much about the economy just doing really badly rather than all of it being about the green energy or the energy transition, I should say.
Okay. Amrita Sen from Energy Aspects, thank you, as always, for your analysis on these energy markets, joining us from Asia for that perspective. Coming up, a reprieve for TikTok, Trump giving the company a 90-day extension to find a new owner. There are complexities, though, of course, around the fate of TikTok. We'll get the details next. This is Bloomberg.
Bloomberg Invest is back. Join me, Shonali Basak, and the industry's most influential people for a comprehensive view across financial markets. Hear what a second Donald Trump presidency means for the economy, how AI is being monetized by investors, and the next big risks facing the private credit industry. Bloomberg Invest, March 4th and 5th in New York City. Register your interest to attend at bloomberglive.com/invest.
Bringing you up up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Rio de Janeiro, Brazil, and this is Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Welcome back to Bloomberg Markets. I'm Tom McKenzie in London. Just checking in on your markets right now. It's a flat session so far across European equities after a solid session in Asia, bolstered by that phone call between President Xi Jinping and incoming President Trump. Of course, Inauguration Day today, but also a holiday for Martin Luther King Day stateside. So European futures are going nowhere, or European markets are going nowhere right now. US futures pointing to gains of 0.1% when trading comes back on Tuesday. Euro dollar at 103, up 0.4% on the single currency, gaining from some softness in the dollar in the session. And Bitcoin punching through new record highs at 108,000, currently up 4.5%. On the biggest cryptocurrency by market cap. You have Trump and his wife Melania both issuing meme coins. Make of that what you will. But Bitcoin is currently at fresh record highs. Remaining on technology, the Chinese-owned social media app TikTok has had its service restored in the US after briefly going dark to comply with a Supreme Court ruling. The app's return coming after President-elect Trump promised an executive order giving ByteDance 3 more months to find an American buyer for the platform. Joining us now is Bloomberg's Senior Executive Editor for Global Tech, Peter Elstrom. Peter, this really was the focus of so many people's attention over the weekend of TikTok users as they saw the screens going dark, they saw the messages. The message has changed. Can Trump really save TikTok at this point? What is this 90-day extension going to mean in reality?
Yeah, there has been a lot of back and forth. We saw TikTok briefly go dark over the weekend for about 14 hours. Then it was restored after that. Just to be clear also, what restoration means is the company is continuing to operate. Its partner Oracle is continuing to operate. But Apple and Google have both made the choice that they're not going to put the app back in the App Store. So there's divided opinions about what exactly is going to happen. Trump has said he is going to issue this executive order and give the company another 90 days to be able to work out a deal. But it does seem like something of a temporary reprieve. Remember, the legislation passed through Congress last year. It was a bipartisan bill. It was signed by Biden. It required this divestiture. Either the parent company, ByteDance, had to sell the app or it was going to be shut down in the U.S. Now, under the terms of that bill, there has to be a qualified divestiture in motion to be able to get additional time to be able to do this. It's not clear that anything is in motion with ByteDance right now. Trump has said he wants to come in, he wants to work on a deal, but there's no evidence of progress so far.
Ultimately, is that how this gets resolved? That a Microsoft or an Amazon or an Oracle has to come in and make a bid ultimately? There's a big question mark about the algorithm as well, which we know China wants to hold on to.
Yeah, exactly right. It's not clear who the buyers would be here.
Right.
Trump floated the idea that maybe the U.S. government would take a stake in the app. It doesn't seem like that's really feasible at this point. ByteDance certainly wouldn't allow that. And remember that Beijing, the Chinese government that you covered for a long time and we covered for a long time, will not allow ByteDance to be able to sell any valuable technology, including that algorithm. So it gets particularly messy around there. And there's no sense that there's a deal in progress. There are not ongoing negotiations at this point. So there's a long road ahead, and it does look like a temporary reprieve at this point.
Okay, this story has much further to run, doesn't it? Peter Elstrom, thank you very much. The excellent breaking down the fate of TikTok for us and the questions that remain to be answered. Coming up, an exclusive interview with Admiral Faisal Wan Zahir of Khazanah Nationale from Davos. This is Bloomberg.
have to distill down what is the purpose of what you do, what is the purpose of your company, and make that very clear, and repeat it and repeat it and repeat it. And it's very clear what our purpose is to make money for the Norwegian population.
So why do you accept the job? You had a great life. I mean, you had a hedge fund that was doing very well. You were earning lots of money.
Well, I had a great life. I had a great life, but I still have a great life, and a really good life. No, I was very keen on that job because, one, I think it's one of the most important positions in asset management, right? I love asset management. In terms of the opportunity to develop that organization further, there were great opportunities, and I love organizational development. And then to do something nice for the country. I mean, these three things came together in the same job.
Why do you love asset management? Because you can influence and change the future, or is it being cleverer than anyone else?
Asset management is the most interesting job in the world, perhaps after being a journalist. Why is that? Well, everything you eat, drink, drive, all these kind of things is made by a company. You need to understand psychology in terms of the companies. You need to understand the corporate culture of companies. And then these things change all the time, right? You have the macroeconomy is changing, interest rates are changing, currencies are changing. And, the data points are just changing all the time. You just couldn't invent a more fascinating game, even if you tried.
There is this real momentum from Wall Street. We are basically deep in the European earnings season. Take a look at how we're faring when it comes to Asian markets.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
It is 11 a.m. in London, 6 a.m. in New York. U.S. markets are closed for the Martin Luther King holiday. Welcome to Bloomberg Markets. I'm Tom McKenzie. Here are your top stories. It is Inauguration Day in the U.S. President-elect Donald Trump is gearing up to be sworn in for his second term in office. Bloomberg has learned that he's set to declare a national energy emergency to unleash domestic production. TikTok restores its U.S. service after Donald Trump vows to delay enforcement of a ban and grant another 90 days for the Chinese app to find a U.S. buyer. And a ceasefire has begun in the Israel-Hamas war. 3 Israeli hostages were released in exchange for 90 Palestinian prisoners. Let's get the market check right now, this Monday morning with Bloomberg's Valerie Teitel. And the focus is on softer dollar, as well as some of these measures coming through, at least planned, proposed, reported measures around energy. Let's start with dollar softness and what that tells us, given that the incoming Trump administration, particularly Bessent for Treasury Secretary, yet to be confirmed, has suggested he wants to see a strong greenback.
Yeah, no, for me, it's all about what part of the market is at risk for disappointment today. And my eye goes straight to the U.S. dollar. We've had such a narrative over the months building up to this inauguration about dollar strength on the back of these tariffs. And if instead from Donald Trump today we get a focus on domestic issues, on energy policy, on immigration, and instead, he leaves this tariff, the international trade part of his administration, if he leaves that quiet, if he doesn't give us new details, I think the U.S. dollar, specifically looking at the Bloomberg dollar index right there on screen, is ripe for some disappointment to the downside. Now, the dollar has risen 8% since that Trump trade began back in September, but it's still a favored macro trade, Tom. If we look at CFTC positioning data when it comes to hedge funds, every week it seems to be increasing and increasing in dollar long positioning. So that's the part of the market I think is most vulnerable to being upset today.
Yeah, Jeremy Stretch, FX strategist, of course, at CIBC, telling us he's not seeing any signs that those long positions are being washed out yet for the dollar. The dollar up about 8% versus the euro since the end of September, versus about 9% versus the pound. Both of those currencies getting a bit of a reprieve. Euro dollar currently up 0.4% at 103. So not a parity yet. And that debate, of course, around the single currency continues. Bitcoin, meanwhile, wow, another fresh record. Is this just as a result of Melania and Trump himself coming out with memes? What is going on? 108 right now.
Well, these political meme coins have seemed to only accelerate the momentum and the positive footing for cryptocurrencies. Bitcoin reaching a new record high. But this maybe could be the asset class that we see some more positive momentum going into today. If any of those executive orders that Trump is expecting expected to sign within hours of being inaugurated. If they focus on making cryptocurrencies a national priority, if they create a Bitcoin stockpile or create that crypto advisory council that he has spoken about, that could be another positive momentum for cryptocurrency assets. But yes, very funny to think that he spoke that he would be telling us these 100 executive orders in that speech. He could be speaking for quite a long time if he does go into detail on each of those.
That is a fair point. We'll see how that process unfolds. Bloomberg's Valerie Teitel on the markets with a focus on the dollar and a fresh record for Bitcoin. Valerie, thank you. Let's get back to the World Economic Forum in Davos, Switzerland, where Bloomberg's Haslinda Armin is sitting down with the managing director of Casana Nacional. Haslinda, good morning.
Hey, good morning, Tom. It's about trade, Trump, tariffs, of course, as you alluded to earlier, how those factors are shaping, influencing conversations here and investment decisions. Well, you talked about Casana. Dr. Amiral Faisal Wanzahir is with me right now. Good to have you with us, Faisal. I mean, we talk about the uncertainty of Trump's policies. I mean, how is that shaping your own investment decisions?
Well, first, I think now we know who the president is, so that helps a lot. But when you look at the policies, you've got less regulation, you have low tax rates, and I think you want a low energy price as well. Now, that is actually quite interesting because it does show that rates may not come down a lot sooner. I think rates could be there for longer, and therefore you're going to have a strong dollar going forward, at least for this year. Looking at investments, it does seem to say that there's U.S. as a market seems to be a bit more attractive given the growth, and it's we're running a budget deficit about 6 to 7%. So you have a lot of growth opportunity in a strong dollar. So it does look like an interesting market for investments globally, but it does tell you that for the other markets, it's going to be tougher. Now, in Malaysia, we do rely on trade a lot with China. It's the largest trading partner. And I think they're going to be impacted quite a bit, especially if the U.S. imposes additional tariffs. So as we navigate, I think we're still focused on diversifying our portfolio. But here's the backdrop.
You say U.S. is looking attractive. What's looking attractive to you? Is it still a Mag 7 play for you?
From public markets perspective, it is.
It is still Mag 7.
Well, where do you go, right? But having said that, I think we don't just invest in public markets. We do invest in private markets as well. And that's actually quite interesting because, at least the markets will be open for exits. There's more opportunity for consolidation. So these are areas that, there's various asset classes still look interesting in the U.S.
You've been wanting to have greater exposure in international markets versus your domestic market in Malaysia. How are you looking right now? Is there reason to think that your 60-40 ratio would change in any way?
Would like to maintain that, at least in the longer term, 60 to 40. Having said that, we are diversifying. We have been diversifying our portfolio. And we've been moving our portfolio towards the developed markets, particularly the U.S., and still more room for that. And I think that has benefited us in the past, and it's looking the same.
How does diversification look like?
Developed markets, public markets, as well as asset class. But then when you get developed markets, is it Europe, is it U.S., or is it Japan? And it tends to gravitate to the U.S. Yeah.
And in terms of cryptocurrencies, we just heard from Tom earlier how, it's risen to $109,000. I mean, is that an asset class you might consider, given growing institutional interest already in cryptocurrencies, Bitcoin in particular?
Yes, I think if you personally invested in it, you'll be doing quite well. But as a fund, we look at the depth of the market, depth of the currency in terms of the size of it, and I think it's still a way to go, and because of that, you could see more volatility. So we're quite conservative. We are monitoring Bitcoin, cryptocurrencies, or at least the players around it, as an opportunity. But for investment there, I think it will be quite a while before.
What do you mean? Players around it? Are you talking about blockchain, for instance? What exactly are you referring to?
I mean, it could be blockchain. It could be those that provide distributed ledgers, or at least around the market, the decentralized market. Yeah, so that's what I'm looking at.
Understandably, volatility is an issue for you, but we also have Trump in power. He's pro-regulation. He's pro-crypto. Isn't that enough to perhaps, generate some interest in it? And what would it take then?
I think it would look at the depth of the market, the size relative to other currencies or other asset classes, we have to look at the market, the depth of it. Yeah, and right now I think not yet.
And in terms of the risk in the asset management space, what would be the biggest risk out there?
At the moment, it's looking at where do you park your money, because you have an allocation strategy which tends to be more short term, but what happens in the long term? When I say short term, it comes back to the current policies where people are looking at geography rather than asset classes more in terms of where you apply the capital. But at which point will it pivot? At which point will you really have to look at your asset allocation on a longer term basis? So I think that's something that we do have to look out for. And sometimes when you miss it, you miss the wave. Yeah.
One of the big themes here in Davos is AI. We know that when it comes to sovereign wealth funds around the world,
yes,
they've pumped in billions and billions of dollars into AI. Is that still a big theme, or is that graduated to quantum computing, for instance? I mean, in terms of themes that you're investing in, what would they be?
AI, first of all, we don't invest in industry themes, but AI is a sector that we are exposed to.
How big is that exposure?
Well, from our exposure to public markets, Mag 7, when you actually invest in the US, so you're already exposed in that perspective. And then we are looking at some of the private market investments that innovate around AI. Whether it's parties looking at how to train the models better, and those who actually find it do more efficiently. So we are looking at that space as well. So really around the AI space. And of course, AI goes beyond that. I mean, you're looking at cloud computing, so you're looking at data centers as well.
Faisal, let's talk about the domestic space. We know there's been quite a bit of resistance when it comes to the privatization of Malaysian airports. The deadlines have been moved again and again. Eventually, the conditions have been weakened. I'm just wondering, where are you with that? Why the delay? What are some of the issues?
Well, it is being done by a consortium, which is one of our companies is in that consortium. Now, I don't see a big issue in terms of extending it. I think that's quite typical, where you actually do a deadline so it actually encourages people to actually accept. Because face it, and some people that we speak to later on and say, oh, yeah, I didn't know about the deal. So again, it's actually getting the parties coming in. Now, I think this is something which is actually pretty interesting. I think the consortium's offer is the highest ever price since IPO. So that's actually quite attractive. And I think it'll be a matter of time before they will get it done.
A matter of time, but does it necessarily mean that the process now would be smooth sailing?
The process is what happens after. I mean, in our view, it's the value creation post any takeover, because once you put in a lot of capital as the highest price ever since listing, and you have to create value beyond that. So I think in terms of smooth sailingness, I think that's a big challenge.
So what is the plan for post-privatization, and how involved will you be in decision-making?
Well, the consortium, as you know, one of them is our companies, which is Group. So they together with EPF, as well as GIP, are the main players in this, and of course working hand in hand with the government. Now, I'll give you an example. The amount of investments that other airports in the region has made, Indonesia has done about 8 billion, Thailand about 7. Malaysia in the last 5, I'm talking about the last 5 years, Malaysia has only done about 1.3. This is ringgit, okay, not dollars. And when you see that, that is showing the airport the whole system of airports is really underinvested. So there's a lot more capital, especially for technology, for IT, improving processes, a lot more to be done that can actually enhance it. There's also a lot more strategy in terms of how could you attract not randomly whatever foreign carriers, but really working with the local carriers, whether it's AirAsia, whether it's Malaysia Airlines, with Batik, to see how you can actually create that hub where you have international passengers and regional passengers coming in.
Well, I guess part of that decision depends on how the shareholders feel about it. Are you confident that shareholders will not withdraw their acceptance to it?
Well, if you ask me, I think like I said, it is the highest price ever. As highest price ever, and going forward, when you have an institution, a company requiring a lot more investments, that will impact dividend policy. So if you're investing in it for a particular investment strategy, and going forward it will be different, I think that's something that you really have to consider, whether you want to see it that way.
Before we let you go, just one final question. There's been such a turnaround in Malaysia's economy. There's so much interest. Investors are coming in. We're seeing a resurgence in the dollar as well, the best performer in Asia last year. Do you think that is sustainable? It was quite a turnaround in a very quick time.
Well, the fundamentals are there. Firstly, you have foreign direct investments. You have the funds investing domestically. You have consumption as well, where you have more disposable income for I guess the civil service as an example. So you have the right ecosystem fundamentals that can actually push it through. Yes, the macro global environment is a bit tough, but it is resilient enough. You know, when you have a country which is, 14% of exports to China, 12% to US. In other words, it's right there. It has a strong domestic economy. I think it has a strong momentum to do well.
All right, confidence there. Faisal, thank you so much for your time. Dr. Amirul Faisal Wanzahir, there you have it, MD of Khazanah Nasional, which is the sovereign wealth fund of Malaysia. And Tom, of course, we're awaiting for Khazanah to reveal what their returns are for 2024, but what has it? It's going to top 5.7%. So ain't too shabby. It could be higher than that, I think.
All right, not too bad. Excellent conversation. Has Linda Arman on the ground for us at Davos with a view there as well on Mag 7 and the ability of US stocks to continue to reward investors. Has Linda, thank you. Coming up, global stocks rising, Bitcoin surging to a record high ahead of Donald Trump's inauguration later today, of course. We're going to catch up with Gaurav Malik of Palace Capital Advisors next. Out of position in these markets. This is Bloomberg.
Is influencing global markets.
Technology is driving business across Europe.
Companies in Asia are betting on tech.
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have Take-Two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live every trading day. Balance of Power. Live around the world only on Bloomberg.
Welcome back to Bloomberg Markets. I'm Tom McKenzie in London. Investors bracing for a slew of executive orders after Donald Trump is sworn in as President of the United States in just a few hours' time. Gaurav Malik of Palace Capital Advisors writes, quote, "We are concerned about the prospect for a continuation in the rise of bond yields under the new administration. We are concerned about the potential for a steep rise in yields amid expectations of more government spending and tariffs over the coming years." Gaurav Malik joins us now. Gaurav, thank you for your time. There is a view widely held that the equity markets provide a course correct for Trump. Do the bond markets provide the same kind of guardrails to this incoming Trump administration?
I think it's a bit more challenging for the bond markets, frankly. Bond markets are torn between fiscal and monetary policy. So on the fiscal side, there is still a lot of uncertainty exactly as to what that's going to shape up to be. The other thing, I've been covering bond markets for like 20 years. I think this is about, leaving aside crisis periods, is about the most volatility we've seen and the most that investors are hanging on to each and every release to determine direction of markets. And we've seen significant moves in terms of rate expectations, in terms of the number of cuts that are going to occur. Last time I was on Bloomberg, there was a question to me about the fact that what if we start seeing hikes and rates occurring? So I think there's a lot of uncertainty around bonds right now, more so than we've seen in the long term.
How much assurance can markets take from the phenomenon that we see repeatedly, that when you get to a certain level on yields, 6% or above, investors, domestic but mostly international, come in, they want to lock that yield in, that caps yields ultimately at around those levels? Is there not some kind of comfort that we can take as investors from that?
I think investors can take comfort in that, but the reality is that the market of the last 10 to 15 years has been used to ultra low yields. So, 5 or 6 today feels very different from 5 or 6 if you were looking in the 2000s or going back in time to the 1990s. So 6% does feel a lot. Yes, investors would come in at 6%, but I think that once you start seeing the 30-year or the 10-year go past 5, I think you're looking at a different environment, in my opinion. Markets are going to be a lot more concerned at those levels. Investors are just not used to it. It would suggest that, our investors beginning to reprice the credit risk of the U.S. So some of those fears will come into play, which will create some challenges for equity markets. But you're right in saying that bond investors would come in and say, well, may as well lock in at the 6% level.
But until that point, you see yields. Can we assume that you see yields grinding higher from here with what, 460 at the close on the 10-year? Do you see a grind higher in yields in the weeks and months ahead?
I think that, we have a range of 4.5 to 5 for the 10-year. A year back, I was thinking more like 4%, but now it feels like 4.5 to 5. Inflation, as you know, has not been as tightly controlled as we'd expected by now. So throw in, if you think about, say, inflation coming in at 2.5, 2.7 at that level by the end of 2025, throw in rates being around, call it another 100 basis points higher, so maybe like 350 to 400, add in 80 basis points for term premium, you're looking at 480. So 450 to 5 seems like a reasonable range to expect. And that, in my opinion, would be reasonably rational to have, given all the risks that are there with the U.S. economy as well, and of course the policy uncertainty. So I think that 4.5 to 5 seems to me like the right number. I think I'd be a bit more concerned if it goes past 5. Past 5 would signal a little bit of a less control that the Fed has on the pathway trajectory of inflation. And as I said, the fiscal situation would be bothersome too, because it would indicate that's greater demand for premium for the risk of U.S. defaulting.
So 4.5 to 5 is the base case for you, but there's a risk above 5. Which parts of the equity markets are most vulnerable to yields plus 5%?
Well, I mean, you have a lot of spaces. I mean, clearly you've seen the mortgages rate climb up to +7 already, and that's created jitters in the housing market. So I think the slow grinding recovery of the housing market comes into question. Consumers are going to feel a little bit more pressure. Not a bad environment, clearly, for banks, given aside, of course, the fact that credit becomes a bit more concerned, and you have to think about delinquencies in that area. But at least net interest income goes up. I don't think it impacts the, call it the Max 7 that much. I think the AI bandwagon is tied a lot to cash-based, somewhat equity-based financing occurring in those segments of the market. So I think that segment does indeed continue and look reasonable in those circumstances. So I think that's where we would be more interested in. So we'd be probably shifting and thinking more about some of those sectors in the marketplace which can actually give you growth at that level, have the ability to self-finance their investments. Those would be the most attractive areas for us to look at. The last thing I'll add is that the industrial and defense complex is going to continue benefiting from long-term changes on a global basis in terms of defense spending, in terms of insourcing manufacturing, nearshoring manufacturing. I think those trends would continue unabated, even in the face of the higher yields.
What is your regional bias at this point then, Gaurav? I mean, particularly when it comes to defence spend, there's a view that Europe is going to have to spend even more than it has, particularly under pressure from Trump, to ramp up spending around defence. You have the valuation proposition in Europe. Is Europe, given the I mean, equities have held up pretty well, but in terms of the macro data, is Europe in any way compelling at this point?
Europe is a bit more challenging. I think it's an environment you have to be, it's an area in which you have to be selective. So, I mean, there are some, let's think about like the macro things that could make a difference. I do think the US is leading Europe in terms of AI investment. So leaving aside the max segment for a second, if you look at the average company, the amount they're investing, I think there's good reason to believe that Europe will accelerate that as we look at 25 and 26. So that becomes interesting to think about from a European perspective. Any improvement in China's macro environment, so again, thinking about the luxury sector, those areas will benefit, and again, a much bigger trading partner than the US. So things that are positive for the Chinese economy, the incremental spending that's occurring likely to occur in AI, a renewed focus on rebuilding, reconstruction, innovation, are some reasons to be optimistic. I think the issue I have with Europe is that, again, I go back to various points in time in the last 20 years where there would be a reasonable case to say valuation is compelling, we think earnings growth is going to be there, we think macro environment is going to be better, and then you get disappointed. So, so that's our challenge as we think about Europe within that context. So selective investments, thinking about investing, I mean, mostly we invest in Europe through other managers, as in mutual funds in those areas. But again, looking at selective funds, selective areas where there is that combination of quality growth, some ability to take advantage of these themes around AI, I think those would be the areas that we'd be quite interested in. The defense sector is a bit more challenging.
Gaurav, where do you, if you believe in that AI spend continuing in 2025, where do you invest beyond Mag 7 if you want to widen the lens beyond that grouping?
I think the most interesting areas are indeed in the private side more than anything else. So there are some public entities as well that are interesting. But I think that in the near term, what makes sense is that we know factually Mag 7 and companies are going to invest in AI infrastructure. So again, still the data center theme, electrification themes, those remain very exciting for us. We also do like the incremental investments that are occurring in the venture side on new apps, new things that can power through innovation within smaller companies, within the sector that could do with some more automation. So those areas also are interesting, but I think the immediate place is going to be the electrification. The utility needs is still massive within that segment. And again, data centers continues to be an area that will likely power through as we look at 25 and 26. I think one area for us is really what's the benefit that comes with AI, right? So that becomes more like a 26 story.
Gaurav Malik of Palace Capital Advisors joining us from Boston on Inauguration Day, Martin Luther King Day. We appreciate your time, views on these markets. Plenty more coming up, including details on that ceasefire between Hamas and Israel. This is Bloomberg.
Do you think it'll be the case where someday you will be an investment committee or I'll be an investment committee and we just apply AI, decide whether it's a good deal or not, or we're not going to be there anytime soon?
I don't think we'll be there in the near term. And David, because being on investment committees, there's the analytics of the math, there's the people, and then there's judgment. So analytics of the math, I think AI will help us get way more refined. Right now, we have analysts building models upon models. Our typical investment memo is 86 pages. So we could refine that down very, very seamlessly to pieces. The people aspect to it, to make a judgment call on, do I believe this entrepreneur is going to go the next mile? Do I believe that the background of the entrepreneur, who they are, what they stand for, their values, their family, that's the harder one. I think AI is going to take some time to get there. And then the final piece ends up being judgment. And I don't believe we've seen anything yet that gives us a sense of judgment that we're able to apply.
Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg is covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and the ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
Welcome back to Bloomberg Markets. I'm Tom McKenzie in London. European stocks are flat so far in the Monday session. US stocks, of course, closed for Martin Luther King Day. In terms of the pressure on some parts of the European equity market, interestingly coming through for utilities and renewable energy companies. This on reporting that incoming President Trump is going to declare a national energy emergency, presumably to benefit the carbon industry and potentially pressure renewable energy. So question marks again over the Inflation Reduction Act and that policy going forward. Activity in the FX space, the Bloomberg Dollar Index currently down 0.2%. S&P futures, by the way, pointing to very modest gains when European equity markets reopen on Tuesday. Euro dollar at 103, so rallying 0.5% on the single currency, benefiting from softer dollar so far in the session. And Bitcoin punching through fresh record highs, currently trading at 108,000 on the biggest cryptocurrency by market cap, up 4.5% in the session. Let's get to the Middle East right now, where a long-delayed ceasefire in the Israel-Hamas war has begun, with the release of 3 Israeli hostages and 90 Palestinian prisoners. We do have Oliver Crook on the ground for us. We do have some connection issues. That happens, of course, with live TV. But we know that ceasefire, after some wrangling and some uncertainty, did take hold shortly after the planned time frame for that on Sunday. We know that there has been that prisoner swap as well. This is the phase one of 3 phases of a hoped-for ceasefire deal that pushes further into the future. Let's get the details live on the ground for us. Oliver Crook, we've re-established the connection. Look, Ollie, what is the mood on the ground? What is the latest in terms of this ceasefire and what the two sides have been doing?
Yeah, so listen, Tom, I mean, it's been a very, very tense 72 hours here in Israel, and you have to imagine all around the region. Really, since the ceasefire was first announced on Wednesday night, there were a lot of snags that were hit across the way, even into the morning of yesterday when the ceasefire was supposed to take place at 8:30 local time. That was delayed by several hours because we understood the Israelis weren't getting the hostage list that was part of the agreement. They eventually got it, and in those few hours of the delay, Tom, the fighting continued in Gaza. Several people were killed, but that ceasefire went into effect yesterday at 11:15 a.m. And so now it has held, Tom, for more than 24 hours, that ceasefire that has been, ages in the making and is supposed to last for at least 6 weeks. And if they do not come to a resolution to continue to stage 2 of this sort of proposal that's been laid out by the Qataris, by Egypt, by the United States, they could even extend that, but even further. But Tom, the state of play now is over the next few days, what you're going to get is a few hostages released every few days. In return for that, you will have prisoners from the Israeli prisons being let out to the Palestinian side. We had the first 3 arrive yesterday. And the other thing that we've been watching very closely, Tom, and this is where we spent our morning, is at the border crossing at Kerem Shalom. That is the border crossing where most of the aid trucks from the Israeli side will be flowing into Gaza. I spoke to the manager of the checkpoint a little bit earlier. They said that they expect that to be 800 trucks crossing into Gaza today, 600 of which will be crossing just behind me at that checkpoint. And just to give you a little size and scope there, Tom, the average number of trucks that have been crossing into Gaza, according to the aid group I spoke to yesterday, has been about 50 a day. That's going to be 800 today, and what they would like to see is to get that number closer to 500 or 600 a day at the same level that was happening before the attacks on October 7th.
So that is the surge in aid, and that is the expectation around the release of hostages in the days ahead. What is the expectation, Ollie, on the ground there in Israel for us, that the politics of Israel will allow and enable this ceasefire to be continued into phase 2 and phase 3?
Yeah, Tom, as with so many facets of this war since the beginning, there are so many players, there are so many pressures that are being sort of heaped on and that really all need to align in order for this ceasefire to go into the second phase. The first of which is obviously both Hamas and the IDF respecting that ceasefire. That is something that's going to be closely monitored by a group of the United States, Qatar, and Egypt in order to make sure that that happens. Beyond that, there is, of course, the question of internal domestic Israeli politics, Tom. We had one of the ministers, part of Prime Minister Netanyahu's cabinet and coalition, resigned yesterday morning in objection to this ceasefire deal, meaning that Benjamin Netanyahu only has a majority of only 2 votes in the Knesset, in the parliament here in Israel. But of course, the other sort of huge factor here is whether or not this war will resume after 6 weeks, and that will be largely, Tom, dependent on basically also what Donald Trump's posture is going to be, the new soon-to-be president of the United States in just a few hours, who has been instrumental. You talk to anybody here in Israel, 1, they're extremely supportive of Donald Trump, and 2, they all see it really as this is like his architecture, his pressure that made this happen when it happened.
Yeah, that is a fascinating dynamic, isn't it? The role of Trump, the role of Trump's team in getting this deal across the line. Oliver Crook, on the ground for us in Israel, close to the border, with all the details as that ceasefire continues to hold. But question marks, of course, in terms of whether it can be sustained beyond that first 6-week period. Ollie, thank you. Let's get more analysis on geopolitics right now. Very pleased to say we can bring in Terry Haynes of Pangea Policy, joining us for more details in terms of the ceasefire between Israel and Hamas, but a broader look as well at some of the geopolitical tensions and challenges that, of course, will end up on the desk of incoming President Donald Trump. The inauguration, of course, later today. Terry, thank you for your time. Let's start on the ceasefire and what your expectations are that this will be sustained beyond the initial 6-week policy. Can Trump keep this going?
Good morning, Tom. I'm not optimistic that Israel and Hamas and the region can keep this going. First of all, Trump will try his best to do that, but I don't really see it. You've got, Israel is thankful today, as Ollie said, on edge. But you've got a situation where a large part of the Israeli government and population want to continue the fight against Hamas. Hamas is way down, but they're not out, and they're trying to show that as much as they possibly can. Taking a step back, you've got the Iranians, and you've got even China, which is supporting and funding here. So you've got a situation where and the Houthis and the proxies and the like. So you've got a situation where there's all kinds of incentives for people to want to continue to fight, to agitate, and so on, and not a lot of incentives for everybody to lay down their weapons. So I think even President Trump will find this difficult.
Terry, what is the Iranian incentive to keep going, given that their proxies, Hezbollah, Hamas, and the Houthis, to a lesser extent, have been undercut, have been challenged, have been constrained by Israel?
I think the answer comes in your question. The Hamas attack on Israel happened by the judgment of a lot of people, in part because they saw peace coming in the region from Israel, the Saudis, and others, and they wanted to do everything. They wanted to do everything they could to undercut that. Iran's interest is in continuing to undercut that. Firstly, secondly, let's remember the threat in the background of a potential Iranian nuclear device. So I would judge that Iran wants to continue to agitate in the region. The agitation, in part, continues to prop up its own regime, and they may well be buying time for a change weapon, if you will.
Okay, and you touched, Terry, it's interesting, you touched on China and China's role in terms of funding and its proximity to Iran, certainly taking a lot of Iranian and Russian oil as well. What do you make of this phone call between President Xi Jinping and incoming President Trump? What do we make of the China policy of this incoming government, given that it seems Trump wants to have some kind of relationship with Xi Jinping, and yet he has surrounded himself with China hawks? Maybe Musk is the exception.
Well, I think the lesson you can draw here is that Trump's China policy will be, and I think already is, kind of a classic carrot and stick. If you look at the testimony of the cabinet officials last week, for example, what you saw and heard was China hawkery, as you say, and Trump's interest in wanting to confront China everywhere. At the same time, Trump is trying to emphasize deal-making, cooperation, conciliation where possible, and respect for the competitor/adversary. So without which Trump judges you can't make deals. So there's going to be both of those things. And I keep saying on other matters like tariffs, it's not going to be all one, it's not going to be all the other. And here, I think it's on China, it's very clear it's going to be carrot stick.
Do you think markets are kind of pricing in that carrot and stick approach at this point, Terry? How fair do you think pricing is on this? I mean, how vulnerable do you think the markets are to that kind of volatility?
Well, I think what the markets don't quite understand yet is the markets are very focused on economics and tariffs, for example. What they don't quite get is the tariffs are a geopolitical tool, have been a geopolitical tool for years, but they are unabashedly a geopolitical tool with Trump. What the markets don't get more broadly is the degree to which economic policy in the Trump administration is going to be influenced strongly by both geopolitics and national security. That's something they haven't seen since the Cold War, and that's kind of a new thought. And to give you one example, the degree to which defense spending will be up, but spending for and support for the defense industrial base will be up, I think is a little bit unanticipated. Also, I point to your conversations a minute ago on energy. The emergency nature of Trump's energy focus is unabashedly national security, and his advisors are already saying so.
Okay, so that's a national security play in terms of trying to get more barrels out of the ground on energy. What about, in terms of the tech? I mean, you talk about, it's interesting. You talk about the spend around the defense industrial space, the embrace of tech as well. You say is a national security theme that we should be thinking about. Arguably, big tech, or at least tech in some places, has reason to want to see the defense industrial base give some space and open up to some extent for some of those tech players to have a greater role in terms of the build out and spend on defense. How do you think about how big tech and technology comes together with that defense spend?
Well, I think big tech generally is looked at as one of the prime assets that the United States has in this long competition with China. And Trump is already talking about, I mean, publicly already talking about the need to ramp up energy, for example, to continue to support United States AI work. So that alone, I think, gives you a pretty good hook into exactly how this new administration is thinking about the marrying up of all kinds of United States assets, both in its advantages, and also thinking about ways to rectify the disadvantages that the United States has. One of the things that's going to take is, I think, is probably a little bit of a de-emphasis on traditional antitrust for tech, and a little bit more understanding of exactly what they bring to the table, how they bring it to the table, and how their strengths can be marshaled.
Terry, are markets underestimating the power of Trump in these 4 years? We have the trifecta, but you say actually his power is going to be constrained.
Well, I think his power is going to be constrained. What people forget here in the kind of the run-up to the election is that Trump comes into office as an instant lame duck. I say that with no disparagement. It's just a matter that he cannot run for re-election again. So these are his last 4 years. That has a practical political effect, which is that he is less able to influence, to pressure Congress, for example, to do what he likes. Congress always has the lead role in coming up with details of legislation, tax laws being, perfect example of this. But there's a situation where, Trump has a little less political power going forward, but his ability to persuade remains large. And he can maximize that advantage if he brings the public with him, if he continues to educate the public on what he's doing and why he's doing it, and tries to bring them along with him, and that will actually be a more effective counter to Congress and help him get a lot of his actions through in Congress than if he were to take a conventional stance, I think.
Terry, a lot of expectation that he's going to be policy friendly to the crypto space. You're seeing that playing out again today with fresh records for Bitcoin. Is there a mismatch between what is actually going to be achieved on the policy front around crypto versus what we're seeing in the markets?
I'm very much a crypto policy naysayer, by which I mean, as positive as everyone is about Trump and crypto, I'm the one just kind of urging people to get back to earth. Trump has basically done two things. One, he's given them a sort of advisory council, which in Washington is the kind of the equivalent of a participation trophy. And secondly, he's put out this meme coin, which I think of as more of a kind of a souvenir along the lines of some of the other things that he does. Crypto, the fact in Washington is that, crypto industry has been splashing a lot of money around, but money doesn't automatically translate into influence, and it certainly doesn't automatically translate into a meeting of the minds in Congress on what approaches have to happen and how they have to happen. They're nowhere nearer that today than they ever were. And secondly, industry where you've got the potential for continued criminal activity, this makes things more difficult.
Terry Haynes, always appreciate your insights. Really fascinating thoughts as we weigh up geopolitics, but also the crypto space and implications of policy coming through from Trump, of course. Of Pangea Policy, Terry Haynes, thank you. Coming up, we're going to head back to the World Economic Forum on the slopes of Davos, of course, Switzerland. Bloomberg's Jemana Besechi will be joined by Mubadala, Deputy CEO. That conversation coming up. This is Bloomberg.
You missed it on Bloomberg, the China show.
What's been the sentiment? What's been the reaction to this U.S. election outcome on the ground?
They were pretty much ready for Donald Trump. There was a high expectation that he could return to the White House.
We have dealt with him before, and after quite a few years, China simply is better prepared, and China, psychologically speaking, is much more prepared in dealing with him again.
Probably are fully prepared for Trump to impose higher tariffs on China.
What's the tone as they were talking to really a global investment?
Right. The openness of China, including the capital markets, Hong Kong being an international financial center, will be extremely important in channeling global investors.
Don't miss the China Show live every weekday.
on Bloomberg Open Interest.
11 years ago, I bought a Bitcoin on this set.
It was $800.
Yeah, $800, but I spent
Which
the
is a lot,
Bitcoin
by the
on
way.
beer and groceries and gas and video games.
And
I wish I had
hugs.
kept it. I wish I would buy a Harley today if I had.
Yeah, but you
that
probably wouldn't
Bitcoin.
be a TV anchor, and you probably wouldn't still be on this
True.
set. And what a joy that
I'd
is.
be my feet in the sand and the beer in my hand.
Don't miss the next Open Interest.
Bloomberg brings you breaking news 24 hours a day, powered by 2,900 journalists and analysts in more than 150 offices across the globe. Bloomberg Television. Context changes everything. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Welcome back to Bloomberg Markets. I'm Tom McKenzie in London. Political and business leaders from around the world are gathering in Davos, of course, Switzerland, this week for the annual World Economic Forum. Bloomberg's Jemana Pasecci is on the ground for us, and she is joined by another special guest. Jemana.
Tom, thank you so much. Yes, plenty of very interesting conversations taking place. I'm really happy to say that the Deputy Mubadala CEO, Walid Al-Maheri, joins me right now. It's good to have you with us.
It's great to be here, Jemana. Thank you for having me.
Yeah, no, it's good to talk to you. I just want to start off with the fact that Mubadala was actually the most active sovereign wealth fund last year in terms of overall deployment, deploying $29 billion worth of capital. Why was that the case? And can we expect that level of activity in 2025?
So, Mubadala has always been an active investor, and we invest based on the way that we look at different parts of the world. So when I look, for example, at the United States, which is the largest destination of capital for Mubadala, accounting for about 41% of our assets under management, you know, I look at the risk reward and I say the United States is still the best risk reward that I see, globally speaking. But you see growth in Asia, and you see places like India, you see a resurgent Japan, you see China as they cautiously think through how they're going to get out of kind of the evenness that they're currently in at the moment. And I look and I say, listen, there's opportunity out there. And when you match opportunity together with the theses and our outlook in terms of how we want to deploy capital, I see that as a recipe for deploying capital. We've always thought about how we want to deploy capital based on how we think about innovation. We've always thought about, you know, where's productivity going to come from? Where are we going to see those businesses that are going to make the most difference globally speaking?
Yeah.
And sometimes that's in technology, and sometimes that's in life sciences, and sometimes that's in consumer, and sometimes that's in credit, or wherever it might be. But the truth of the matter is that I'm pretty cautiously optimistic, which if you asked me 24 months ago, might have been a little bit different.
Okay. Well, you also benefit from being a long-term investor, right? Perhaps less concerns with short-term cycles. Today is the inauguration of President Trump coming back to office. How do you think the return of the Trump administration will impact some of these mega trends and long-term themes that you're focused on?
So the beauty of being a long-term investor is that you can ride out whatever volatility or waves you might encounter. And we don't know what's going to happen. We don't know if there's going to be increased economic tension with China, what will happen on the geopolitical front with Russia and the Ukraine and what's happening in the Middle East. But I do remain confident that I think with the mix that we have in our portfolio, a mix of stable cash-generating investments with some of the forward, future-looking investments that we make, that I think we'll be really well-positioned.
Talk to me about what you've been doing in AI, and obviously you've been involved in this space for a very, very long time. It's only, you know, the last couple of years that people like myself and media have been talking a lot about AI and generative AI, but I'm curious to hear how you think the landscape has evolved and whether, because so many people are interested in being involved in the AI space, the valuations are not as attractive as they once were.
So I'm not an AI expert, but I can tell you the following. We know that AI is changing the world in several different ways. Number one, it's creating economic opportunity. Number two, when deployed correctly, it's going to create time for people, which I think is something really important to talk about. And so when we think about whether it's investing in AI-related infrastructure or other pieces of the pie, at the end of the day, we want to make sure that we're deploying capital that not only will have a great return associated with it, but is future focused and again has the ability to change the world. MGX is Mubadala's vehicle to invest in AI, starting in AI infrastructure. But what that's done is that's given us the ability to really deep dive and hopefully start to understand what some of these trends will look like over time. And Juman, I can tell you one thing. We are confident that AI is going to change the world. It's changing the way that we work. It's changing the way that we shop. It's changing the way that we relate to other people. And it's changing the way that frankly, we look at everything. So there has to be economic opportunity in that. And we are navigating that. And hopefully we'll find the right way to do that.
And in terms of investment opportunities, are you distinguishing between early stage investment versus later stage investment because of what you just articulated?
Well, I think the great majority of what we're doing at MGX will be later stage investment because it's focused mainly on AI infrastructure. But in order to understand what's happening around the world, you want to keep your fingers in some of these early pies, if you will. And so there will be a little bit of kind of, let's call it frontier investing that we're doing in that space to remain fresh.
Yeah. Private credit's also a big area that
yes,
you've been involved in for a long time. We've got the partnership with Apollo. Again, it's also another area that people seem to be talking more and more about. Are there too many players in that space now?
Well, it's a pretty large market. I think what's important, more than the number of players, is how you manage risk. And that's how you distinguish yourselves in terms of whether you're just an average player or whether you're going to do really well. We like to think that with the partnerships that we have, and we have 6 of them, by the way, scattered across the United States, Europe, and Asia, the single most important, I think, distinguishing feature is that we spend so much time underwriting risk and thinking about how we manage it. And as we construct our private credit portfolio, I'm really proud to say that we've been able to manage that really well, not take too much risk, but at least over the last 2 or 3 years, we've been achieving some pretty good returns associated with that. In fact, it's been the best performing asset class in Mubadala for the last 3 years running.
Private credit has.
Yes, ma'am.
Yeah. When you think about your portfolio, Mubadala tend to play more of an active role than just a simple passive investor. Where does that stem from?
Well, I think it stems from the philosophy that we have in terms of how we create value. Okay, so we like being an active investor. And what does that mean? That means serving actively and diligently on boards. It means going beyond governance to help shift strategy where we see something. You know, we have our portfolio consists of more than 250 positions around the world. And so what that means is that when you're able to step back, you can spend some time thinking about what the mega trends are. And so when we identify them, what we try and do is we say, hey, this worked in this particular sector. Are we able to transfer that? Will that create value in something else? And so we spend a lot of time thinking about how we do that and how we can actually affect that through our board positions and through our partnerships.
Yeah, we're going to have to leave it there. Waleed, it's a real pleasure to chat to you. Thank you so much for sharing your views on Mubadala and the global economy. That was Waleed Al-Muhairi, the Deputy CEO of Mubadala. Tom.
Okay, another great, excellent interview coming from Jumana Pasechi on the ground for us in Davos. Thank you very much indeed, Jumana. Coming up in the next hour, more from the World Economic Forum. We're going to hear from the CEO of Axis Bank. That interview coming up in the next few minutes. Stay with us. This is Bloomberg.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
You have dinner with friends without hinting at what you're thinking about, and do you ever get suggestions from your friends at dinner, this is what you should do, and how do you respond when they kind of say, maybe you should lower interest rates? You just keep eating, or what?
You might define the word friend to mean doesn't ask you about interest rates. So, no, people don't do that generally. You know, people I don't know will always say, hey, cut rates. Somebody said that in the elevator this morning.
Did that influence you, or no?
I said, thank you, sir. You know, and no, but I mean, you know, people say things, but it's fine.
So in some parts of the society these days, people are making decisions based on something called artificial intelligence, AI. Have you thought about, calling up ChatGPT and saying, here's all the data we have. What do you think about would be a good idea? Have you ever thought about that, or they're not going to like you do that?
We haven't done that. I mean, we have done little things like we've asked ChatGPT to generate questions for the press conference. And I'm happy to report for any journalists who are here that the questions were not as good as the ones we get from real journalists. So,
what about my questions? How do they compare to my questions? Okay.
No comment.
Right, so they weren't that great. Okay.
David Weston. Join me for the next generation of Wall Street Week, telling stories of capitalism from business, markets, economics, tech, and climate. Each week, we'll go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
Above all else, it's emissions.
Done nothing but grow immensely. To me, that's an extraordinary sign.
We can be the change that we want to see.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
Always on the heartbeat of the tech sector.
Spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
From our studios in New York and San Francisco, our expert hosts have the data and analysis from the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. Live every weekday, only on Bloomberg Television. Context changes everything.
We are seconds away from 12 p.m. here in London, 7 a.m. in New York. US markets, of course, closed for the Martin Luther King holiday. Welcome to Bloomberg Markets. I'm Tom McKenzie. Here are your top stories. Donald Trump is preparing to take the oath of office for a second time at his presidential inauguration today. A host of executive orders are expected to follow. A ceasefire in the Israel-Hamas war is underway, beginning with exchange of hostages and prisoners. We're going to have the latest from the region. And global business and political leaders are in Davos, Switzerland, for the World Economic Forum, with artificial intelligence and global trade at the top of the agenda. US markets, of course, closed for Martin Luther King Day. Asian and European stocks, as well as US futures, gaining ahead of President-elect Donald Trump's inauguration later today. It was a solid session in Asia, though European stocks have now edged into negative territory. European stocks on the European benchmark stock 600 currently down 0.1%. Some losses coming through for utilities and renewable energy, so taking a bit of a hit on the reporting that incoming President Trump will be pushing ahead with an emergency energy move around policy to try and support the build-out of production in the US, possibly to the detriment then of some of those renewable players. What it means for the Inflation Reduction Act, of course, remains in focus for investors exposed to that part of the sector. Bloomberg's Simon White joins us for a broader view on these markets. Simon, let's start with the dollar, because it's interesting, given what we heard from Bessent, of course, the potential likely incoming Treasury Secretary last week, talking about the need for strong dollar. Today, the Bloomberg Dollar Index on Inauguration Day is down 0.2%. The context, of course, it's rallied versus euro versus the pound since the end of last year. How does this set us up in terms of how we should be thinking about pricing into the dollar? How much is priced in at this point? Are we at this stage now where maybe some of those bets starts to be paired on the greenback?
Yeah, I mean, it's a very good question. I mean, the dollar has been extremely strong, as you say. It's like 8% up since September.
Yeah.
And there's a lot behind that. There's the rise in yields. There's obviously the prospect of tariffs. There's kind of America first type policies people are expecting. So there's been huge expectations built into the rise in the dollar. But I'd say of all the sort of trades that you've seen since the election, it's maybe one of the most vulnerable because of the surge higher, and there's a lot of expectations built in. Generally, I think I've noticed with a lot of the Trump policies. There's been all the positives have been built in or built into expectations, but very few of the negatives.
And you've been looking at kind of a historical framework to how to think about pre-inauguration day, inauguration day, and after, in terms of how the markets may adjust.
Exactly. So I think in a time of a torrents of asset buffeting headlines, it's really important to try and stand back, get some perspective, and use that as an anchor for a view. I mean, things are perhaps going to play out quite differently. But if you look at the dollar, it tends to modestly rally between the election and the inauguration, but then it tends to sell off afterwards. But this time around, we've just seen this huge 8% rally, which is kind of unprecedented, right? It's the largest move you've seen in the interregnum period between an election and an inauguration. So you see
that's the largest move that we've seen?
That's the largest in going like 25.
Time frame,
Exactly, yeah. So basically, it's, as I say, there's a huge amount of expectations. And when you see that in the market, obviously, like rumor versus fact, right? There tends to be a time then when the expectations get built in, the disappointment comes in. So the dollar is vulnerable from that perspective, alongside the fact that positioning is also very long. So you look at the net positioning now, it's the longest it's been for roughly 8 to 10 years. And even if you look at the change in positioning over the last month, it's ratcheted much higher, along with, funnily enough, Bitcoin. So Bitcoin futures have seen a huge rise. That's another asset that I think could face some sort of disappointment in the coming weeks. It's not to say it's the end of the rally, anything like that. But again, when expectations are so high, positioning is all one-sided. You know which way markets are likely to move.
Okay, so similar factors and similar forces at play for both, interestingly, for both Bitcoin and the dollar. Bitcoin up 4.6% so far on the session at 108,000. The dollar facing a little bit of pressure at the Bloomberg Dollar Index, a little softer, down 0.2%. Euro dollar up 0.5 on the single currency at 103. Simon White, thank you very much indeed, walking through some of the key lines around these markets with a focus, of course, on the dollar, and maybe some of those longs could be unwound in the weeks and months ahead, and the historical framing as well around inauguration day and post. Let's get more details, more analysis in terms of how to think about the FX markets. Global markets, of course, bracing for Trump's trade policies as tariff uncertainty weighs on currencies, and that uncertainty is certainly there. The dollar, as we've been talking about, slipping for the first time in 3 days. Sonia Martin can bring more analysis right now of DZ Bank. Sonia, how are you thinking about whether or not you want to lean into the dollar trade at this point, and how much is priced in?
Well, hi, I actually agree with Simon. I do think that the market at this point has priced in a lot of the presumably good news that will come with Trump. We have seen a massive rally, and it's been an unusually large move before the inauguration. So I think there is some potential for a correction. Having said that, it's going to crucially depend on mainly the import tariff factor. The big unknown for the market right now is when and to which degree Trump will come through with his promises to implement massive tariffs. If he does hold back for now and attempts to make some deals, which is what we're hoping he will do, then that could be enough to allow for a bit of a euro-dollar rally as summer relief sets in. Should he, on the other hand, come in hard with tariffs right away, then that's going to just confirm all of the fears that we've had, and that's going to put pressure on the euro and allow the dollar to rise further. So it's kind of a make it or break it moment in a way, with Trump coming to the office tonight, and then we'll see what happens next.
What level would you target around euro dollar then, if you get a more benign response from Trump?
Well, you could see quite a significant reaction because the market has, run a long way, and as mentioned before, the market positioning is very extreme. The market is very short euro dollar, so a 105 isn't a problem, or even slightly above that if we get a signal that tariffs will be held off for some time. But with Trump, the problem is always that could change from 1 second to the next, and it's the unpredictability of his policies which will make markets very nervous. And I think it's important to point out as well, that when we look at past episodes, especially the last Trump presidency, the euro was quite strong on its own in 2017. That's not the case right now. So you get a dollar move one way or the other, depending what happens next. But it's unlikely to see the euro rise on its own strength for a prolonged period of time here. It's a very weak currency and should remain under pressure.
To what extent are those additional rate cuts from the ECB priced in to euro dollar at this point? Markets expecting almost a full percentage point additional cuts this year. Is that kind of fully priced as well as a factor for the euro dollar?
Yeah, I think so. I do think that the market has been fairly consistent on its view with regards to the ECB. I mean, there's been a bit of a movement in rate expectations, but it's not been a lot. So I think that's kind of, people are anticipating this. I think that's what's priced in. And to be honest, when you look at euro dollar and you look at how sensitive it trades with respect to rate expectations, then it's very much the US side of that equation that is in the driving seat. I mean, the correlation between euro dollar and US rate expectations is much, much higher than it is for Eurodollar and the ECB side of the equation. So I do think the Fed is much more crucial for the currency pair. And I think the ECB is just going to add to the generally negative sentiment.
Okay, so the Fed really the driving factor for Eurodollar versus the ECB at this point. Sonia, how much of a floor do you think has been put under the, if at all, put under the pound, given the pressure on sterling that we've seen over the last few weeks? Has that storm abated?
Yeah, I think it's calmed down a bit. I mean, we've had this massive movement in the market because, suddenly everyone started looking at the budget again, and there was a sort of a real concern about, fiscal responsibility. Is it really going to work out? Rachel Reeves' plans for the budget realistic, and in this combination that we had of a weaker currency and rising yields at the long end of the curve in particular, I mean, that's always a warning signal. I think everyone felt quite reminded of the infamous Liz Truss budget, which really caused massive market turmoil. We're obviously a long way from this, but the UK has issues in terms of growth, in terms of its fiscal spending plans, in terms of the new tax plans which are impacting employment. So there are a lot of reasons to be concerned, but I do think the recent decline has been slightly overdone, and it is time for sterling to find some bottom here and then to see how things progress from here, which will of course also depend on the fate of the US dollar in the coming weeks.
And your expectations around the BOE, market's pricing in about 65 basis points. So there's been a repricing as well in terms of expectations for the Bank of England. Does that sound reasonable to you, or do you think markets are still underestimating how far the Bank of England will have to go to support this economy?
Well, I do think it's very reasonable. I mean, the Bank of England has been in a difficult position. Someone could say maybe more difficult than other central banks because the inflation has been very sticky in the UK. And so the path for the BOE hasn't been as clear as maybe it has been for other central banks. So it's been a lot of toing and froing and a lot of revision of rate expectations. I think what the market is pricing in right now is reasonably to be expected. A slow, continued decline in the policy rate, but nothing hasty. And they'll sort of have to move from data point to data point and make sure they don't overdo it and then end up having gone too far. So they'll just be very careful, I think, in their wording as well.
The BOJ, before we let you go, Sonia, the BOJ with their decision, of course, on Friday. Economists in the whole seem to be expecting another hike. Of course, there's some kind of dependence on what policy we get from Trump in the days ahead. But that seems to be the expectation. They will go ahead with another hike. Where does that take dollar yen then?
I think the problem here is it's not so much dependent on what the decision per se will be. It's really going to be about the wording, because this has been the problem that's been haunting the BOJ for some time, and they've done the right things. They have hiked interest rates. They have sent the right signals in terms of what they've actually done policy-wise. They just have an unfortunate tendency to then shoot themselves in the foot by delivering a very dovish message in the following press conference, and that sort of then keeps the yen sort of under some pressure. So I think, you really have to watch the wording of the press conference, and this is where they need to become a bit more courageous, I think, in order to have a bigger impact on the market.
Okay, watch for the press conference when it comes to the BOJ on Friday. Sonia Martin doing a global tour of currencies of DZ Bank for us, with a view, of course, on the dollar, euro, the pounds, and looking ahead later this week, the Japanese yen. Sonia, thank you. Coming up, Wendy Schiller of Brown University. We're going to get her views in terms of the policy mechanics of incoming President-elect Donald Trump and his team, of course, how to think about implementing that policy agenda in the days, weeks and months ahead. That conversation coming up. This is Bloomberg.
investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onim, only on Bloomberg.
Bloomberg Invest is back. Join me, Shonali Basak, and the industry's most influential people for a comprehensive view across financial markets. Hear what a second Donald Trump presidency means for the economy, how AI is being monetized by investors, and the next big risks facing the private credit industry. Bloomberg Invest, March 4th and 5th in New York City. Register your interest to attend at bloomberglive.com/invest.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Breaking news. President Joe Biden announcing pardons before leaving the White House. The inauguration, of course, of incoming President Trump happening today. Pardons for Anthony Fauci, who, of course, led the fight against COVID, controversially, of course, in some quarters and some parts of the US. So Joe Biden has issued a pardon for Anthony Fauci and has also issued a pardon to General Mark A. Milley as well. And here are some lines from the press release that has accompanied these pardons from the White House. These appear to be preemptive pardons, and I'm quoting from the press release. In certain cases, and this is from President Joe Biden, in certain cases, some have been threatened, he's talking about civil servants, with criminal prosecutions, including General Mark Milley, Dr. Anthony Fauci, and members and staff of the Select Committee to investigate the January the 6th attack on the United States Capitol. So I'm quoting from that press release, and so those members of the committee, plus Anthony Fauci, plus General Mark Milley, will and have been pardoned as a result. We will get more details on this, of course, throughout programming and what this constitutes in terms of the response from Joe Biden in, of course, his final hours in that role as President of the United States on Inauguration Day, of course. Geopolitics, also a major story for us today because the ceasefire between Israel and Hamas is underway. Hamas releasing 3 Israeli hostages yesterday in exchange for 90 Palestinians held in Israeli prisons. Bloomberg's Ros Masson joins us with the latest when it comes to the ceasefire. Ros, let's start with whether or not this ceasefire, what is the expectation? I mean, there's been some incredible pictures from both sides in terms of the prisoners and the hostages meeting their families after months, 15 months of captivity in conditions that we can only imagine. What are the expectations that this ceasefire can hold longer term?
Well, it certainly had a fragile start and a delayed start, and there was a lot of last-minute wrangling that we saw, and this is, in a way, a product of the fact that we kind of announced an agreement, a plan to have a ceasefire before there was an ironed-on plan to have the ceasefire, so you had to reverse engineer parts of the agreement after the fact. And so there's a lot that's still not even really codified about this agreement, so lots of room there for disagreement to say, well, you're breaking this part of it or I'm breaking this part of it, and so on. And so it's very, very fragile. But we did see that first big marker, which was the release of the initial group, just 3 Israeli hostages, the release of the Palestinian prisoners. That's the very first step. And now we have a bit of a pause before we'll get perhaps the second release of Israeli hostages in exchange for a larger group of Palestinian prisoners. But underlying that is a lot of conversation about, well, what happens after the first 6 weeks of this agreement? Then what? Does it roll over, and under what terms? And when do we start the conversation about what Gaza would look like after a ceasefire, if this is truly a pathway to the end of the war? And we can see even within Israel, there's a lot of disagreement about that politically within Netanyahu's inner circle about whether this is truly a pathway to a proper peace. So very, very fragile all around.
Yeah, and as Ollie Crook on the ground for us in Israel saying, tempered relief that he is sensing, speaking to people on the ground in Israel, but tempered, and that seems to be a sentiment that's been shared in Gaza and the West Bank as well. Ros, given you're sitting around the desk with us right now on this breaking news around the pardons for Dr. Anthony Fauci and Mark Milley, can you give us some context in terms of how you see the significance of these steps? I mean, we're obviously in the final hours now of President Biden's term, and he seems and sees the need for what look like preemptive pardons.
Well, indeed, and it seems like, Biden's been taking a whole lot of steps in the past couple of weeks, really, to deploy things to protect his legacy, to defend regulations, particularly to make it harder for Donald Trump to wind back some of the policies of the Biden era. And he's come under criticism for that. Why wait so long to do these bold actions that people were calling for years during your term? But it does seem to be to try and lay, the not landmines, but make it a lot harder for Donald Trump to rush his agenda out the door. And on the pardons, what we can see is Donald Trump's expected to pardon a bunch of people related to the January 6th attack on the Capitol, potentially today. Joe Biden out the door pardoning some people, and it seems without even really any charges against these individuals to date. As you say, is it a preemptive pardon? These are people who Donald Trump repeatedly has trained his sights on. Fauci being one over his handling of COVID. Mark Miley also, who famously used some very strong language to describe Donald Trump, called him a fascist, which obviously Trump denies. But is this someone who Donald Trump is going to go for? A former loyalist in the Trump circle who's really moved away from him. And, Miley's talked previously about his concern if Trump won the election, would he face something as a repercussion? And so this is really about, in a way, putting up that barrier to Donald Trump being able to come for these people.
And just to quote, to your point, just to quote from the press release then, from the White House, alarmingly, public servants have been subjected to ongoing threats and intimidation for faithfully discharging their duties. In some cases, some have been threatened with criminal prosecutions, including General Mark Miley and Dr. Anthony Fauci. And then it goes on to explain why then he is putting these pardons in place. Roz, with the context and the reaction to that live breaking news, thank you very much indeed, Bloomberg's Roz Madison. Now, President Biden, President-elect Trump's teams both involved in the ceasefire deal, of course, between Hamas and Gaza. Trump reportedly, Hamas and Israel, I should say, Trump reportedly already making plans to keep the deal on track, with his Middle East envoy Steve Witkoff considering a visit to the Gaza Strip. And we know that he was instrumental, of course, in getting that deal along the line, with, of course, all the hard yards put in by President Biden's team, including the US Secretary of State. Joining us now to talk about Trump's agenda ahead of his inauguration later today is Wendy Schiller Brown. Wendy, thank you for joining us. We'll start with a ceasefire then between Hamas and Israel. What can we take from the role that Trump's team played in this ceasefire? What lessons we can learn from how they may apply those skills, that skill set and that pressure going forward?
Well, what we can see is that Donald Trump in his second term wants to be the guy that makes peace, the guy that comes in and solves the conflicts. And you may say, well, that's admirable. And it is. I don't think anybody wants these kinds of horrific conflicts. But for the president, it's about his legacy, it's about his popularity, and it's about asserting influence around the globe in a way that's singular. That Donald Trump, by coming into office, pushed this ceasefire forward. He wants to do the same thing, apparently, Ukraine, Russia. And what it says is the United States may not deploy troops. It may not give you as many weapons or as much money, but the United States will still weigh in. And Donald Trump will use the threat of United States power to get warring parties to come to the table. And that's this first example, which I think at the moment bodes well for those of us who want to see a lot of these conflicts end.
What is your expectation, sir? Okay, this is a president who's going to be pushing for peace. What is your expectation, Wendy, that he will be able to get a resolution between Ukraine and Russia, a conflict he's described as being able to solve on day one? It sounds like it's going to take a lot longer than that. What kind of time frame should we be looking like? What kind of levers might Trump reach for to bring that conflict to an end?
Well, I think the time frame on Ukraine, Russia is determined by, when Ukraine runs out of the most recent batch of American aid. Donald Trump has expressed skepticism about the amount of aid that the United States has given Ukraine, and certainly Congress has to reauthorize or add new permissions for new aid. And that will be our timeline. Probably in the next couple of months, there'll be a request for more aid, and that will be up to the president and the Republican, his same party-controlled Congress. So that will be our timeline. And in that sense, the unpredictability of Donald Trump You know, I'm not suggesting that he is predictable or there's any certainty about what he'll do in the future, but he's unpredictable. And that means other parties, foreign entities, have to wonder how far he'll go to accomplish his goals. So while I say he doesn't want conflict, Iran is certainly considered still a threat to the United States. What would he do to bring Iran to the table? So that's the sort of two-sided coin is he doesn't like war. He thinks it's sort of a losing proposition, and he wants peace. But what will he do to get the peace? And I think a lot of world leaders are not quite sure about that.
Okay, so Wendy, to the here and now, what are you going to be watching for in the hours and days ahead in terms of how this new president or second-term president is going to be hoping to shape and shift and set his agenda?
Certainly the executive orders, all presidents issue executive orders on day one. It's kind of what they do after they're inaugurated. What will be his first 5 executive orders? Will they be immigration, border? Will they be the economy? What will they be? Will they be pardons? We've seen a really expanded use of pardons by both Democrat and now probably Republican presidents. What will they be and how quickly can they be implemented? Remember, the federal government has 2.4 million employees. It's a vast entity. It's very difficult to move quickly. So let's see what he emphasizes and what his team emphasizes on the first day. Executive orders today is what I'm watching.
Wendy, what do you make of these pardons then that have come out just in the last few minutes from the outgoing Biden administration, focused on Anthony Fauci and Mark Milley? What are they justified? They look like preemptive. They sound like preemptive pardons. What do you make of this?
Well, I mean, the pardon power and the commutation, the clemency part, you know, commute your sentences. That the founders put that in for people who were unjustly convicted or maybe had been given sentences for too long. It is supposed to be used sparingly. We've seen lots of presidents, it doesn't matter which party they're from or who they are, use pardons in ways that we find questionable. So we've seen Biden pardon his own son, Hunter. We've seen now preemptive pardons, which is a bit scary. These individuals are doing their civic duty. There's no question that they did something criminal. So to pardon them preemptively puts us on a path, which is a little bit frightening if you think about the rule of law. How far Donald Trump goes in pardoning January 6th offenders and which ones he pardons, the ones that did a lot of damage and violence or the ones that were just in the crowd, that's going to be a big question mark too. Some of these people are coming to the end of their sentences, so pardoning or commuting wouldn't be that big a deal. But certainly the United States prides itself on rule of law. The president has a select power to circumvent that, but it should be used sparingly by any president from any party.
Yeah, I mean, certainly this is one tool that's sitting here in Europe and in the UK is something of a fascinating, somewhat head-scratcher in terms of pardons and how willing presidents are willing to use them. Wendy Schiller, excellent analysis in terms of what to think about in the days ahead from the Trump administration of Brown University. Thank you. Still ahead, we're going to get back to the World Economic Forum in Davos, Switzerland for an interview with the CEO of Axis Bank. That's coming up. This is Bloomberg.
from the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets. Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Good morning, good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at the Forbidden City in Beijing, and this is Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Welcome back to Bloomberg Markets. I'm Tom McKenzie in London. The World Economic Forum, meanwhile, is, of course, underway in Davos, Switzerland. Global business and political leaders are discussing the state of the economy and trade, with US President-elect Donald Trump at the top of their agenda. Bloomberg's Jonathan Ferro and Lisa Abramovich are on the ground for us in Davos, and they join us now. Guys, what is the mood on the ground?
Hey, Tom, I can tell you it's not cold. This isn't even real. It's a green screen. Everyone's been pretending through the morning so far. And I'll tell you why. Because we're all stuck between two worlds. Washington, D.C., inauguration, and Happy Valley. So I'll bring you the reality of the next, 5 days, 4 days, 3 days? How long is this?
It's actually, 3 main days, but yes, 4.
You know how this is going to work. Trump is going to act. Davos will react, and that's the next 3 days.
There's already a reaction right now in Davos, and partly that's who's not here, which is the people who are in Washington, D.C., who are at the inauguration, and will be maybe jetting here, maybe not, depending on the convenience. But it's also the idea that the undercurrent of deal-making, which always has been the dominant aspect of Davos, is now basically the subtext, the pretext, and just simply the text. It is now necessarily the obvious thing that people are here to do deals. It isn't necessarily message about virtues and ethics.
Let's break that down and make it very easy. I think if you are a company operating in America right now, things are great. And the incoming administration is promising to make it even better. If you're operating outside of the United States and exporting into the United States, life could become very, very complicated for you. How complicated, we don't know. We're expecting some form of announcement at some point on tariffs. What form they will take, again, we don't know. How others will react is unclear at this point. Will we see that tit for tat? Then we've got to start talking about financial markets as well. Will the FX market offset that with this big bout of dollar strength? As for the tax story, how much stimulus are we really going to see in the US economy? How much additional debt are we actually going to get? And how much does that crowd out the hopes and dreams of not just the Americans, but the rest of the world? Europe's in a pretty weak spot right now. We've got a variety of countries who are compromised by their debt levels. They're losing fiscal space. We've seen those constraints in places like the UK, seen it in France, and it could get a whole lot better in months to come, or a whole lot worse.
And a lot of it really depends on what those policies are and the reaction in financial markets. We talk about the potential read-through of the tariffs, as well as some of the stimulus that may or may not come down the pike with tax cuts. And this really leads to the question of inflation and the idea of how much room is there for the European region to really stimulate at a time where there is this crowding out type of factor. I will say this, that one group of people who are here, all the bankers, they're all here and they are with their full regalia, because basically this is the deal-making moment. And what I am curious about is how much are we seeing European companies, external companies looking to get into the United States to say, look, we're US too. We might be over here, but we're also over there. But guess what? You can give us a good deal also. How much do you start to hear a walking back of some rhetoric that we heard in 2017 at Davos versus today?
There's a lot of excitement about deal-making. We'll talk about that with Mr. Pinto from JP Morgan, Mr. Pick from Morgan Stanley, Mr. Moynihan from Bank of America. A lot to talk about on that front. You mentioned some of the virtue signaling. there's been a real vibe shift, and we've talked about that on Bloomberg Surveillance for the last several months. A vibe shift away from the virtue signaling and a refocus on core competency. We've seen a few American companies pull back from DEI initiatives. We've seen that a few times. We've also seen some companies, including the banks, distance themselves from the net zero effort of the last decade as well. And I'm going to be interested to hear how many companies want to talk about their new initiative that would usually tick a box somewhere for someone, and how few will do that this time around.
What's fascinating to me is Davos was the place where these announcements were made. We have to really emphasize that. That was the purpose of Davos, was to come here and talk about climate change, come here and talk about inequality in the world, come here and talk about how you are going to make things more fair. This time, how much do we hear nothing about any of that? How much does that get left at the door? And really it comes down to how do you get an edge in a world that's increasingly competitive? And that was what I think maybe the vibe shift will be among Davos man, which is what people talk about this year in 2025.
And Tom, before we head back to you, I think the biggest headline right now, the World Economic Forum, it's not who's here, it's who's not here, and where are they and why?
Okay, John Farrow, Laser Abramovich, fantastic setup in terms of the guests coming through and the fact that ultimately Trump is, of course, looming large, whether it's on DEI or walking back on some of those climate change commitments, what it all means for the debt levels of some of these nations and how Europe responds as well. Let's cross over to Germana Basecci, who is also on the ground for us at the World Economic Forum in Davos, another part of the landscape for us with the team of Bloomberg stretched over a space of real estate on the mountains there of Davos. Germana, bring us in your next guest then.
Yeah, thank you, Tom. Well, peeling away from President Trump for a moment, we're going to talk about cybersecurity threats. I'm really happy to say that Dora Dor, the Chief Technology Officer of Checkpoint, joins me right now. I thought it was really interesting. The World Economic Forum put out a global risk report before every Davos, and this year they cite cybersecurity threats as the 5th biggest risk over the next couple of years. How do you see the landscape emerging in 2025?
Yeah. So that's, thank you for inviting me. The landscape is always becoming more severe, but in our report and in our data analysis, we found out that it grew up 44% year over year in 2024, and it's actually continued to emerge. The digital transformation uses much more assets online, and hence the importance of securing them become much greater, and attacking you become much more profitable to the attacker, if you will.
Yeah, I saw in a report that your own company put out that cyber attacks on the state have risen. AI-powered disinformation influence campaigns targeted 1/3 of global elections between September 23 and February 2024. That is a startling number. Talk to us about what those campaigns actually look like and how damaging they were and how influential you think they were.
Yeah. I think that the main point here is that what AI enables us to do, it enables us to do attacks in masses that would be much more accurate and much more targeted. So if before some personas were attacked at sometimes now the attackers can use it much more consistently to attack many more people in masses and to create more massive, accurate attack continuously. And that's a big threat. The specifically for disinformation and fake, etc., it just becomes so accurate that you trust it as being the real picture, the real persona talking to you, and it's very easy to do social engineering.
Of course. So how do you counter that? So if the cyber attacks are becoming more sophisticated and are leaning more on artificial intelligence, to counter that, are you therefore also leaning more on AI and generative AI?
So first, yes, AI for security is a very well exercised tool that is improving all the time, and we must use also AI for security. We also must be more preventative, so we cannot assume that we will manually respond to all these attacks. We have to respond instantaneously and to stop the attacks. And finally, as people, we have to build into this culture of misinformation and disinformation and to be more resilient to this and to, for things that are luxurious, really have another form of trust and not just the picture of somebody or the...
It sounds to me like it's a bit of a battle of the AI, and which side is going to have the stronger AI tools in the future to deal with some of these cyber threats.
Yeah, I think it's not like one side winning. Both sides will accelerate.
Yeah. There's something that I do want to ask you about, perhaps not necessarily cyber security related, but the U.S. Supreme Court recently upheld a decision to ban TikTok in the United States. How do you think about it from a security standpoint?
Yes, I think TikTok is a tool that could be used for two things: for delivering misinformation and disinformation, just like we discussed, and the second thing is collecting data from many people, which could be very damaging at the hands of an adversary. So it is a tool that could be, with the wrong intention, used very badly, and could be the basis for forming a severe cyber attack. So it's not unrelated to cyber, even though it starts from a culture and kind of social networks and people. But it could easily turn also into being a cyber tool.
And obviously it depends who the ultimate owner is. In this case, the ultimate owner is China.
Yeah, it depends on the intention and the usage of this data. If the data is not used in a bad way, it could be a legitimate thing that happens in other networks as well. But if the data is badly used or the misinformation and disinformation is not handled well, it could be a very destructive tool.
One other phenomenon that happened last year was the increasing amount of cyber attacks on supply chain. And I would say one of the big turning points throughout the course of the conflict in the Middle East last year was the Hezbollah pager attack, and Israel thought to be behind that. I just wonder whether you think these types of supply chain attacks are going to become a lot more common in the future.
I think it starts by geopolitical divide. We are deglobalizing in some senses. There are forces that fight each other, and each side is trying to use their best tool, and that's accelerated the war. It does also accelerate supply chain attacks, even not specifically like the example you mentioned. There are many supply chain attacks already in play and being used. And everything that's being used by states ended up being used by industry and just by thieves. They're just looking to gain economical gain at the same way. So tools are transforming very quickly from being a state tool to everybody's used tool. And so supply chain is a problem. Supply chain in the physical world is one thing, but supply chain in the software world is very well exercised, and there are many examples of severe attacks done with supply chain.
Just a question on Checkpoint. I see you're opening your second largest office in India. What are the opportunities that you see there? Why India?
So first, India is a large kind of population, and there are many ISVs there that serves many countries many other countries and companies. We do already have some operations there and some different centers of excellence that we could build the expertise on. And so I would say it connects to the missing of talent. We are missing talent, and we are looking all over the world in order to facilitate our growth and to bring it in a place where it's technologically savvy.
Well, before I let you go, I do want to ask you about the main development in the region over the course of the weekend, and that is finally the ceasefire between Israel and Hamas has been implemented. And of course, you are an Israeli and Tel Aviv-based company. What are your thoughts on the ceasefire and what it could mean for the Middle East?
So Checkpoint is a global company traded in the Nasdaq. I live in Israel. As an Israeli citizen, I'm excited about the development. I really look forward to see all the hostages coming home. And I look forward to being a more rational region, not so much in the news. I think many of us want to live their life and prosper, and I look forward to this future.
Yeah, I think that many of us agree with your sentiments. Tom, that was quite a comprehensive interview with Checkpoint Chief Technology Officer Dor Dor. I'll throw it back to you now.
Bloomberg's Jemana Pasechi on the ground for us at the World Economic Forum in Davos. Jemana, thank you. Coming up, we're going to be back in Davos for an interview with another executive. So stay with us for that conversation. Axis Bank's CEO in conversation with our team on the ground at the World Economic Forum. That's coming up. This is Bloomberg.
why should I want to invest in the pharmaceutical industry? Is it going to continue to grow as it did last year? And what about your own company? Do you think it's going to have good growth prospects over the next couple of years?
I think the reason to invest in the sector is the science. I mean, when you look again, if I go back into the history, for most of the last century, we were only giving people pills and small molecule drugs. Then we discovered that we had this whole world of biologics, and we could treat diseases with biologicals. More recently, we've discovered that we can reprogram your cells, we can edit the genome, we can use these RNA therapeutics to completely transform areas of medicine. Those technology areas are at their very nascent stage, and what we're going to find is they're going to open up whole new areas of growth from our business standpoint and a human health impact standpoint. We hope that as we work in our areas like cell therapy and RNA therapeutics, we will also be able to climb to a whole other level of market cap over time.
Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg is covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and the ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
There is this real momentum from Wall Street. We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Welcome back to Bloomberg Markets. I'm Tom McKenzie in London. Let's head back to Davos. Bloomberg's Manika Doshi joins us with a special guest. Manika.
Hi, Tom. India always makes a strong pitch here in Davos, but this is a difficult year for India with slowing growth, tight liquidity, and muted corporate investment. To talk about all of that and the impact on India's banking system, I have with me the CEO of Axis Bank, Amitabh Chaudhry. Axis Bank is the third largest private bank in the country. Is 6.5% growth enough? That's the revised estimate for this fiscal, and it just doesn't seem like it's good enough.
Well, yes, it is obviously lower than what people were predicting earlier. Our economists do believe that we should be able to hit close to 7. But yes, what has happened in the first half of the year has come as a bit of a surprise. We're not expecting the growth to be, what it has turned out to be. A combination of some of the things that you mentioned in your opening remarks. Plus, I think both the fiscal and monetary tightening has had a little bit of impact on the growth side. Depreciation of the rupee, liquidity going away, stubborn inflation has also not helped. But I think you will see CapEx coming back slowly, gradually in the second half. That's what our hope is. And it should play well for the next financial year. But the macro right now as it stands does look tough. And whether we can push our way through and kind of take the GDP growth rate to slightly higher levels or get stuck in that zone is something which we need to look out for. Our budget is coming. We also need to see what happens in the first 30, 60 days of the Trump administration. A lot to watch out for.
That kicks off today, but investors watching Bloomberg, invested in India, will want to know, is the biggest challenge an internal one to be able to get the policies right to boost growth, or will it be all the external winds that blow in from the US or elsewhere in the world, including China?
So, well, we cannot be completely, stay away from what's happening, in the external world. We do see some impact of what the Trump administration might do, coming in, obviously touching India to some extent. Yes, if US and China, kind of the trade war plays out the way people are predicting, China plus one strategy in terms of India could be benefited. We're not seeing that much of benefit come through, but slowly, gradually, you can see some investments are coming in. But yes, a lot of the things need to be solved internally in India. Which means that we do need to think about how do we play the rupee in itself? What do we do about the liquidity? What do we do about getting the credit growth back? Government has been spending a lot of money, but kind of slowed down in the first half. How do we kind of get that CapEx revived? And also primarily the private CapEx needs to come back. We have seen clearly a slowdown there, and what do we need to do to pick that up? And my view is that one of the two drivers of private CapEx could be real estate. and it also could see obviously the manufacturing which is focused on exports. On the real estate side, I think the government has to ask itself, what do we need to do to ensure that, we can remove the cobwebs? Are the rules, are the policies clear? What we can ensure that to do in terms of urban development? Our urban development is suffering. So while you can put in all the real estate you want, end of the day, urban development
If I
needs
can
to keep
just
pace.
briefly interrupt you there, Amitabh, I'm curious to know, where do you stand in terms of what needs to give? Fiscal policy, a widening of the budget gap, or monetary policy, and a turn on the interest rate stance, which is rate cuts, given that the Fed itself at this point in time doesn't seem too inclined to cut further?
I think on the fiscal side, the government is quite committed to continue to bring down the deficits, and I do believe...
So it's not going to come from
I don't think it will happen, and so my view is a little bit...
where is the growth going to come from?
So I think a little bit on the monetary... So first is, again, continue to work on the rules and the policies and the reform which the government needs to do, and obviously all the state governments need to realize that if they don't get some of that stuff right, just giving free money away to a certain portion of the population and your budget suffering is not going to get you across the line.
So you're betting on a monetary policy cut?
I'm not... See, the cut is not going to make a difference. It is the other side. It is, bringing liquidity back to the system.
Dismal about the growth outlook, because you're saying neither fiscal impulse nor monetary policy
I'm quite
cut.
hopeful.
And so growth in India is going to be somewhat a boring story this year.
No, as I said, our economists do believe that the growth can be slightly better. I'm just saying that if you want to look at the next 2 to 3 years, you do need to get the liquidity back. A cut is not going to really spur on growth, but you need to infuse liquidity into the system. You do need to allow for a slightly higher
And
credit
who's
growth.
going to do that? It has to be the central bank.
Well, central bank has its, obviously very well, they know what they're doing.
And then
so
there's
I'm sure
also
they'll
the
listen to what we're
dollar to
saying.
take care of, right? I mean, we've seen the sharp depreciation in the rupee over the last few months. Maybe so far it's only been playing catch up. But there is predicted dollar strength through the course of the year. So is the rupee a big concern for you?
No, I mean, rupee, please understand, obviously it's a big concern for some portion of the economy, but India has always seen a certain period of a stable rupee and then a sharp depreciation. This time it is accentuated by the fact that we have this whole dollar play going on, right? So it is playing into the minds of all currencies, including rupee. RBI has given up the stance of defending the rupee to some extent. We've seen that happen.
What is your expectation on that?
I think they will play it slow. They can't continue to spend such a huge amount of our reserves on just defending the rupee.
So you're saying, now just to recap, no fiscal impulse, no monetary policy change, so rates stay where they are, and no big defense of the rupee at this point in time.
I think given where the inflation is, I don't know what the governor will do. Obviously, they know much better than me. But firstly, the rate cut is not going to really spur the economy in my mind.
Okay, I get
Secondly, the inflation
what does
does
all
not
of this
support a
mean
rate
for
cut.
the banking system in India? It's been a tough period already. We've seen asset quality slippage in the retail portfolio. We've seen corporate investment very muted. So how do banks like yours continue to make money, or is it going to be a very
We
tough
are
year?
making decent amount of money, but yes, the credit growth has slowed down. Deposit growth is in line with the deposit growth, and I don't think unless liquidity comes back, this deposit growth is going to change dramatically. We expect numbers to remain the same. We have always talked about the fact that at least our bank, that we can grow faster than the industry. I mean, not to look at quarter by quarter, but over a certain period of time. We do see huge opportunities in India. Yes, there are asset quality issues, but please know, banks play at the better end of the risk curve. We will be coming out of it.
Do you
quite
see
quickly.
the asset quality issues, which right now seem concentrated in the small loan portfolios, the microfinance portfolios, spread or leak into the mid-market portfolios, the mid-corporate portfolios, if this remains a year of slow growth?
We are definitely not seeing in the mid-corporate and some of those areas, but yes, what can happen is if you continue to keep a tight lid on the unsecured side, some of it can easily slip on the secured side because you just don't have the money to pay for your loans which you've taken on the secured side. But the impact of that, I believe, will be minimal. Already the banks are saying that we have reached a kind of a peak and it is stabilizing, so hopefully it should, hopefully trickle down in the right direction from here. But yes, you have to be watchful because the macro remains so uncertain. So, and that's what we are saying.
All right, it's going to be a middling year for Indian banks and the Indian economy. Back to you, Tom.
Menika Doshi, with what I think is probably the most animated interview we've had so far out of the World Economic Forum. Menika, thank you very much indeed. We are about 4 hours away, meanwhile, from, of course, the inauguration of President-elect Donald Trump for his second term in office. Bloomberg Balance of Power co-host Kayleigh Lyons joins us now from Washington, always with a finger on the pulse of the politics of the US. And today, what a day. Kayleigh, what are you watching for?
Well, it's going to be quite a day, Tom. Of course, a little bit different than traditional inaugurations in that it is currently, I believe, negative 10 degrees Celsius here in Washington. Therefore, the actual traditional swearing-in ceremony is going to be taking place inside the Capitol rather than on the West Front. But of course, what will happen today, no matter what, is that Donald Trump will become the 47th president of the United States. And it's not just the pomp and circumstance, the traditions of this transfer of power in American democracy that we'll be watching today, but really what happens after he takes the oath, because he has been, according to Fox News, planning some 200 executive orders that he will sign today. In fact, last night here in Washington at a rally at Capital One Arena, Trump had this to say: like hell, we're going to do it over the course of weeks. We're going to sign them at the beginning. And we know those executive orders could focus on a few areas in particular: energy, the border, and the federal workforce. He also, of course, over the weekend pledged that today he will be signing an extension for TikTok to divest itself after it was briefly offline here in the U.S. over the weekend. So there's going to be a whole host of executive action he takes almost immediately. And of course, we'll be watching for any action on tariffs, things like crypto as well today.
Okay, so the executive action, the executive orders are going to be there, Kayleigh. To what extent do you assume that that is going to be setting the terms of the agenda of this president, who, one of our geopolitical guests pointed out to us, is essentially taking office as a lame duck president?
Yeah, that's exactly right, Tom, and that might be why they are trying to front load all of this policy action, because especially once we get into 2026 after the midterms, all of the attention really is going to be off Donald Trump and on the next contest for president. So he is really trying to go out of the get out of the gate here with a whole host of action that really could define ultimately what his presidency will look like. Of course, for some of the things he wants to do, like tax policy, for example, he is going to need congressional support. It's actually going to have to be written by the American legislature to become law. But for other things relating to emergency powers he could enact to address the border or trade relationships, for example, he is going to try to take as much unilateral action as he can very early on and try to notch some early wins here. As we know, that first 100 days typically is the benchmark that presidents like to look at, but he seems he wants to get a lot done on day one. And I will say the other thing he mentioned he would like to do on day one is issue pardons to those who have been convicted of crimes related to the riot at the Capitol on January 6, 2021. It's unclear how blanket those pardons will be, if it will only be for nonviolent offenders or could be for everyone, but we'll be watching for action on that today as well.
Bloomberg's Kayleigh Lines in Washington on an historic day, of course, for the people of the US with the inauguration of incoming President Trump. Kayleigh, thank you. Don't miss our special coverage, of course, of Donald Trump's inauguration at 11 a.m. Eastern Time. Stay with us. This is Bloomberg.
Offers before to take over Greyhound, but then in the midst of the pandemic 2.5 years ago, we had this fantastic opportunity to buy the brand and the network. When we took on Greyhound onto the Flix tech platform for network management, revenue management, we saw the highest unit economics in more than 100 years of Greyhound history.
My vision is to transform long-distance bus travel in the United States and make it one of the top considerations for anyone planning a long-haul journey.
CEO Kai Boyson imagines even more potential if state and local governments recognize the need to support long-distance bus travel with integrated infrastructure.
We need to think about the infrastructure in the United States holistically and think about the transportation system as one integrated system. And intercity bus needs to be an integral part of that system. One should be able to connect from one mode of transport to another seamlessly, easily. We have great success models in the United States. For example, Los Angeles Union Station, Boston South Station, or New York Port Authority Bus Terminal, or Washington, D.C. Union Stations.
Kai and the team, they are doing a fantastic job. They have really improved the product, they have improved technology, they have really made the production more efficient, that at the moment it's also a profitably growing business.
In case you missed it, on Bloomberg Open Interest.
11 years ago, I bought a Bitcoin on this set.
It was $800.
Yeah, $800, but I spent the Bitcoin on beer and groceries and gas and video games.
And
I wish I had kept it. I wish I would buy a Harley today if I had.
Yeah, but you probably wouldn't be a TV anchor, and you probably wouldn't still be on this set. And what a joy that is.
I'd be my feet in the sand and the beer in my hand.
Don't miss the next Open Interest.
Every single thing I've done, it's almost as if somebody has said it can't be done. I mean, I remember I was in a fashion
factory, and I said, I want to go in the night shift. And they said, no, we don't put women in the night shift. I said, how will I be a successful production manager or personal manager of a factory if I never went into a night shift and knew how a third of my people worked? So in some ways it has fueled some of my determination. It's fueled some of my, okay, I'm going to show this is possible, a sense of, I'm going to go get on and do it. It also gives me courage because I feel sometimes I'm not just doing it for me, I'm doing it for everyone else who comes after me. And I always tell women who ask me for advice saying, put your hand up for the most difficult job. Put your hand up for things that are challenging. You know, go in there and lean into things that are difficult, that are challenging, because that's what gives you the greatest credibility, respect, reputation.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
It's 1 p.m. in London and 8 a.m. in New York. U.S. markets are closed for Martin Luther King holiday. Welcome to Bloomberg Markets. I'm Kriti Gupta here in London. Let's get a kickstart on the markets that are trading. Of course, futures are still very, very much open. And you are seeing some marginal pressure when you look at the S&P 500 futures down about, we'll call it 0.2%. I'll round up there. But you are also seeing the same margin by the NASDAQ 100 as well. So slightly risk-off sentiment, but not enough to write home about. I also want to get a quick check on dollar yen. You are seeing it at a 156 handle. As we start to see those dollar trades come through, perhaps post-election, this is certainly a commodity that, or excuse me, a currency that you want to keep an eye on. But speaking of commodities, we got to talk about Bitcoin here. Bitcoin at a 106,000 handle, record high for the cryptocurrency. We should also get a quick check on those European markets as well. They are still very much alive and trading. The stock 600 is also down by the same time as the margin of the U.S. futures as well, down by about 0.1%. The FTSE 100, though, outperforming by 0.1%. Euro dollar at a 103 handle, spiraling towards parity, and no reprieve for the pound either. 121.97 on that currency pair. Now, a lot going on. The last 48 hours alone have been crucial in terms of what President-elect Donald Trump will bring. It's a historic day in the United States as the inauguration ceremony is just a few hours away, marking the beginning of the second Trump administration. Let's get a little bit more on what we can expect. Bloomberg's Kaylee Lyons joins us out of Washington. Kaylee, I got to ask, what is the feeling like on the ground?
Well, it's very cold in Washington today, Kriti, for one. That's why some of the tradition of this transfer of power in the U.S. is going to look a little different today, as Donald Trump will be taking the oath of office, not at the west front of the Capitol, outside with a crowd of supporters gathered on the National Mall, but instead inside the rotunda, where it will be a lot tighter and not as many people physically in attendance because of the weather. But of course, the most important part is he will today become the 47th president of the United States. After being sworn in, he is expected to give remarks in which, according to excerpts that were released and obtained by the Wall Street Journal, he intends to talk about a new era in America. And that era, Kriti, could start almost immediately after the swearing in and the address that he will give at the Capitol. He is likely to immediately sign a series of executive orders. Fox News has reported the number of executive orders he could issue today could be about 200, related to a few key groups of issues. The border and immigration, of course, is a big one. Energy, the federal workforce. And of course, we also learned this weekend, after TikTok briefly went offline here in the U.S., that he intends to issue an executive order today, essentially extending the deadline for TikTok to divest itself. He's floating the idea of 50% American ownership. It's unclear whether or not that's actually something that will work. But the point is, he's really going to hit the ground running today, Kriti, as he tries to use the office of the executive instead of other matters like taxes, in which he'll have to have the cooperation of Congress to score some very early wins.
So, Kaylee, that's on at least the first 24 hours of the 47th president. Can we talk about the last 24 hours of the 46th president here? I mean, we know that there have been some preemptive pardons coming from Joe Biden. We also know that we are about 24 hours into a ceasefire over in Israel and Gaza. What do we need to know the last few hours of Joe Biden?
Well, when it comes to that ceasefire, Crudy, that is, of course, one of the things that he primarily said he wanted to achieve before leaving office. And he does get to leave office, seeing that implemented in the first 3 Israeli hostages allowed to go home and be reunited with their families. Of course, that was really seen, though, as a joint effort, not just about the outgoing Biden administration, but also the efforts of the incoming Trump administration. It really took all sides here to get that deal done. But obviously, cooperation only goes so far. There is still a lot of animosity between certain parts of the Democratic Party or others and the incoming Trump camp. And that is why you have seen the issuance today of these preemptive pardons from President Biden extended to General Mark Milley, to Dr. Anthony Fauci, who, of course, oversaw the U.S. response to the COVID pandemic, and then for the members of Congress and staff who worked on the January 6th Select Committee, who investigated, of course, that attack at the Capitol back in 2021, as well as the D.C. Metropolitan and Capitol police officers who testified before the committee. The president was very clear in saying that these pardons do not mean that any of these people did anything wrong, but he's just trying to brace for what could come under this incoming administration, Creedy.
I think we're all bracing just a little bit. Bloomberg's Kaylee Lyons, we thank you so much joining us out of Washington. Of course, be sure to stay with Bloomberg for complete coverage and the inauguration beginning at 11 a.m. Eastern. Of course, that is about 4 p.m. right here in London. But Kaylee talked about one of those key pieces, which is, of course, maybe one of the first things on his agenda, and that is TikTok. TikTok's U.S. services were restored after Donald Trump pledged to delay enforcement of a ban, though it's unclear if the app's Chinese parent can secure a U.S. backer in time to avoid a permanent shutdown. Covering the story for us right here out of London, Bloomberg's Peter Elstrom. Peter, so we lost service for about 24 hours. We've gotten it back. We may not be legally getting it back. What happens next for TikTok?
Yeah, the big question here is whether this reprieve is temporary. When Congress passed the law last year to ban TikTok in the United States, they did so with a bipartisan support. President Biden signed it into law, and there were certain conditions for extending the ban. We're giving an extension before the ban. In particular, they needed to have a qualified divestiture that was in motion. There needed to be a viable path forward with this, and also some sort of significant progress in the deal. At this point, it's not clear that they have any of those things. Yes, Trump has talked about a deal. We know that the Beijing government has talked about some sort of deal too. But TikTok itself and its parent company ByteDance have shown real reluctance to part with the U.S. assets, which are very valuable to them. It's a very important market. And if they sell it to somebody else, then they lose control really permanently.
Talk to us about who these potential suitors could actually be. There was some Morgan Stanley analysis at the end of last year talking about the likes of Amazon, Walmart, among many, many others. Is there anyone who's maybe a front runner for this? Project Liberty, of course, has been a speaker to Bloomberg TV.
I don't think there are any people who are far enough along in the negotiations to pick out who a front runner is at this point. Microsoft has been interested in the past, of course. Oracle was interested in the past. One thing that we reported earlier is that the Beijing government, which will have a say in who this asset goes to, has thought about putting it into some favorable hands, in particular Elon Musk, who has an enormous business in China, of course, is close to President Trump, too. They could see that as some sort of bargaining chip where if Elon Musk is able to buy it, perhaps combine it with the operations of X, the former Twitter, that could be a friendly sort of deal that would benefit both sides in this circumstances. But again, it's very, very early. There are no active negotiations going on, and we're nowhere near close to a deal.
Well, it's fascinating. We're going to see what kind of precedent the TikTok ban and maybe unbanning really sets for Donald Trump, and maybe how he approaches some of the other international companies that have a foothold in the United States. Peter Elstrom will leave the conversation there. Of course, he will be back as we get a little bit more updates. In addition to, of course, delaying the TikTok ban in the U.S., President-elect Trump has indicated that he has a number of executive orders he'd like to issue on his first day. Kaylee Lyons was just getting into this. It includes opening up federal lands to drilling, energy exploration, and even closing the U.S. southern border. There's a lot to digest there. Let's bring in an expert. James Lucier, founding partner at Capital Alpha Partners, joins us this morning. James, a pleasure to have you on this historic day. Walk us through your view on what the first 24 hours of the 47th president may actually look like.
Well, good morning, Critty. It's a real pleasure to be with you here on this snowy, cold morning in Washington, D.C. You can see the snow behind me. This is an inauguration like no other. It is just one day, But the fact is, the preparation has been going on for 4 years. That's why it should not be surprising that you might have as many as 200 executive orders. Many of these things are not really time bombs. Rather, they're lighting a fuse. They're beginning a longer process that will unfold over time. There's been a lot of focus on immigration, on energy, even January 6th. But for me, the single biggest and most important thing that Trump does today will be kicking off his reform of the civil service and also a comprehensive deregulatory agenda that will not be one agency at a time, but rather comprehensively applied, a single template applied to all agencies.
Well, talk to us a little bit about that. I mean, we know on the campaign trail he's been quite vocal about making the government a little bit more efficient, even going on to put Elon Musk and Vivek Ramaswamy as kind of consultants basically in that agenda. How different in terms of just executing some of these plans might his second presidency be from his first?
Well, a lot of times the first Trump administration, coming in comparatively, in fact, absolutely unprepared as it was, had great difficulty working with the existing civil service. It's basically a 19th century civil service model. So they're planning reforms immediately that will create a class of positions where civil service employees have all the rights and protections. They can stay in the civil service, but they'll be moved out of those key positions if the Trump people see them as not assisting them with the president's agenda. So, you know, that's a pretty big change this time. Also, before we get too far away from TikTok, I think that's important, not because it's off message, but because Donald Trump wants to go to China as one of the first trips that he does. And so he's sending a message that he is open, he's willing to do a deal. And this day is not going to be a day of American carnage like the first inauguration, but rather a day with big new things going on, big new vistas for America, and an olive branch of sorts offered to China as opposed to threats.
Well, James, you talk a little bit about that kind of TikTok ban. Is this an isolated story, or does this set some sort of precedent for what we may see in other international companies operating with one foothold in the United States?
I think TikTok is a special case given the tense nature of the U.S.-China relationship, and also the fact that while I don't expect Trump to announce blockbuster tariffs today, he probably will be making an announcement of a process to begin applying tariffs systematically, tariffs that would in fact mostly be directed toward China. So this is a way of applying, I think, some honey along with that vinegar. It's a carrot as well as a stick. I don't see that necessarily applying to other countries, given that most other countries, most other international companies in the U.S. is mostly about a commercial relationship in the United States.
James, I want to talk about the other, perhaps one of the first things he's going to do in his next 24 hours, basically, his first 24 hours as president, is that in addition to perhaps addressing the TikTok ban, is also addressing energy production. We know that you and your firm specialize in a piece of this. We're talking about invoking an emergency national declaration when it comes to that energy story, unleashing a lot of production power. In practice, for our global audience, what does that actually mean?
Well, the president does have important emergency powers under the International Emergency Economic Powers Act, and that could be a basis for tariffs, but I think it also means expedited movement on approving infrastructure, especially perhaps moving forward on pipelines and things like that. The fact is, we don't really know what the intentions are. It's really remarkably how closely held these executive orders have been, but the energy emergency is a way of putting an underline, of underscoring how quickly and effectively Trump hopes to move in a host of energy production areas, bringing production back online in Alaska, bringing production back online in the offshore, perhaps reversing some of President Biden's efforts to put production on the offshore out of limits, and that emergency declaration would probably help with his legal case, his legal predicate for doing those things.
It's certainly something we're going to be keeping a very, very close eye on. The deregulation theme, perhaps not just in the energy sector, but across several other American sectors as well. James Lucier, a pleasure to have you again, as I say, on this historic day, founding partner at Capital Alpha Partners. Now, of course, a lot of this is going to have a major impact on the markets as well. He was talking about unleashing that production. We haven't necessarily seen it reflected in oil prices just yet. We may not even see it reflected in the likes of the stock market. Of course, it is closed here in the United States, but you are seeing some of the other assets very much open. Futures, for example, down about 0.1%, slightly risk-off sentiment when you look at the cross-asset story. But then again, you're looking at some of the currencies across the board that are seeing a little bit more of a boost. For example, dollar yen at a 156 handle, Bitcoin at a 106,000 handle, even euro dollar and cable catching a bit of a boost. We're going to keep you apprised of all of the markets around the world. But coming up, we stick with that political theme. Pangea Policy's Terry Haynes joining the program next to share his forecast for Trump's first 100 days in office. Stick with us. This is Bloomberg.
Influencing global markets.
Technology is driving business across Europe.
Companies in Asia are betting on tech.
David Weston, join me for the next generation of Wall Street Week, telling stories of capitalism from business, markets, economics, tech, and climate. Each week, we'll go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
Above all else, it's a mission.
It's done nothing but grow immensely. To me, that's an extraordinary sign.
We can be the change that we want to see.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live every trading day. Balance of Power, live around the world only on Bloomberg.
Welcome back to Bloomberg Markets. I'm Kriti Gupta in London. As we await Donald Trump's inauguration today, I want to bring you just live pictures of where we are seeing, or waiting, I should say, Donald Trump and his family to exit. This is Blair House, of course, in Washington, D.C. First thing on their docket, I should say, is they are going to be going to a morning service at St. John's Church. And like I said, we will bring you live images as we get them. But for now, awaiting that departure on what is bound to be a packed schedule for the 47th president of the United States on this inauguration day. Let's dive into a little bit more of what that looks like, not just in the first 100 days, but the next 4 years. Terry Haynes, founder of Pangea Policy, joins the program now. Terry, I got to ask, what does his first 24 hours look like, let alone the next 4 years?
Well, let's start with the first 24 hours, Kriti. I think you see two things. One is from markets. You see a release of animal spirits that have really been pent up over the last 2 months since the election. These last few hours really are, in a lot of ways, are the height of Trump's power because markets have been engaged in speculation about, and always to the upside generally, about what Trump might do and the things that it might unleash and the profits that might be able to be made. And the second is that I think Trump tries to, starting with the inaugural address, tries to pursue a Goldilocks sort of strategy. You want to show resolve, you want to show focus, but you don't want to get too far out over your skis or go too far. There's a lot of rhetoric about shock and awe, but at the same time, a lot of what the first day ends up being is a readjustment or a repudiation of what the last president did.
Well, certainly a lot of executive orders already in the pipeline for what those first 24 hours may look like. But Terry, there is a narrative and one that he really pushed forward on the campaign trail, which is as simple as tax cuts for Americans funded by tariffs for everyone abroad. To what extent are we going to see evidence of that in the first 100 days?
Oh, I think you'll see. I think you'll see a fair amount of that. I think the tax cuts are going to take all year. Frankly, it will take a long time for Congress both to figure out a budget. More importantly, come up with however much deficit increase or not that it wants to pursue. That's going to be an ongoing conversation and not an easy one. So that's going to take a while. But I do think that you'll see some tariffing today, but I don't think you'll see kind of the huge rhetoric matched by action, and markets will conclude that the nice influence of Treasury Secretary designate Scott Bessent will have a hand there. That may be true, but tariffs are now have been a part of geopolitics and national security policy for quite a while, and they're going to stay that way. This is going to be a big and frankly overt shift into national security overlay on economic policy.
Terry, speaking of economic policy, I think a lot of financial markets have interpreted the second Trump administration as one of deregulation. We're already kind of seeing that in the energy sector, at least this morning, when he's talking about invoking kind of national emergency powers. Is that a broad-based kind of assessment that deregulation is how he's going to approach every sector? Is there anywhere in the states where maybe he tightens the reins?
I think generally speaking, deregulation will be the battle cry of the moment. Markets get very excited about deregulation, but two things. One is, of course, it doesn't mean unregulation. It doesn't mean it's more of a right sizing than anything else. Secondly, markets get very excited because Trump's going to come in and start deregulating everything. In point of fact, the Supreme Court started this a couple of years ago with a series of decisions that basically now make it impossible for regulators to get over their skis and start inventing jurisdiction where they don't have any. So what you're going to see in the Trump administration, frankly, is you'll see the regulators finish that right sizing, but Trump will get some credit for things that the Supreme Court, in fairness, most of whom he appointed, started a couple of years ago, but you get credit for the things like that as well.
I wanted to ask a little bit about the border here, Terry. I mean, we know this has been a major kind of touch point for American citizens as well. I'm curious what that actually means in terms of initial first steps. We already know there are pieces of the wall from his first administration that are still constructed and are there and are half constructed but have not been fully brought to term. There's also a question of deportations. When it comes to tackling the immigration issue and the southern border, what is on Donald Trump's to-do list?
Well, I think Trump very closely tracks what the American people in polls have been telling him broadly. I think Trump doesn't miss that the most Americans support strong border action and support actions targeted at criminals, but don't support indiscriminate action. I mean, that's been a lot of the rhetoric that you've seen coming out of the administration are attempts to correct people and, frankly, inoculate them against this mass deportation narrative. I think that's probably one reason why actions that scheduled in Chicago this week have already been pulled back a little bit. It's very important for Trump as not only the new president, but as a de facto lame duck the moment he comes into office, to really work hard to bring the public along with him, because if you bring the public along with him, explain actions, continue to get public support, it'll frankly go better for him, whether it be border security or anything else, and that will also help him gather support in Congress, which otherwise doesn't really have to pay as much attention to him since he'll be gone in 4 years.
Terry, let's talk about national security of a different kind. You talk a lot about, of course, the Mexican border and then the southern border there. I'm curious about the national security measures when it comes to folks sitting where I am in London, in Europe, specifically when it comes to NATO. There was a lot of saber rattling that happened on the campaign trail. How much of that comes to fruition at a time when we may have a ceasefire in the Middle East, but we certainly don't have one in Ukraine?
I think what Trump thinks is that his rhetoric about NATO, whether it be 6, 7, 8 years ago or today, has a salutary effect of, frankly, strengthening the alliance. And the reason I say that is, firstly, Trump will greatly increase defense spending and support for the defense industrial base in the United States, and that's important because that will effectively help create a national security overlay on U.S. economic policy. Sitting in London or a European capital, as you know, a lot of the European and UK governments have already made commitments to increase defense spending, and that's exactly what Trump has wanted. So, I think he may have rubbed some people the wrong way in Whitehall or in the Burlymont, but really, in point of fact, he's getting largely what he wants, and that probably accelerates if there are more rightist governments elected this year in Germany and France.
Yeah. A lot of rightist governments, which, by the way, are, of course, showing up to the inauguration. Terry, I want to kind of end the segment where we started, which is about the spending story. We talked about the tax perspective and, of course, the tariff perspective as well. How did the bill or the damage from the LA wildfires fit into the budget that Donald Trump is about to inherit?
Well, that's a very good question, a very smart question. One of the things I've been saying for a while now is that it's full steam ahead on the tax bill. People want to do a tax bill. I think a tax bill gets done largely because Congress wants it to be done. Trump does too, but I mean, it's much more up to Congress to pass a piece of legislation. But there's a lot of undercurrents here pulling in the other direction. Not only concerns about fiscal debt and deficit from the markets, which Bessent essentially ratified by saying the U.S. has a spending problem. You've got the greatly increased defense spending I mentioned. You've got You've got confirmation that Trump and the Republicans won't address the mandatory spending issue at all, which is 70% of the budget. So that creates tensions. Musk has already put his DOGE estimates down from 2 billion savings to 1 billion, or excuse me, 2 trillion in savings to 1 trillion in savings, which tells you something about his education process. On top of all that, you've got the LA wildfires, which I know John Farrow on your air was saying last week might be $250 billion. So that's another pullback on the ability to right size.
Certainly something we're going to be keeping a very close eye on. Terry Haynes, founder of Pangea Policy, we thank you so much for joining us on this historic day. Coming up, we're going to talk about one of the policy pieces we were just discussing there with Terry, and that's what's going on in the Middle East. The Gaza ceasefire begins with Hamas releasing 3 Israeli hostages in exchange for 90 Palestinians. We're going live to Tel Aviv next. Stick with us. This is Bloomberg.
From our studios in New York and San Francisco, our expert hosts have the data and analysis from the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. Live every weekday, only on Bloomberg Television. Context changes everything. Bloomberg brings you breaking news 24 hours a day, powered by 2,900 journalists and analysts in more than 150 offices across the globe. Bloomberg Television. Context changes everything.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Rio de Janeiro, Brazil, and this is Bloomberg.
Bloomberg Invest is back. Join me, Sonali Basak, and the industry's most influential people for a comprehensive view across financial markets. Hear what a second Donald Trump presidency means for the economy, how AI is being monetized by investors, and the next big risks facing the private credit industry. Bloomberg Invest, March 4th and 5th in New York City. Register your interest to attend at bloomberglive.com/invest.
Welcome back to Bloomberg Markets. I'm Kriti Gupta in London. We are awaiting Donald Trump's departure for his inauguration. First step on the docket is going to be the morning service at St. John's Church. Right now, you're looking at live images of Blair House, where he will depart to get to that morning service. Of course, as we get a snippet of him, we will certainly bring that to you right here on Bloomberg TV. In the meantime, we should go to another major story that, of course, is unfolding just as the 47th president is about to be inaugurated. The ceasefire in Gaza is underway, aiming to gradually release 33 Israeli hostages and around 1,000 Palestinians in prison in Israel over 6 weeks. Bloomberg's Ethan Bronner is in Tel Aviv. Ethan, a pleasure to have you on the program. Just give us a lay of the land of, one, what it feels like to be in Tel Aviv, and two, what the next steps look like.
Sure. I mean, Tel Aviv is quite normal these days. It has been for many months, it must be said. So that's not particularly noteworthy. What's going on, of course, is Gaza and the West Bank. So we do have 3 Israelis who were released, 3 women released, and in that sense, there's a moment of exceptional joy and celebration yesterday, mixed, of course, with sorrow and anger that it had taken these 15 months to release these 3 women, but they were released in exchange for them. 90 Palestinian detainees and prisoners were sent home, mostly to the West Bank. So that has happened. At the same time, it is threatening Prime Minister Netanyahu's government. A far-right minister has pulled his party out of the coalition, leaving a very slim majority for the Prime Minister. A second one says he'll do so if after 6 weeks they don't go back to war in Gaza. So that's going to be complicated. And then inside Gaza, there's a struggle between Hamas and the Palestinian Authority about who's going to be in charge of putting the place back together. Meanwhile, in theory, Israeli soldiers will start moving to the periphery of Gaza, and very importantly, hundreds and hundreds of trucks of aid are starting to come into Gaza, and people are beginning to clear away streets and start to think about going home to really what is left a rather depressing moonscape of rubble.
So, Ethan, walk us through, of course, as we await the inauguration of Donald Trump, how he kind of picks up these next steps of diplomacy from his predecessor.
Yes, I mean, Donald Trump, of course, was quite central to this deal coming through, and everyone is waiting with bated breath here to see what he's going to say about whether Israel needs to continue after 6 weeks into the second phase, which would be a permanent ceasefire or truce in Gaza, or whether he will wink and nod and allow the more militant view, which would be to continue the war afterwards. The assumption is that he would like the peace to go on, but in theory, he also is opposed to Hamas ruling in Gaza. Hamas yesterday made a big show of reappearing on the streets with masks and guns. And so, you know, there's a lot of uncertainty ahead, but there's no question that Trump's role will be central in seeing what happens next.
So Ethan, just put this into some context for us here. One of the conversations I've kind of had with geopolitical strategists who've talked about the ceasefire that has been achieved is that this is ultimately the deal that was forged, say, 13 months ago. Are there any specific changes or changes that may be coming down the pike that we should be paying attention to?
Well, it's very much the deal that was offered publicly by President Biden late last May. But of course, there were very big changes between late May and now, in particular, the destruction of Hezbollah, the killing of the leaders of Hamas, the collapse of the Syrian regime, and Israel's bombing of many air defense systems in Iran, leaving Hamas isolated, and therefore it seems to have felt forced to accept a deal that did not insist on an end to war in the first phase. That was the big rub, and that's what they ended up agreeing to. Now we'll see what happens in the second phase. It's very difficult to know. It's also difficult to know because, in theory, Israel believes that unless it utterly destroys Hamas, it can't survive in the region. But then many Israelis say, but look how we've done so well in other parts of the region. It is a less important strategic goal than it used to be. That's a debate underway here.
Well, Ethan, speaking of strategic positioning there, I'm curious about the areas around Israel, around the Gaza Strip, specifically when it comes to likes of Egypt, of Jordan, among others, even Lebanon, which you kind of hinted there. I know that the Philadelphia crossing was certainly one sticking point in some of these ceasefire negotiations. Where does this leave some of the counterparts to Israel and to Gaza, the likes of Egypt, Jordan, et cetera? Where do they stand on these next steps?
Well, each is somewhat distinct. Jordan, many feel, is being threatened by a sort of Islamist extremism the same way that Lebanon had been, and possibly Syria. But they are trying to join, their goal would be to join in a U.S.-led coalition involving the Emiratis and the Saudis to rebuild Gaza and slow down the Palestinian problem. Egypt is very eager not to see Hamas reinstate itself in Gaza, but it also doesn't want to yield to everything that Israel wants. Lebanon, of course, Hezbollah was the unofficial ruling power in Lebanon when Israel stripped Lebanon of its leadership and killed many of its leaders and also took out large numbers of its long-range missiles. It is now in the process of trying to reconstitute with international help to try to get Lebanese army and international forces into southern Lebanon so that Israel can feel safer. So all of these factors are playing a role. You're quite right. This Gaza war spread its tentacles very far across the last 15 months.
Well, Ethan, as a final question, let me bring in one more player here. We know that Qatar has been a key kind of factor, key party in these negotiations. A lot of the ceasefire negotiations specifically happening out of Doha. Walk us through their role and through their almost role as a diplomat, but also the extent of their neutrality when it comes to negotiating the next phases of this deal.
Yes. In Israel, there's great anger at Qatar. The Israelis feel that the Qataris were too pro-Hamas. They allowed a lot of Hamas leaders to live and to prosper in Qatar. They gave a lot of money to Hamas in Gaza, admittedly with Israeli permission. But Israelis believe that the Qataris were aware that the money was going to building fortifications and tunnels and missiles rather than making it better for civilian life. But right now, Qatar is feeling the pressure from incoming President Trump, who is saying, you make sure that Hamas does what it's promised to do in this deal. And I think that Qatar is trying to rethink of it. It is a very complicatedly neutral place. You're quite right to say that. You know, it maintains relations with big U.S. base there, of course. So I think the Trump era is going to be a new challenge for Qatar, the way it's going to be for everybody in the region.
Certainly something we're going to be keeping a very close eye on. Bloomberg's Ethan Bronner, we thank you so much for giving us the latest out of the Middle East. Of course, as we were speaking to Ethan, we are getting live images of what looks like the Trump motorcade arriving to St. John's Church over in Washington. Of course, we will give you live updates. Remember, the first thing on his docket ahead of his inauguration is that morning service at St. John's Church. It looks like he's just departed from Blair House as well. Not only him, but him and his entire family. So we, of course, will bring you those live images as we get them ahead of truly historic moment in the United States. The 47th president, of course, looking like potentially exiting the car.